What's good, family? Hope you guys are doing fantastic today. It is Friday, the 23rd of September, 2022. The day that the dollar is going nuts. The day that we are again coming together, work on our skills, have the same vision, the same goal in mind, where we try to provide for ourselves, for our families, no matter how we feel, how bad it is sometimes, how tired we are. We have to keep moving forward to produce that energy, that commitment, that discipline in order to make it happen for ourselves, for the people around us, especially in times like these, especially right now. So it's great to have you guys all here on the stream today. We're going to have a special guest coming over in around an hour, roundabout. He's going to do his top-down analysis. His name is Oleg. He has been on the show before already. He's one of my great friends. I learned a lot from him. He's not exactly following the strategy that I am preaching here on the channel and that we are preaching on the Discord. However, it's definitely something interesting to take consideration as well. And it's always good to stay open-minded and to learn from other people while they are doing their top-down analysis, just to get a better perspective in the overall market. This is the right way to do so. So it's absolutely fantastic. The dollar is going wild. Of course, like expected, we had the interest rate differential going up right now. So the dollar is getting stronger and stronger and stronger. So we're going to talk about that. We're going to talk about some trade opportunities as well that are coming into play at the same moment. So we have a lot of things to discuss today. Who do we have in the building? It's absolutely fantastic that you guys are all here. We're going to make it a wonderful stream as always. Man, let's get started. So we have Zebmat in the building. Loof Cook, what's up? Bronson, Jamie, Reinto, Schweinsteiger. What's up, my brother? Hey, Sagar Ahmed. Always killing it, bro. Dino, Emmanuel, Jessica as well in the building. Banda in the building. Can you make a video about how to use the VIX index the same way as you? Of course I can. Absolutely. Gordy D. Great to have you here. Happy Friday to you as well. Anita says good morning. SRTRO says good morning, family. Morning, good morning. K-Way, Dennis, all right, it's amazing, fantastic that you guys are all here. It's a typical Friday today, guys, but we're still gonna move forward. We're still gonna do a top-down analysis here. Absolutely, we're gonna make sure that we have the complete overview. The reason for yesterday was I created a video. I'm gonna release that this weekend, talking about market structure, about the Fibonacci, and how we have 4 phases. The 4 Roman pillars, I call them, that are crucial to understand in order to know exactly what kind of bias you should take or look for on the lower time frame. Actually, from the higher to the lower time frame. So this is something that we're gonna discuss as well a little bit in the stream today. A little preview of that as well. I think it's very important. I think it's crucial to understand exactly why we are waiting for that, and then we can take these other metrics in consideration, such as the actual correlation pairs and all the indices and everything like that as well. So very nice, guys. Very nice. Radu says, hello, I lost some money in Euro USD strategy, but keep going with a good mood. That's how it is, my man. That's how it is. That's how it is. That's how it is as well. The thing is that if you have properly tested your strategy out, you can start risking your, finally some money. Unless you don't have the data and you have none of these 20, 30, 40, 50 trades where you have the data and you have the result of that trades, I would highly recommend you to just play it very safe and to just invest way less than you can actually afford to lose. And then from that moment, you have the data, you have the analytics, right? You have a spreadsheet with your trades, with your win rate, with your net return, and some notes of each particular trade. Until that moment, it's no need to risk anything more than you can afford. So that's something that we can take consideration here. But for now, let's go over the charts real quick. Because what we're seeing here is we have the dollar index going up tremendously right here. Let me put my music on real quick as well. There we go. So we can enjoy a little bit the hypnotic vibes here. That's better, that's better. Okay, so we have the dollar index here going up tremendously like expected. Of course, there is not really downside potential here. We broke these highs here. This was an interesting moment. We actually started to come back up and immediately come back further. The news came out, with a 75% base point rate hike, which is of course very strong for, the dollar. And this automatically will have an effect on, of course, the euro And of course on other pairs such as the Swiss franc and that kind of stuff as well. Okay, in terms of gold, let's go over gold as well. The gold is dropping. There we go. Gold is coming down further. But for gold, it's a very, very interesting moment right now. Because we are entering a very, very strong level of demand here. Okay, we're coming very, very close to this area of demand here on the 3 daily. And this is definitely an area that we can take consideration. Especially right now, where we're looking for a potential, you know, bounce or at least a short-term reaction from that particular moment right there. Okay, we have that weekly level here. We had the imbalance that's getting filled right now. We took out all of these lows here. So this is very interesting here for gold. Right, a strong dollar is most of the time a weaker gold here. But there will come a moment when we should have a short-term bounce from that range. And I do expect it somewhere around this area. As well as we created this high, this lower low and then that higher high. That I could take this in consideration. Which would also automatically align with the 70.5 and the 79% for gold. So again, if you look at the 50, look at all the support that we had here. Tremendous amount of support. Then we had the 62, right? Or some people use the 618. Tremendous amount of support. And right now we are closely to enter the 70.5 and the 79. And that order block is right in the between stage as well. So I can definitely use that personally as a confluence. I see that the market structure is telling us that we need to look somewhere within this range. In the weekly, in the 3 daily. And it's just a very interesting time for gold right now that we actually find here. So we're coming very, 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 very close. And I was waiting for this moment for a significant amount of time, right? First of all, taking out these highs. Sometimes I expected a shorter retracement, but we just kept moving down here. All right? So very, very interesting. We have gold. Let's take that in consideration for today as well. Then we have Japanese yen. Japanese yen, very, very wild here. We had that reaction here from the Japanese yen as well. What happened here? We created that significant high right there. Came back up and then we invalidated that high by a lower low. So now we can look at this range to this range right here. So now we have that order block, right? We have that swing high to swing low here. Okay, swing high, swing low right there. So now we have the swing high to swing low. We're seeing that we actually are at the 50 and potentially now in this range of consolidation here. I beg your pardon. We have the volume profile here. Okay. If you use that volume profile, what do we see here? This is the point of control of that particular area of consolidation. This area of consolidation is a range, right? We saw that expansion from this area. You guys know it if you know the video that I spoke with you guys or discussed with you guys about the volume profile. We can use that for areas of consolidation here. So if you look at zoom out here, what is the reaction from that area? Significant right there, right? We saw that reaction. Beautifully tapping into that order block right here. So this was a moment where we could take consideration also while we were entering a nice premium area of supply. Right? About that range as well. So what do I see now if I zoom out here finally? We came up aggressively right here. Right now we are forming, you know, we're building liquidity out. We're building liquidity on the downside here. So I highly expect price to come down here. Okay? Highly expect the price to come down here. Potentially, this is the low that we need to break here on the 50-minute. Crucial level that we need to break right now. Okay? It's very, very important in order to start looking at particular levels right there. But so far, I expect things to come back down just because of the liquidity built up here. The rejection that we saw already around that range here. And that initial reaction that we're seeing right now is where the liquidity gets built. So that's something that I take consideration as well. Knowing that the Japanese yen here is potentially finally coming back down here a little bit. Buxer says, hey man, hope you had a good day. Thank you, my man. Hope you're doing good. Hey, Manuel Curtis says, a recurring problem for me is finding the right area to consider. What advice can you give me? 100%, we're going to discuss this today. We're going to discuss this today a lot because of... yeah, it's crucial to go a little bit deeper as well. And I have to mention, I want to definitely highlight this a little bit more on stream. Is the actual market structure first and understand where, you know, we can take the swing high to swing low to understand which area is actually an area of demand or actually an area of supply. And once which area is invalidated and which time frame to use once an area is invalidated as well. So that's why I said there are 4 phases. And I would love to give you guys that example. to exactly determine exactly what now the swing highs and swing lows are, where you should look at, and when is the moment when actually a swing high or a swing low is completely, you know, invalidated right there. I think that's crucial. Absolutely. That's fantastic. That's fantastic. Thank you for the sub, my man. I appreciate you. Welcome to the stream. We're gonna get started. We're warming up right now. We're gonna look at some trade setups as well. We're gonna look at some scalp setups as well, by the way, because we still have our actual trade setups we need to look at. There are a lot of things that we need to take consideration here. Okay. Creaky says, where is the delicious Mexican food in Canggu? I think we have something called Lola's in Canggu. Lola. That's the place where you can look for Mexican food here in Bali. It's a very, very good place, my man. So thank you for that. Bo Corleone, thank you for the sub, my man. Let's get started. Let's look at some setups right now. So what are we looking for? Okay. The main thing that I'm looking for whenever I look at scalping solutions here is one particular thing here. Okay. I look at the highest change here. Okay. What is the actual change here in that particular range? Okay. 3% up or 3% down. This is exactly what we're looking for here. 3% up or 3% down. That's particularly the area where we potentially are looking for right now. Okay, why is that? Well, first of all, we're looking at the massive volatility here. We're looking at strong areas of demand or strong areas of supply. So we know, for example, that the USO have been crashing a lot. Around about 3% right here. We know that the VIX actually pumped very significant right here. Okay, 3.4%. Very, very interesting. We have the DXY also looking significant strong here. Okay, so if we come back down with the DXY here, we have to determine what is our latest swing high to swing low here for the DXY. Well, let's go zoom out a little bit. Okay, and you will see what I mean here. So what happened here? We saw that swing low here. We created that break of structure to the upside. We saw the change of character to the downside here. From that moment, we saw the change of character to the upside here. Okay. There we go. We draw this swing low as swing high because this is the range where we saw a change of character to the downside, change of character to the upside, right? Where we saw that initial break right here. Okay. So we are looking at the equilibrium right now. We're looking at the 50%. So we have a little bit of downside momentum here for the DXY that we can take consideration. What I do like here is that area of consolidation here. We saw that area of consolidation and we saw that expansion right there. Beautiful. Okay, we see that as well. So now after this, let's go to the lower time frame here. Okay, let's go to the lower time frame. Roberto says, why stock is not lower? This is a break of structure here. This is a break of structure. Right there, we can add it in as well. Okay, break structure to the downside. Change the character to the upside, right there. So we have that zone, we have this area of consolidation here. So if you look at this range here, we want to look for potential continuations for any USD dollar pairs. The moment we tap into these ranges right there, okay? It can be this area right here. It can be that order block right there. What do we see? A beautiful order block right here. We're seeing a bullish, bearish, bullish candle. We're seeing that rally, base rally. And from this moment, we can look at that particular level right there. Okay? Robert says there's another break. Yes, correct. Correct. There is another one right underneath. So we have that area here. This is a nice area of consolidation we can take consideration right there. Another one, if you zoom in here. Is there another range? That's what we're looking for. Okay, so if on the 1 hourly, we can understand that we're in a bullish bias, right? On the 4 hourly here. If you zoom out on the daily, you will see the same thing. So now what do we see here? We're seeing exactly the same thing happening, right? We create a lower low. Right there. And this is where we took out that level as well. So now on the lower time frame, let's draw the same thing here. Alex says, hi Lorenzo, good to see you. Let's go, my man. Thank you, my man. I appreciate you. Systemic says, good morning. Salim says, let's use the Vine profile. Absolutely, brother. So same thing happening here. Okay? Swing high to swing low. What are we looking for? Potential range here. So if we break this low here, what is the next range to look at? That is this level right here. This swing high, swing low to swing high right there. Okay? But right now on the 1 hourly, we can start looking at these ranges right there. So this is something that we're looking for right now. Okay? So is there a range we can look for? Yeah, at the 50, what do we see? A beautiful candle right here. We saw that consolidation, we saw that expansion right there. This could be a nice range, okay? So for scalping right now, anything scalping related, these are the areas where you want to look for, okay? The moment the DXY pops into that area right here, comes back down, taps into that range right there, and potentially comes back up, and let's say we break down after that, right? We come back down further, or initially come back down all the way, straight away, and we want to wait for that initial reaction, and that's the moment where we can start looking for a potential long, right? So we have that range there. We have that 1 hour order block sitting there on the dollar index. Let's make it a little bit smaller. We have that $1 index. We know it's on the equilibrium, right? Potentially we can expect a potential retracement there or short-term bounce from that area, right? So let's say we come back down right now and we tap into that order block on the dollar index. Is it then possible that we can look for potential areas of demand at that same time? And I'm talking about US pairs, right? US dollar pairs. So we can look at, for example, let's open another tab. There we go. Let's look at, first of all, let's look at the US dollar pairs. Okay? USD CAD is one of them. There we go. Beautiful. Okay, the US dollar card. Let's zoom in a little bit. We want to align here, okay? We have the US dollar. The DXY is coming down. So is the US dollar coming down, right? USD CAD is going down in that for that particular reason as well. This is the first range where we should start looking for potential scalp opportunities there. Okay, so we have a little bit of movement here. So what is the range where we're going to look for? Well, of course, that's this area right here. This is the swing low. This is where we created that low here. And this is where we created that high here. So what are we looking for? We're looking to use the Fibonacci from swing low to swing high here, right? And now look at all these areas. We have the equilibrium sitting there. What kind of order block do we see here? Right there. We're seeing a beautiful order block right there. It's another order block that we're seeing on another level. Potentially. Let's have a look. Yes, right here on the 62. As well, we have this range right there. Also, we have liquidity built above that area. Right? So now, if we take again the dollar index right now, and we know that we have some room to come back down, and we are already here. Is the 50 potentially the perfect area? Let me know in the chat. Is this the perfect area to long from here? Boxster says no. Best friend says yes. Roberto says 2 equal lows there as well. Depends if it never continues to go down. So, if you see that the dollar index has some room to come down here, right? We have all that inefficiency underneath that zone. I mean, can we come back up? Of course, we can come back up further, right? But the moment we should personally be interested is if the DXY is round about this area right here. Round about this range right there. We have that gap right here. You know, the reason what we want to do as traders is we want to higher our probability as much as possible. It doesn't matter if it's for a swing trade. It doesn't matter if it's for an intraday trade. It doesn't matter if it's for a scalp. We also want to make sure that we are aligning with the right index as well, while understanding and leveraging market structure the right way. So therefore, looking at the higher time frame and the lower time frame structure, swing low to swing high, so we can leverage the Fibonacci the right way and to see if there are any order blocks aligning with these particular zones right there. Okay? That's what we are looking for. So if we do, if you want to like actually long any particular US dollar pair, right? The only thing that could potentially be interested is if the dollar index comes down towards the equilibrium, where we enter a premium era of demand again, where we filled up that inefficiency and again start kind of looking for a short-term bounce right there. If we happen to come back up already, I mean, good for them, but we are waiting. We should be patient there. This is what we are looking for. Okay? That's what we need to see here. We have this area indeed, also a mitigated Buckster right there. But this is the first range we should take consideration. Then we have the USD COD. We have this order block right here indeed, my man. Absolutely. So there are multiple areas we can take consideration, okay? We can highlight them right now, but we should not make a decision based on which area we should long from at this particular moment. Why? Because we do not have the confirmation from the dollar index yet. So we are zooming out from the higher to lower time frame already. We mark down the market structure on the 4 hourly here. Yeah, this was the last break of structure to the downside, changes character to the upside, swing low to swing high right there. Until that moment, we have not seen another lower low getting created right there, right? If you then zoom in on the 1 hourly, we're looking for smaller areas of structure here. Well, this is where we saw that. We saw that 1 hour chalk, right happening, right? So this is the swing low and this is the swing high right now. This is the equilibrium. Does it align with an order block? Beautifully. So that's what makes it so interesting, right? So we wait for that moment to tap into that area. And if we are there, then that is exactly the range where we can start looking for any pairs. We can start looking for any longs for the USD COD, right? For the US dollar against the Swiss franc. We can do all the analytics here for the US dollar Japanese yen. But also short, you know, GU, EU, and that kind of stuff as well, right? Looking for the continuation there. The short-term retracement and then the actual continuation. So this is very interesting. And this is the way I would like to approach the market here with you guys as well. So we can hire the probability as much as possible in order to make the right decision. Like I said, it doesn't matter if it's for a scalp, if it's for an intraday trade, or if it's for a swing trade. We all want to look at the same structure in order to hire our probability right there. Okay? Joel in the building, what's up, my man? Our G from our Discord is here. I hope you're doing well, brother. Great to have you here. Salim, we should look at USD cells as well. Yeah, I completely agree. So now we understand this part, okay? Let's look at another one. Let's look at the Japanese yen here, okay? Let's look at the Japanese yen. Let's start at the daily, okay? There we go. What do we see here? This is the area, right? This is where we spot our trend here. On the daily. Okay, so that's very nice. That's very good. So let's say we are here. It's actually a little bit smaller there. But let's put it there for you guys so it's clear. Okay, swing high to swing low. We have these highs here, swing low here. Okay, this is a beautiful range here. So we have this is our daily schedule, our daily area we're looking out for right now. So let's go to the 4 hourly. It's a little bit of a different chart. A little bit of a different chart here. Okay. What do we see? There we go. And there we go. Okay. So if you take this one to this one, that was 1, right? Why was that? Well, clearly, we created that higher high here. Then we created that lower low here, right? This is the high. This is where we ended up with. This is where the reversal came into play, right? We mitigated up, right, at that particular moment. We came to the 70.5. We had that order block there sitting at the 70.5. We tapped into that order block right there. Mitigated that zone and took off from there. What did we create it after that? Again, same thing, right? We created a higher high, a lower low. So now we have the same schedule here. What is what we're looking for? Swing high, swing low, right there. Okay, so now we're here. What are we doing? We saw that initial reaction, okay? Do we see an order block that's interesting for us? Yes, absolutely. We have this one right here. Why is that an interesting order block? Well, we have this one, right? First of all, this is a rally-based drop. You guys know it right now. If you don't know it, go to my channel on YouTube. Look at the supply and demand, right? Rally-based drop. That is that range that we're looking for here. We have that area here. We also have this area of consolidation. And we have that point of control here. I'll take that also very serious right now. You guys know how we roll that, how we use that, how we leverage that right now. This is also an area. Look how accurate that is, right? This area of consolidation where we tapped into that zone. That's the actual range. So we already mitigated into an area or into premium areas of supply here. From 4-hour swing high to swing low. Understanding the climax that we came back into the 50, 62. And then finally saw that initial response right now from the point of control here. So if we now go to the 15-minute, what are we doing? Then we take other measures in consideration, right? Such as the liquidity that we're building underneath that zone. We're building out the liquidity here. That's interesting. The fact that we are building out liquidity right now makes me believe personally that there is more potential downside as well. We have these massive areas of consolidation here, right? So is there more downside potential for the Japanese yen here? I do think so. I do think so. Absolutely. So what do we have to look for? You have to go even to the lower time frame here. That's what we're looking for here. Okay. Now we have lower time frame structure. Okay. So what do we see here? We have this area here. We have created a lower low. We have created a higher high. So this seems invalidated right now, right? This seems invalidated right here. So what do we want to see here? We want to break at least these lows. Why? To invalidate this range here. This structure here, right? We created lower low and higher highs here. We want to create these lower lows to invalidate this. Once this is invalidated, we can look for any retracement from this range here. And we can start looking for a short opportunity right there. That means that from that moment, we can start looking at any long opportunities for pairs like GJ, EJ, and that kind of stuff. Right? This is what we are looking for right there. So the main part is GJ, I think. The New Zealand dollar against the Japanese yen. And that kind of stuff here. So this is a great way of looking at the overall market, of understanding what we are looking for here. And then potentially moving further forward to look for opportunities right there in the market. Okay? So that's the Japanese yen. That's the US dollar. What about the euro? Very interesting here. Okay. Let's go to the daily. Once we have done our biases here for our pairs, for our currencies, we can actually start trading. And actually start looking at trade setups, okay? But I want to be clear about all the biases we're looking for right now. I think that's crucial to move forward here. So what do we see here? On the daily. Swing low, swing high is probably here. Swing low, right? What did we see here? These areas here. There we go. We mitigated in the zone. Swing high to swing low was here. We came back up all the way to the 88, which was a nice order block in that area here. And we sold off from there. That's beautiful. It's super clear. Okay. So what did we do after? Created a higher high here. Created a lower low here. Okay, swing high. Right there. Where's the swing low? Right here. That's the swing low here. So what are we looking for? Same thing. We're looking at that area here right now on the daily. We tapped into that beautiful range here. We came back up all the way here. Okay, we came back up towards this area here. But now we have to look at something else here, which is potentially quite interesting. Okay? We are still on the daily. So let's look at the 4 hourly. So finally, something happened here. That is quite interesting. So we have created that potential reversal here. Okay? We've created the zone. We took out these levels here. This is a nice range. So now we can use this one to this one. We can start looking at the ranges here. We mitigated in the 50. We saw a response from that right here. The 62 is the next range. Is there an area of demand that we're currently looking at, that we currently can look at right now? That's the question. Right? We know that the daily bias is bearish, obviously. But we're seeing a significant range right now, potential reversal coming into play. And it always starts from a higher time frame. So we saw that on the daily as well. So now we have consistently pulled out our Fibonacci here. And we're seeing this range here, beautiful aligning. We're seeing this order block, beautiful here as well. Very, very nice, significantly coming here. Tapping into this area. This is going to be a range. This is going to be an order block we can take consideration here. It's between the 62 and the 70.5 right there. This is a beautiful, beautiful order block right in the middle in a premium area of demand right there. So is there a chance that we can expect a bounce, a short-term bounce from here? Yes, I do take that in consideration. Okay? That's pretty much it. The moment we break the zone here, right here, this is the moment when we are invalidated. We invalidated this area again. And once we have that invalidated area right there, let me make this a little bit bigger. Once we have this invalidated area right here, we can start looking at the continuation of our short setups right now. Because so far, we are still looking for the right ranges here, right? That's what we're looking for, okay? Even if you create this low here, this is also a very interesting low, right? We can start looking at these ranges right there and potentially look at the particular range. So we are right now, we call this a transition phase right here for the euro, okay? The only thing that we're looking for is that that range that we are potentially looking for, an area where we can break zone. So now we are ranging in between these areas right here. That's what we're looking for. Either we break this level right here all the way down on the higher time frame, or we break these highs here right now, right? That's what we're looking for right now. Until the moment you can potentially look for a short here, we can potentially look for a long here. The overall bias is still bearish right now, right? Keep that in mind. But we have created that higher high here that significantly pulled out the swing low to swing higher. So what we're looking for right now is a potential reaction from this area. And can we use any trade setups for that? Can we use any scalp setups for that? Potentially, yes, absolutely. This range right here. So that's the euro as well. Very, very interesting. Things are looking very, very sleek. Okay. So the next thing that is very clear is gold. Then we have the dollar. Then we have all these other setups right now. So please, guys, let me know if you guys are any potential if you want me to talk about any potential chart setups right here, so we can move forward there, and then actually start looking for all the trade setups we're currently looking for. Can you show your Fibonacci settings? The Fibonacci settings are in the description, my man. You can find them there. I made a screenshot for you. You can use them. Blurred Barisha says Canadian dollar, Swiss franc, and US 30. Is DXY stop the monthly order block? We have to find. We have to see. We have to see. It can be the case, however, we're looking for longs still. Okay, we are still looking for longs. Market structure is telling us that we still should look for longs here for the dollar. The XY we have discussed here. Okay. Guys, smash that like button, really, so I would highly appreciate it. We can have a wonderful long stream today. Looking forward to that. Let's see where our other setup is, but give me 1 second. Set the last things up here.
Turn up for the night. Real thing, she's no average girl. Too fine, oh she mine. She's so damn fine. I just wanna call on you. Money just fall on you. Not a thing
There we go.
Ooh yeah. I just wanna call on you. Let me do it all for you. Can't nobody ball on you. Ooh yeah. She the girl in my visions. Now that I found you, I'm feeling for all your attention. Yeah. Hope you don't mind if I give you a tour of my mansion. Yeah. All of this for you, babe. Nothing I won't do, babe. Weak for your love. Everywhere we go, they be alright. Yeah.
Okay, let's go. Let's get into it, guys. So we have the VIX right now. We have a stronger dollar index, right? So we have, of course, probably significant weaker continuations here for the indices right now. Okay, the VIX is looking extremely strong here. Okay, we have created that zone here. We saw that change character to the downside here, but we immediately created that higher high, and that got invalidated. So we're now looking still for the beautiful continuation here. The only way where we can start looking at the potential range is when we break these lows here. So far, the VIX doesn't seem to stop whatsoever. Okay? This is extremely bearish for, in my opinion, I have not seen the indices yet. But this should be extremely bearish for the US 100 and for the other pairs in general. There we go. Alright. What do we have here? We smashed through that zone. There we go. Let's go to the 1 hourly. We know that the higher time frame is bearish. We're looking for that range here. So we look at these range right there. Right here. Beautiful. Swing low to swing high. We saw this range here. Go to the lower time frame. There we go. We tapped into the equilibrium and went down again. Okay. So we are still in that same particular range right here that we can start looking out for. Same thing for this area right here. Any retracement from this swing low to swing high to swing low is potentially expected. So the only thing that we should look out for the indices right here, such as US 100 to US 30, gonna be very, very similar, are continuations here. Okay? We have not proven to counter trade whatsoever. So the only thing that we're looking for is the continuations for, you know, everything that we're looking for. So the VIX is one big part of it. The VIX is very, very important here. Okay? So we are still looking at the continuation from that range. As long as we are not creating significant lower lows here, there is no need to look for any longs for the US 30 or US 100 or whatsoever, right? We're just looking for the continuation here. And we can zoom in. We can start looking at particular ranges. Things that are showing us indications of potential short-term reactions here. Right? Because all the biases are pointing into the same direction right now. And that is bearish. But what we're looking for is, of course, coming back up, coming back down, ranging that, leveraging that. And then looking for the continuation of a potential short opportunity right here. So anything on the VIX here right now that shows us potentially that because we're looking for an indication is fantastic, okay? So let's see right here. Okay. There we go, there we go. Let's clean it up a little bit. This is all clear. Came back down, came back up here. Liquidity built up right there. Okay. This is the 50, exactly where we bounced from, so... Yeah, exactly. So there's definitely an order block right here we can take consideration. This is one of these blocks right here that we can potentially use. And see if it aligns there with the VIX. So we still have more downside potential. The only thing that we're looking for right now is continuation to the downside for the indices right here. Okay? And the first order block that I see that is potentially interesting right now is on the 30 minute, I think. Is it on the 30 minute? No, it's on the 1 hourly. It's this one right here. Right at the equilibrium. So anything related to this order block right here is something that we can look out for. Potentially coming back up, tapping into that range right there. And then continue the way to the downside. That's what we're looking for. We need to see if it aligns with the VIX right there. But that's pretty much the overall area. AEG asks, what is the VIX? The VIX is the volatility index. It's pretty much the options exchange, the Chicago Board Options Exchange that is related to the S&P 500. We know that the S&P 500 is highly correlated to the US 100 and the US 30 because they're partly in it, right? So therefore, we know that there is an inverted correlation right there, and that's what we can actually, every leverage right there. There's a strong inverted correlation between the VIX and the indices. The next one is the Canadian dollar against the Swiss franc. Okay, that's the last one, and then we're gonna go into scalping mode. Okay, we need to get our things right. We need to get our. Let me put this also to the side here. We need to move forward here. So we have the Canadian dollar against the Swiss franc right here. Okay, Canadian dollar against the Swiss franc. Let's have a look there. I think this is a 1 hour candle. There we go. Okay, let's clean it up. That's a potential move we can look for right here. Overall, we have been moving down tremendously right here. The Canadian dollar is significantly weaker. Significantly weaker, actually, right here. So what do we see? We saw that higher high, we saw that lower low here. So this is the last swing low to swing high. We can take consideration. We have this area, and we have this area right here. You know, let's make it a little bit actual. Actually, if you wanna look for the internal change of character right here, we can use that one right there. So this is a beautiful range. Of course, we're looking for the continuation right there as well. However, on the lower time frame, we see something interesting right here. We have been continuing right here, right now. We're finally seeing that initial bounce right there. So this is what we can look for. We can look for that initial reaction here. We came back down, tapped into that area, tapped into the equilibrium. And what's happening there? That is that range that we're looking for. So now we're seeing, again, the same thing happening. And we're seeing that we have created that higher high right now, which is very, very interesting. So potentially we can expect some support here for the Canadian dollar and Swiss franc here. And if we can hold here and we create a higher high right there, then that could be the moment when we can find an actual reversal coming into play, okay? Until that moment, there is not really a reversal yet. Yes, we have created a lower low right there. Actually, we have created it here as well. So let's say this is our break of structure to the downside. And this is our change of character to the upside. And we have this huge area of imbalance here that we can take as a confluence right now. That's great. So now we have an area of imbalance here. We can have a beautiful order block here as well. If you tap into that range right now, then that doesn't mean we're in a bullish segment right now straight away, because the overall higher time frame, segment is still bearish. However, if we now created that zone here and we tap into that range here, and we then from this moment create again a higher high, and we break these highs here, that's the moment when we can say, hey, now we have a shift in momentum. Now we can start looking potentially at short-term, actual serious higher time frame long opportunities again to look for the transition that is potentially yet to come right there. That's potentially something that we are actually looking for in order to move forward from there. However, that does not mean that we can still look for a reaction, a potential scalping opportunity here, and a potential, scalping trade setup right now. We have seen that range, we have seen that reaction here. We could wait for a potential, base foundation right now. So that's a nice way of looking at it. The moment we tap into that zone and we created that higher high, that's the biggest sign of a potential reversal now again, because we have created that high, we have created the break of structure here, we came in and created another higher high. That's the moment where we're looking for the shift from that momentum, and we can start looking for longs again. This is where that shift eventually happened and took place completely. So what we are looking for right now is to come back down further, tap into that zone, move up from there, and see if we actually can hold into this beautiful order book right now. The initial reaction is there, right? So we can look for a potential scalp opportunity, we can look for some potential trades there. However, from this moment, I get more and more confident that there is a shift in momentum going on, and that we can start looking at particular options right there, right? Another thing that you can take consideration, let me leverage that as well, is what we of course know, what we have learned, is the interest rates right here. This is what we can take very serious as well. We have the 2.5 against the, I believe the 1 point something. Oh, minus 2.5, yeah. So we are in a actually positive correlation as well. So the shift could come anytime soon. So that could give us a nice indication here. That could give us a nice, beautiful reaction, shift in momentum. We can take in consideration right now. So it's a matter of let's be patient here. Let's wait for it to come down and tap into this order block. From that moment, we can start looking at confirmations right here. Even when we're tapping into that zone and you look on the lower time frame for a confirmation, let's say on the 15-minute, then that's a moment when I would personally start looking for longs at that particular moment right there. So very, very nice setup. Canadian dollar, Swiss franc. Why do you call your supply and demand zones order blocks? So an order block is nothing more than a candle that is filled with potentially institutional buy or sell limit orders, right? That's what we're looking for. And we trying to recognize them in a few different ways. We sometimes have a drop, a base, a rally. That's one order block. Another one is a drop, base, drop. A rally, base, rally. Or a rally, base, drop, right? These are the 4 different patterns. If you then combine that with, you know, bullish, bearish, bullish, or bearish, bullish, bearish, we have an extra confidence as well. And we can leverage that to look for order blocks in the market, right? We're looking for the indecisive market candles or thick blocks of candles here that can potentially formulate an order block right there. This is what we're looking for. Nismo Power says, but those are just supply and demand. No. A supply and demand is based off an order block, right? A supply and demand zone is based off a order block. That's pretty much what we're looking for. Tarek Ahmed says, Lorenzo, do you find a social media manager yet? Yes, I have found somebody that can help us with. Very, very interesting. Very, very nice. Appreciate it right here. Thank you, my man. Thank you for asking as well. So let's go over some trades that we're currently looking for. Creative Group, thank you so much, my man. I appreciate you. Nismo says, because ICT says otherwise about order block. Can you show me the link, bro? Because in my opinion, I'm looking for errors of supply, errors of demand. We can confirm an error of supply, errors of demand by spotting order blocks in that particular range right there. We have the New Zealand dollar against Japanese yen. So yes, like I said here, with the Japanese yen here, we are finally building out that zone here. We came back into that zone here. We tapped into that area, came back up here right now. We came over, we tapped into premium areas of demand here. We saw that area of consolidation here. We saw the point of control. We saw that exact reaction from that point of control. You guys know how we work here. So now we have the 15-minute, and now we know that there potentially is more downside potential going on. However, we want to wait for any lower lows here getting created. Once we have created that lower low here, that's the moment we can start looking at a particular area, because then we have invalidated this particular change of structure right there on the lower time frame right now. We know there's liquidity built up underneath that area. So this is what we're looking here. This is exactly what we're doing. Okay, we're coming down and then coming back up. So if that's the happening right there, then we can start looking for potential, you know, long opportunities for the New Zealand dollar and see if it aligns there with a nice, beautiful order block right there. Nismo Power says, I get the point, but calling supply and demand zones as a order block can be confusing. What do you think? Okay, so what is in your definition an order block, and what is in your definition supply and demand? Let me know, my man. Because I think you're confusing two things together here. Lorenzo, how do you know that a certain OB will work or will not work? If you knew that every OB would work, 100%, then we would play a completely different game here. And that's the exact moment we would start looking for, you know, any opportunities. However, we just have probability. We can only make sure that everything from a higher time frame bias to a lower time frame bias is aligned, is completely synchronized in flow. And from that moment, we can start looking at particular options right there. Nismo Power, I understand what you mean, bro. I definitely understand what you mean. However, what I understand is that if you look for an area of supply or demand, you know, we cannot just pick a random range right there, right? We have to select and base it on different candles. The candle the candle eventually identifies the area of supply or the area of demand here. There are many reasons that can potentially higher probability for an OB. So the only thing that we're looking for here is we need to see if it can actually come from a higher time frame indeed. T-Boy knows exactly what's up here. There are many confluences we can take into consideration. We can use imbalances, we can use liquidity, we can use the overall higher time frame structures right here, right? We can use lower time frame order blocks, you know, in higher time frame order blocks, right? We call this a block in a block right here as well. This is what we're looking for. Best friend says, hey bro, where in Bali are you right now? We are right now in Canggu, my man. A little bit north of Canggu. Are you in Bali as well? Let me know. All right. Let's start scalping indeed. I agree. We have around 30 minutes to go. So let's look for some opportunities here. We can definitely take consideration right now. This is exactly what we're looking for. Wow, this was the US oil, by the way. This was pretty interesting. We saw that range here. We came back into that range here. We saw this zone here. We came back into that area. Mitigated that zone here. We saw that initial reaction. We saw some internal changes as well. We came back down, we came back up, and there we go. We took off right here. Okay? Nismo Power says, I invite you to watch what ICT says about the order block. It's really interesting. Okay, yeah, send me the link, my man. Thank you so much. Are you here? Let me know if you're in the Discord community as well. If so, send me a link right there in Discord. Thanks, man. I appreciate you. I always appreciate advice from any other person here as well. Okay. Nismo, don't look for fights here, brother. I appreciate that. Don't look for confrontation, alright? Okay, so the Japanese yen is something that I have a really close attention on right here. This is where we can potentially can start looking for any setups right there. I do like that. Very clean. It's pretty much, you guys know how we roll with the scalping strategy here. We're all on the same team, mate, trying to learn. Yes, exactly. And, you know, I appreciate every advice, every reaction as well. So I definitely, I pretty much learn from anyone here. Okay, so the Japanese yen, I'll take that into consideration. With the scalping strategy, we always look for potential setups right there. We're looking for, you know, pairs that can potentially give us that indication that we're looking for right now. The Japanese yen is definitely one of them. The euro. Let's have a look at the euro again one more time. Omid says, I'm new here. Are you mostly scalping long term? Scalping or long term? Well, we have two different strategies, my man. We are looking at long term setups. We are looking at scalping setups as well. We're looking at both. Okay? We're doing both here. But because we're doing the verification phase as well live, we're trying to use this for scalping until we see like these really nice potential opportunities right there. So right now I'm gonna look for some for scalping. Today's a little bit of a scalping setup here. Let's open the scoreboard. Let's see. There we go. Okay. So for the euro, we either need to come down to this area here, to this particular zone right there. Okay. We want to tap into this area of demand right here to potentially look for that area, because right now we have not created a higher high. Lorenzo, do you have a mentorship course? No, I do not have one. So what I'm doing, and what I want to do is I do not only want to base what we're doing here for myself. I want to share it with people that are, you know, that really know what they're doing, and I want to build a platform. That's why I decided not to create an actual course or something like that. Because I feel and I believe that we can do better as a platform. And therefore I created a community. A Discord community. And in that Discord community you will find a lot of like-minded individuals here. We have around 3,800 members in our Discord community right now. We are attracting coaches that can be active here in our group. That are really good, really solid. And really taking care of the people in our community and really trying to take them to the next level. So it's not only about me, it's about the overall platform that we're creating here. So that's the reason why there is no mentorship involved. I do not sell a course. I only asked for a one-time fee for the entrance towards this to this Discord community right here. And I feel that the community is way stronger than a particular course. We can learn so much more from everyone together with the right guidelines, with a few coaches that are really you know, taking things to the next level for all of us that we can look up to. So what we're doing on YouTube is some live trading and a basic understanding of the strategies that we're using here. That's it, pretty much it. And live trading is also fun. But at least explaining why. What is the entrance? What is the reason for our trade setups? Right? This is what we're looking for. Joel says the Discord is a family of a friendly debate. I agree. I agree. Samuel says only serious traders in this community. Advise everyone who's serious about this to join. Loving your work, bro. Thank you so much, guys. Appreciate you. Jackie and Rosha, thank you so much. Appreciate that. Let's get started, guys. All right. So what we are looking for is we didn't create a higher high here. So I'm still looking for these potential reactions right now. And that's going to cost, this is at least a 1 hour area that I'm personally looking for. So either we come back down more. And this is the first order block that I can take serious right now, that I can take in consideration. Right here. Okay. That's definitely a thing that I'm looking for here. This particular range right now. Okay. So we tap into that zone. And then we can start looking for any scalp opportunity right there. Because right now everything is still saying that we are coming back down for the euro right now. Okay. Is there a way of looking at potential lower time frame structures and look for potential, you know, short opportunities? Well, not really. Why? Because we have actually not created a lower low here right now. Okay. We actually held above this area right here. So this is what we are waiting for right now. We're waiting for that particular level. Take consideration. And to start looking and to create a lower low here for that moment to be to actually look for that particular opportunity right there. Okay. So the VIX. There we go. The VIX is something interesting. Okay, the VIX, this is a nice range. I do like that one. I do like this zone here. I should actually start using the Volks here. Let me use the Volks here. The Volks is actually the better version. It's the same thing, but it's actually a little bit more accurate. All right, a little bit more volume in this range here. So we have this area right here. We have created these higher highs here. We tapped into that zone. So we actually created this area right here on the lower time frame. We came back into that area. So we have this area right here. This is the range. This is the equilibrium. This is where we eventually can look for an alternative right now. This is the 15-minute right here. The other one is right here. Any area right here, if we align with the dollar index, which we are most of the time doing here, then that is the moment to look for any short-term short opportunities for the Nasdaq and the Dow Jones here. So the Nasdaq should come up right now a little bit on the lower time frame. Let's see if we have some other music. Let's take some jazz. I want to hear some jazz today, guys. There we go. Okay. All right. Give me 1 second, guys. Let's get it moving. There we go. That's a little bit too soft here. I'm looking for some really good jazz here, guys. If you guys know something, let me know. This is not jazz. Ah, there we go. Maybe this is what we're looking for. There we go. All right. Let's get this thing started. Alright, 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 alright. So look at the VIX, the Volks here, or the VIX. These are the two ranges we can look for. Okay, so do we align here? I do think so, I do think so. I think this is the last time when we created a higher, lower, low here. So this is the area. If this range is on the lower time frame. That's this one right here. This is that area. There we go. Here's our order block right here. Carmir says, morning from Suriname. What's up, my man? Welcome, welcome, welcome. Hope you're doing good, brother. Let's start regular setup. If you send me any, you know, pairs I can look at, we'll look at some regular setups for you. For now, because it's Friday as well, I'd rather do some scalping trades here. Because we cannot hold our, I do not want to hold our position over the weekend. I love Suriname, by the way. I really, really like it. Just so you know. Okay. This is definitely a range. This is definitely an area. Fully focuses, won't the euro get stronger today since the ECB is gonna release its interest decision today? Oh, is it today? Is that today? I thought it was Monday or Tuesday. Is that the case? Let me know, brother. There we go. Saxon says today is Paul's speech. Euro GBP, GPY, okay. The Euro JPY here, alright. So in my belief right now, we need to use the higher time frame for this one. And it's pretty similar what we saw here, right? We saw that zone here. We created this, we have all these internal breaks here, but I'm looking at the massive, like the massive areas where we actually broke structure to the upside here. So I can leverage the actually swing high to swing low right there, and it actually happened right into that range. So we saw that zone here. We mitigated into that order block on the 3 hourly, I think, right there. So we came back down, we tapped into that area right here. Mitigated price further down. Go to the 1 hourly. There we go. Tapped into that order block on the 70.5 and took off from there. Wow. Very clean. Created a higher high. Right here. Another structure here. Right there. Then we tapped to the zone, we took off from there. We created a new higher high. Right here. We tapped into that zone again. Okay, we mitigated again into a range. Beautiful, we took off from there. If you can catch these takeoffs here, and you can catch that, you can see that this downtrend formulated into that range. You can start looking at these structure. You will see how important market structure is right here to understand. And if you see that right there, we created a higher high. We took off from there. Higher high, we took off from there. We mitigated into the zone here. We tapped into that area again. Okay. So let's zoom into the 50-minute. The higher time frame is still, we're still in that segment, that overall bullish segment here right now, because of this reason, right? We saw that massive break. We tapped into that zone. This is where the internal structures happened, where we took that change of direction in play, and we created a higher high. So we tapped into that zone here. So if you would take this from swing high to swing low, we are nothing more than at the 62 here, and we saw that initial reaction already from the 50. Which is very good to see. So, very, very nice. Actually, it's from here. Sorry. My bad. It's from this range right here. This is the reason why I explained this right now in the weekend, when I'm gonna drop this video. Talking about market structure, the Fibonacci. Because this is a key player here. A massive difference. So if you look here. We have building liquidity on the upside here. We have building liquidity on the upside. Which I really, really like. And why do I like it so much? Because we know that we have building liquidity on the downside here for the Japanese yen. So we have building liquidity on the downside here as well. Right here. So like we want to see this break here. If you see that break, we're going to see that break. We're going to take out some of that liquidity. We can then start looking at the lower time frame confirmation to look for that momentum there. Yeah, it could be on the 5-minute. It could be on the 50-minute here. So this is what we're looking for. Ahmed, appreciate you, man. Thank you, brother. Omen says, don't you trade gold? Yes, we do trade gold as well. We do trade gold as well. Let's have a look at gold indeed. Okay, okay, that's interesting. This is the high they need to break. We need to break this high. This is the range. Okay, this is what we want to break here. If we break this high here for gold, I'm way more confident about any potential trade setup here for gold as well. Such as this one, for example, this order block right here. I could say, okay, we could go for, if it aligns with the dollar index, we could go for a scalp here. We could try out a beautiful scalp here. But in order to look for like these bigger trade setups, I would say, okay, let's break these high here. And to then potentially come back down from that area. So that's something good we could take consideration. For scalping, I would say yes. I like it. Why? Because we filled up all of that inefficiency here. We filled up all of that imbalance right here. So yeah, that's very, very nice. If you can do that right now, fantastic. Let's do that. Musk says, good day, sir. Why there's 240 people but only 89 likes? Come on, guys. Make it at least 150. I appreciate you, my friend. Thank you so much, brother. Now, we're gonna have a great stream today. Okay, we're gonna keep observing the chart here. We're gonna look for trade setups. Okay, gold is definitely one of them. I would trade this one. I would take a trade here. Okay, I would target these ranges here. Why? Because we have filled out the massive amount of liquidity here. We see that reaction from this zone here. I do like it. I do like what I see there. And yeah, it's very, very nice. So let's take that in consideration. We're gonna see a beautiful retracement coming down very soon. So gold is definitely a trade setup we're looking for here. Okay, that's one. Let's bring our special guest on very soon. Once he is on the chart, he's gonna do his top-down analysis as well. Okay, and I'm gonna ask him a question. We're gonna ask him, hey, what about scalping? Is there a strategy that you personally use? What are you using? Let's ask him anything you guys want. Please ask him any question. Gonna be a fun stream. Okay, we're gonna look at his chart as well. We're gonna make sure that everything there is perfectly on point as well. Okay, this is what we're looking for. And in the meantime, while we're having that call with him, we're gonna look at all our trade setups, right? We're always doing, right? We're gonna look at all our trades for a Friday. Our scalping setups right there. This is one of them. Okay, I like the fact that we created a higher high. If you want to look for serious trade setups, I wanted this high to be broken. Right now, for a scalp, I do like what I see there. I do like that initial reaction there. And also, let's have a look at the DXY here. On the lower time frame. Equal lows. Not a lower low here. We saw this one here. Let's use the sonar lap as well. There we go. Okay, this could be good, guys. Could be good. Could be good. Think about these zones here for the DXY. Okay? This could align very nicely with gold. So gold is definitely a trade setup. Right now. Did you start Prime XPT? We're gonna start, I think soon. We're gonna start maybe on a Monday. Okay? Monday and Friday are scalping days. And the overall structures, right? So we're looking to do that. Yeah. Let's see what the community is doing, by the way. If they shared some charts here. So gold is definitely a setup right now we're looking for. We're coming back down with gold. Could be a great area. A great range we could take consideration here. Ah man, you have no idea how happy I am with the community. With the people here. With the future of what the actual future will bring to the table. It's gonna be fantastic right here. You have the book map.
News 100.
The guys are crushing it as well. We're gonna look at the meta charts. Every Sunday we release our Sunday weekly breakdown. Right here with all the setups we're looking forward to. All the potential charts. Highly investigated. Market structure. Everything clear from this standpoint right there. Can be super nice. So every Sunday, guys, look in the meta charts. I have never missed a week since we started uploading this video. Okay? Never missed a single week. I feel obligated to create this for you guys. At all costs here. Okay? Okay, gold is one thing. What about the next one? Actually here. Okay. Arrow of supply, oh, arrow of demand here. Let's see if you hold there. Okay, so far so good for gold. Okay, our gold setup looks validated here. Our gold setup looks good. We have not created a higher high here. So be careful here. For the euro. We have this zone here. Any potential euro shorts here. Okay? That's the next layer we can take consideration. Gold is one. The next one is potentially any euro shorts here. Continuation of the euro. Until we have broken this high, there is nothing really to think about for the euro in another direction. So yes, euro pairs. Let's look at some setups. Okay, euro Australian dollar is invalidated. Euro Canadian dollar as well. Okay. There we go. This is the higher high. This is the swing low to swing high. Go to the 5-minute here. This is the swing low to swing high to swing low. Okay. The euro Swiss franc is decent. The euro against the Swiss franc is a setup that could potentially align here. Okay, we have two areas of demand of supply here. We can take consideration. That totally depends on what the euro is doing. Okay, where is the euro? If the euro is here, where are we with the euro Swiss franc? Are we right here or are we right here? That's just what we're looking for right there. Okay. Okay, for gold. Gold is coming up. That means that the DXY is coming here. Okay. This range. This is the area. Keep in mind, we are in an area of supply here now for the dollar index. Right here. But it does not align with what we are looking for. We're looking to come down here. Okay, let's see on the 10-minute. There we go. There we go. Okay, there we go. Okay, we're gonna face some resistance right now for the dollar index. I think it could align beautifully with the with gold here. I do like this setup. I really do like it. Okay, so the euro Swiss franc is another one I would like to do. Why? Because I do think it aligns with the euro index. I do think that we have not created a lower low here. We have not created that higher high here. Okay, we have not created that higher high here. So I'll take that very serious. And the overall bias is still bearish. We all know that. We all have confirmed this as well. Right, break structure to the upside. Also here on the 4-hourly. Same thing. And we are still not in an area of demand here, in the premium areas here. Okay, we are still here. Roundabout range. In the first order block that we can potentially take consideration is this one here. So until that moment, we still can come up and come back down to tap into that zone. Okay, so the shift is not there yet. But that's why I like it. I like the fact that we can tap into this order block right now. Mitigate that range. Target these candles here. And leverage that aligning with the euro Swiss franc. Okay, so it's either this one. Or this one right there. Let's see what happens if the euro comes up here. And that can happen soon because the dollar can come down here. Okay, we smash into this one. Let's see what this one does. Let's look at gold. Coming close here. I like it. I like it. I like the fact that it aligns here. I like that it aligns. We saw that reaction here. Yeah. There we go. Let's be patient here. Canadian dollar Swiss franc dropping. Metrics. Okay, let me check, brother. While we're having a close eye on gold here. There's one more range. There's one more potential range we can take consideration, and that is this block here right now. Isa says, I missed you yesterday, bro. I missed you yesterday. Thank you for your videos. Incredible. New way of trading. Thank you, Isa. I appreciate you. Thank you for your kind words. Yeah, we are gonna keep continuing this. We are really gonna take over together, guys. We already built one of the best communities, I'm telling you. Honestly. The only thing that we're doing right now is just to all improve together. On a consistent basis. Okay, let's have a look at gold here. Trashes, what do you mean one of the best? The best? Ah, it's good to have you back, my man. Fantastic to have you here, man. You're the funniest guy of our community, that's for sure. That's for sure. Alright, what's coming indeed? Let's have a look here for today. Manufacturing, huh? Okay. Let's wait until this news is over here. Lorenzo, in 4 hour you have UTL. Yes, 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 I agree. I agree. Crypto says time to short nasty Nas. Yeah, exactly. This is 100% the case. Because we're looking still for the continuation here. For things like the Nasdaq, the S&P 500. And everything else related right now. We're looking at the confirmation. We're seeing clearly that we're breaking these highs here. We are massively creating a shift here. A very, very important shift. So if you take this one. And we see this one right here. And we saw the retracement. And we saw that confirmation of the retracement right there. And we mitigated into that zone. And we took off from there. Then look at that. That's exactly the reaction we want to see. So again, it happened here again. So we have this swing low to swing high. Very, very similar. So it's the 4 hourly here. That we can take consideration here. Right? It's this one right there. Right there. And right there. The overall zone here. And then we have one more on the 1 hourly. Right? This is what we're seeing here. And we keep moving forward. Keep moving forward right there. Right there. And what do we see? Right here. Same thing. We tap into that zone. Coming back into the premium areas of demand. And we take off from there. So we keep moving like that. So these are the ranges right there. We came back down, tapped into the 50, and we took off from there. Right? One more time. Came down, tapped into the 50, and we took off from there. I keep a close eye on gold, guys, by the way. Keep a close eye on gold. I will keep you guys updated. So same thing here. Same thing here. We saw this lower high. So we came back to this range. We came back to the 50. Look exactly at the 50. What happened there? We mitigated that zone. Equilibrium. Took off from there. So what are we doing now? Lower time frame. 15 minute. We're looking for the same structures, right? We're looking for the same structures right there. So, in my opinion, we have not created a decent higher high. So I still want to leverage this range. These are the ranges we're looking for. Right here. How's everyone today? I'm doing very good, my man. How are you? Hope you're doing well. News coming in hot. I agree. Okay, dollar is invalidated. We didn't see the right reaction so far. This is the last zone. If you guys want to know what I mean with that, please go to my video. Look on YouTube. Go to the SMC scalping variant and you will understand what I mean. Invalidated. Invalidated trade for gold. The Gorilla says, what strategy do you use? Yes, we're using SMC. What index do you use to correlate the US 100 and the US 30? What we're looking for? What index do you correlate to US 30 and the US 100? So what we are looking for is the triangle between the dollar index, the VIX, and the indices right there. All right. Okay, gold is invalidated. The reason for the invalidation of gold here is very clear. The dollar index just didn't close any particular candle on the 5-minute bearish, right? You guys know that. This is what we explained on the video, right? So that's the main reason I'm looking for. We also had some news coming out, but looking at the chart here, it was not the it was just the manufacturing here, the PMI. Okay. But what I'm looking for is that reaction of this 5-minute candle. So the euro can be one. Now Renda says, can you analyze Apollo hospitals? It's a perfect setup. What is that? I've never traded that. I've never heard about it. Is it a stock? Is it a Apollo? Hospitals, okay. Zanitsa says, hey bro, that's a stock, Indian stock market, okay. Alright. Okay. Before that, I would like to use a disclaimer, because I've never worked with these, so I do not understand the correlations of these pairs here. So I can just use it from what I see from this chart here, in order to make information for them. Okay. But I can do it for you if you want. I can look it up here. So let's start on the higher time frame. For weekly, you have to start really for stocks in general. You have to look at the higher time frame, right? Okay. All right. That's the weekly. There we go. We mitigated into the 62. So the 618, that's the reaction. Right here. Look at that. Because what do we see here? Right in the middle. Exactly what we were looking for. This is the swing low. Why is this a swing low? Guys, I'm not going to ask you guys a question, please. Explain me. Why is this the swing low? So if we draw the Fibonacci here. Okay? Hope you guys can see. Let me zoom in a little bit. Why is this the swing low? And why is not this the swing low? Let me know. We're going to talk about this setup here. Internal structure. Okay. Okay. Because of breakout after the swing low. That's the move that broke structure. Sell before break. So yes, I agree. So when we look at the change here, we were consolidating here. What happened? First of all, we created a massive break of structure to the upside. Right here. And this is a weekly, right? Break of structure to the upside, change of character to the downside. We also have this internal chalk here. We can use this one as well. And then we started to consolidate here again. But we did not broke a single high here. Right? We did not broke the high here. Even here, we did not broke the high. Right? So because we saw the break of structure here to the upside, change of character to the downside, and then we saw this completely breaking, then this was the last swing high to swing low. Right here. This was the last swing high. Let me zoom in a little bit. This was the last swing high to swing low, okay? This is eventually where we came to. And where we got rejected. We didn't break these highs. So this was the first moment. This low was the first time that we broke these highs here. Okay? That's why this is the nice, beautiful... That's the swing low of our chart here. And from this moment, we just rallied upwards extremely hard, right? And we have not created a lower low. We have not created a lower low here, not here, not here. Not at all. So we could take this high as our swing high. Right there. So this is the swing low, this is the swing high. And therefore we see if it aligns it. So what happened here? Okay, we came to the 50. We started ranging at that area. We started to have some confluence here. In the end, we broke it. We tapped into premium areas of demand here. But what did we see? We came back to the exact 618. This one right here. The 62% area of demand here. This range right here. This is where we came from. So we came back up, we mitigated back down, and we're right now at this particular level. So that's the essence right here. Okay? Very beautiful order block aligning with the 62. This is how we determined our swing low and our swing high. Starting all the way down here. Now we are here. Right? So what are we looking for? Well, let's go to the daily. The overall bias is still bullish. But now we can start looking at different ranges here. So what do we see here? We broke structure one more time. But after that we held support here. Alright, I think we're back. Alright, okay. We are back. Sorry for that, guys. So what are we looking for right now? This is a 3 daily order block here. We saw that reaction here. This was the actual reaction from this order block right now. So right now, we have created these lower lows here finally, tapping into that zone, so the reversal can come into play. Okay, yes, we came back down, come back up, and we can continue way further. Is that possible? Yes, absolutely. Why? Because we're looking for that zone. The only thing that can invalidate that right now is these highs that we need to break. We have one more zone right here. Right? If we come back down and create a lower low right here, we are bearish. We can start looking at the complete change of trend right here. This is the exact area we're looking for. So that's this range right there. If we break these lows, we can start being bearish completely and start looking for the continuation down there. Okay? If we create a higher high here, then we have still invalidated this zone right here. And we can still start looking at bullish segments right now. So right now we're somewhere in the middle. We're somewhere in the middle of a range. Does that mean that we cannot short it right now? Well, we can, of course. We can still short it. However, because we saw the 3 daily area of supply here. Right? The beautiful area of consolidation, expansion, retracement. Continuation. So what are we looking for? Break-in low instruction right here on the lower time frame. So now we're at 4 hourly. Now we're looking for this one. Okay? Change of character to the, or break of structure to the upside. Change of character to the downside. If we break that zone and we come back up, then that's the potential moment where we can target this range right here. This is a crucial level we should take consideration. Until that moment on the 4 hourly, we can start looking for a trend like that. If we break these lows here, we can come and look for potential trade setups right there in that area. But this is just, again, from what I potentially know from this specific chart. So I do not know anything about correlations or whatever. So I want to really highlight this. I do personally not know this stock here. So this is a nice area of supply. Whenever we have created that lower low here. Does it make sense? Yeah. Well, yeah, we have trend line liquidity here. We have some, things to be taken out underneath that area. It definitely makes sense, right? So this is definitely something that we can take consideration here. So I hope you, can look for that and wait for this. So we break the 44,216.8. And that's then exactly the moment we can start looking for the retracement back up and potentially then for a short opportunity right now. Okay, thank you, man. I appreciate it. I've never heard about this Indian stock here. Just so you know. But yeah, thank you. It kind of makes sense here. Credit low, low, higher, high, come back down, tap into the zone. If you break these lows, continuing to the downside. If you just come back up further again, and we break these highs here. So we have broken these highs. We have invalidated this completely. This structure we have invalidated. So then we can still be bullish again. Bro, you're wasting time with this, I guess. No, I like to explain things, man. If somebody asks it, then I like to help them out. In the meantime, guys, we are coming very, very close. I appreciate all of that. We're coming very, very close to the 5 figures here. We started our journey 2 months ago, and I'm super grateful. Thank you there. Thank you for the support here. Okay, let's look at the actual trade setups right now. Everyone wants to trade. Everyone is looking for the trades. I see it already. People are hungry for trades. So let's look at that then. Let's look at that. Let's end the week on a high note. I agree, my man. That would be fantastic. Okay, let's go to a few charts here and look for potential setups there. All right. Okay, what's the euro doing here? Okay, let's go to the lower time frame. Okay. Okay. If you look on the lower time frame here, we can look at that one, and we can potentially look for a short-term scalp long here for the dollar index. This one right here. That could be good. Yeah. Okay. If we tap into a zone here for the dollar, we can look at any particular dollar pair here and look for a potential long here. Like a scalp potential, right? A reaction. Right here. So which one does right now fits the best here? Let's have a look here. USD cut is one of them. We have broken the highs for the dollar index anyway, so we have broken the highs here. So that's perfect, that's beautiful. So yeah, dollar long. USD cut is one of them. Imbalance as well is an extra confluence as well. Frank says, just joining now. Keep growing, bro. Nice to see you. Thank you, ma'am. Frank Flag, my man. Appreciate you, brother. Thank you, man. Okay, this is great. This is looking good. The USD cut is a nice one. Is a very nice one. What's the other ones? What are the other ones looking like? We have the US dollar Swiss franc. I also like that one. Mainly because of this area of consolidation here. Right there. That's looking good. That's looking very nice. I do think it aligns here. I do like this one. Yeah. SMC also stated that the banks and financial institutions move to market. They cannot put all their orders at once because it would make the price move away from the level. I agree, they accumulate. There is a contradiction. That's a very good point. That's a very good question you asked. So what I try to look at is look at the higher time frame here. Okay, looking at the higher time frame setups here, what they're doing most of the time is they're going for the higher probability setups. They're looking for accumulation, right? That's why the COT reports can be useful for that as well. That's it's gonna get released every Tuesday. They're talking about the commitment of traders. You see exactly what the hedge funds are doing in terms of orders opening and closing. You can see that they're opening, accumulating at particular levels right there. And what we can look for is just simply look for the structures, look for the retest right there, look for that accumulation right here. So this is one, retrace back up, swing high to swing low, tapped it to the 50, exactly the 50 right here, and took off from there. So boom, next one. You know, and it kept going, they're accumulating their positions. What I always tend to use right here is this thing that we're looking for right now. We're looking for, like in here, a lot of things are happening right now. We were consolidating at this range for a while, right? accumulating as well. So that's why I like to use the volume profile, because you can identify exactly where the most volume was accumulated, right? Where the most trades or orders were placed at that particular level in that era of consolidation. So that means that potentially they bought some here, they bought some there, they bought some there, they bought some there, they accumulated some there. And an average, the average price came back to that area right here. And that's why I like it so much, because if you then come back down to retest that zone, this is why we call this the point of control. If we retest that zone, we mitigate all of these orders right here, tap it into the black block and continue the way up from there. So that's why I like to use volume profiles as well to be a little bit more specific and sometimes use consolidation, areas of consolidation to determine which order block is the order block we're looking for. Jova says, so they do not weaken a level. The more tested, the more it may mean BFI are accumulating their orders. So it's the wrong way to say more level it tested, the more it weakens. I agree, because I personally believe, I also believe that we've seen many situations where it had to touch that same area of demand 3 times, right? Swing high to swing low, swing high to swing low, and the 3rd time it finally took off and went through the roof there. So there are a lot of examples where you can state that, you know, the 2nd, 3rd, or 4th time that we touch an area of demand is the time when we finally take off or supply. Hi Lorenzo, have you done the stream where you say you will only use the sonar SMC indicator? Not yet, not yet. Waiting, my bro. Yes. We're gonna get back into track here. So the USD cut here. We're waiting for a special guest to come arrive here anytime soon. Okay, I'm just preparing some stuff, making sure that we are all ready here. Okay, So this is a nice range. I really do like it. I do like the fact that we are aligning here with the dollar index. The US dollar Swiss franc is one other one I really like. Why? Consolidation, expansion, in retracement, filling up that inefficiency right there. So I do think it will align with the US dollar as well. So let's take this one in consideration right here. Very nice. Again, this is the way we look at the charts here. We're looking for the significant strength or weaknesses, right? Of indices right here. These are the easiest to trade when you're scalping. Okay? There we go. Japanese yen. Okay. Stagnating a little bit, okay? So I think it's definitely going to be the euro or the dollar here. We came back into that zone already. We saw already that reaction here from that area. Manas says Deepak Nitrat Analysis. I don't know what it means, but it sounds good. It sounds very good. Euro USD. Let's have a look at the Euro USD. Yeah, I think the Euro USD can also align there. Yeah. Yeah. Absolutely. Yeah. Okay. Indeed, that's another one we can take consideration. We need to see if it aligns with the dollar index though. We need to make sure it aligns here. That's it. So that's what we were pretty much looking for. We're looking for any scalping related trades here for the dollar. Why? Because the dollar is super strong. It's a clear direction. We just have created a higher high. Everything that makes sense here. I think GU is very similar. Potentially even weaker. Yes. Exactly. Okay. Yeah, there we go. Okay, look at some solid setups here. Looking good. Where did this? All right. We have our setups ready. We're going to make sure that this is ready right here. This is looking good. This is looking good. All the setups are ready and all related to the dollar here. Before we continue with and announce our guest, let's make sure that all our setups are actually ready. So whenever we can execute, we can execute. Right? So that's very, very important here. So let's see. Right here. Okay, this is where we broke it. Came up here, came down. Yeah, same range, okay. Came up, came down. Okay, looking strong. Looking very strong. Okay, even any higher high here. If we break this higher for the VIX and we come back down, then that is the moment we can start looking straight away for a continuation to the downside for the indices right here. So that's definitely interesting. We have to break these highs though. Why? Because this was the last era here. We saw that range. We saw that range here. We saw that range here. We saw that structure there. Right here. So even on the lower time frame, you can say that this is the swing low. This is the swing high. We tapped into that into the 70.5 here. In a 3-minute order block. 3-minute order block here. Right there. Bullish, bearish, bullish. Mitigated into that zone. And took off from there. So the only thing that I want to see is a higher high. And a continuation there. So this is what makes it so nice for you guys also. If you create a lower low and then a higher high, that's most of the time the retracement we're looking for. Can we short the Canadian dollar to the order block below? Okay, let's have a look at that one as well. And then let's continue. What's the higher time frame? The higher time frame is bearish. Of course, we know that. We tapped to the 50. This swing high, swing low. Right here, let's look at the oil as well. I think the oil is dropping hard. Yeah, that's why. So we have to correlate with the oil here for the Canadian dollar. Okay. So if we mitigate it into this area here. Oh, wow. That's really weak. That's really weak, guys. If we mitigate it into this area right here, then we can start thinking about shorting the Canadian dollar later. Any retracement right there to the upside. Using this area of consolidation here. I think it's even a higher time frame. It's like 1 hour. Yeah, let's use this one. If you tap into that zone for the US oil here, that's exactly the range we're looking for. Okay. And that's it. Yeah. So be careful with that, be very patient, and then we look for an actual opportunity. But for now, let's bring in our guest here. Let's give him a call. Let's see if he's here. Let's see if he's available. Let me set things up for you guys. This is a guy where I personally learned a lot from in my trading career. He was already really shortly on the show, a little bit earlier when we started out. I'm very, very happy to announce him right now. His name is Oleg. He's one of my friends. He's also living in Bali. We have been hanging out together for a while. We have been working even in a similar company as well. So yeah, we actually collaborated there significantly. So it's very, very great to give him a call to see what he's up to. So he can maybe show his top-down analysis as well. All right. and let's see what we can learn from this guy. So let's have a little look here, and let's see what we can do. In the meantime, we're still looking for the setups. We are still looking for the charts. We are currently looking at. So let's get him on a call right now. There we go.
Hello, hello.
What's happening? What's happening? Give me 1 second, man. I'm setting things up right here.
All right, all right.
What's happening, my man? How are you doing?
I'm doing really well, really well. How are you?
I'm doing great. I'm doing great. There we go. There we go. We got you on board, my man. Absolutely fantastic.
All
Let me
right, I
see.
see myself. There it is. Hello, you guys.
Yes, yes, yes. What's happening? Let me get me things straight. Where am I? Where am I? Ah, here we go. Like I said, we still need to figure an easy way out here.
Yeah.
There we go.
Layout is your specialty because I clearly don't know how it works and how you're setting things up. I see myself, and that's good enough, but we need to see you as well.
Yes, yes, yes. Okay. Okay, what's happening, ladies and gentlemen? And give a warm welcome to our man Oleg here in the building.
Yo, yo, yo. What's up, everyone?
It's actually, it's fantastic that you are here, my brother. It's fantastic that you're here. We miss you, man. We wanted you on, have you on the show a little bit earlier right now. But you're here, so it's all good. It's all good. I'm ready.
Thanks for having me. Thanks for having me. It's a pleasure.
Yeah.
So what have you been up to? How are the markets doing?
The markets, yeah. Like we all know what happened, right, with the FOMC meeting. We saw the 75 basis points.
That was a blast. You know, I have really mixed feelings, and something that I've told you before already is like the things that I'm working out right now is trying to set up different plans for different outcomes. As we know, FOMC meeting will definitely affect the market, and we can somehow predict, you know, given also the TAP analysis saying that either it's going to be 75 points, 100 points, whatever it is. But then what's really important for me with this is the rhetoric of Jerome Powell, basically the mood that he's going to deliver with his speech eventually, something that we can recognize. Yeah. And this affects the market, in my opinion, way more. Because like in this case, what happened, everyone knew about that it's most likely going to be 75 basis points. However, there would be a case for 100. But then it kind of splits in two ways. Let's say it's 75 basis points, but then he comes out on stage and he says, hey, look, okay, it's going to be 75, but the numbers are really bad. The CPI is very bad. The inflation is struggling, et cetera, et cetera. So we're going to keep on going, increasing the rate until, I don't know, maybe for 6 months from now. So this is a very negative rhetoric, even though the outcome of 75 basis points is more on a positive side. The rhetoric is negative, so the markets react really badly. And then there's a similar thing when he does it for 100 basis points, but then he comes out and he says, hey, this will be the largest increase this year, basically giving everyone a hint that from next meeting, they will do 75 and they will start softening the rate. So this is a positive outcome on a negative number scenario, you know? So this is something that I've been trying to work out recently and try to see the correlation. And what I found is that the speech is way more important than the number itself, at least as of right now, when the curve is, when it's curving, you know, when we are about to see the softening really soon. And this is the key moment of the speech. However, it was negative, as we can expect. As they say, it will be at least 1.25% more in this year.
Yeah. So we are now at like 3.25%. So what they're gonna say is like the expectation for, I believe, Q2 of 2023 is 4.6. Is that something that you expected, or you think it's gonna be even higher than they announcing right now?
Well, the thing is, I think the U.S. economy can sustain without two major, you know, step backs and losses up to 6%, but then eventually they will have to start softening the policy. Otherwise, anything above 6% is going to really hurt the economy. And I think the inflation will not be the main problem anymore if it's above 6%, because then everything is just going to fall apart as a, you know, just as a cart house. You know, one thing goes to another, and then the economy is going to suffer a lot. So 6% to me, I think, is pretty much the ceiling of what they can do. But 6% overall, I think, means like at least Bitcoin at like 10, 12K region. Because
Yeah.
what's the most thing that investors are looking for is the certainty in the market. Even if they say, okay, we're going to increase the rate until 6%, but then for sure, no matter what happens, we will start decreasing it and softening the monetary policy. This will be certain for the markets. And markets and investors, they love certainty. So yes, this will cause some kind of dump, you know, at the short term. However, it will determine the moves. Everyone is going to know, okay, what's going to happen. And a lot of things are already in a price if we talk just fundamentally. But uncertainty is never in the price. So once it's certain, yeah, there you go. It will be completely fine.
Yeah. So I had a question about the euro, right? We all know that the dollar is getting extremely strong right now, and we're seeing that the euro is definitely suffering. Actually, if you look at the euro USD right now, we are at like 97 cents, right? So $1.97. I mean, history is getting written here. What do you think is the future of the
Who would have
euro?
thought?
Like with all these problems involved, like everything that's happening in the war in Europe itself, the dollar getting extremely strong, and so on.
Yeah, I mean, if you also look at the same at the European banks and I don't know the English name of pretty much the same entity that as the Fed, they also have their own rates, they also have their own monetary policy.
The ECB, yeah?
Clearly, yeah, right, the ECB. Yeah, I just didn't know what it stands for. They are clearly saying that they are going to keep increasing their own rate because no one actually needs. I mean, Europe doesn't need a really weak euro. Otherwise, again, but it's just fundamentally they have so many problems, and this is just one of them on top of everything. And this is what makes them struggle even more. And euro is a main competitor of the US dollar. And clearly, when it goes below 1-to-1 extension, it's always been like at least 1.1 or 1.2, as far as I recall. It gives them massive weight on their shoulders, and I think they'll try also to do everything they can to at least keep it as a 1-to-1 ratio for as long as they can, and perhaps even try to, you know, at least come back to like 1.02. And I think this is the path where it's going to go for the next few months if everything sustains at least in a more or less calm environment in Ukraine as of right now. And I hope it does, and I hope this resolves pretty soon. And this is going to play out to euro strength as well. So you see, fundamentally, like we can look at the chart and expect some things, but then if you look at like inside Putin's head, if you can do it and you realize, okay, the war in Ukraine is not going really well, so this is definitely gonna affect it, and no chart is gonna see that, you know. So it's a mixture of a fundamental thing plus the chart plus everything else that you kind of feel in the world and trying to consider. So that's just kind of my take on this. So if you want to trade euro to US dollar on a larger time frame, I think it's important to look on what's happening in Ukraine as well, to look at the results of the war.
Absolutely, and I think also that that we have seen the indices dropping right now tremendously. Right, I think we are now at a 30% decline. What do you expect in the next couple of months for the indices, especially? Like the Nasdaq, the S&P 500, and the US 30, so the Dow Jones, because I know that there is a very strong correlation between the indices, of course, and cryptocurrencies as well, like Bitcoin, like what you were mostly specialized in. So what do you see happening there?
Yeah, well, absolutely. I think the very first lesson that I would like advise to any beginner to look on, and because literally everything gets affected by the Fed and their own rate and the monetary policy. It's the currency number one. Whenever it's declining, the rate is declining, it means the risk on is on, and it kind of means that the Nasdaq, the S&P 500, even though everything is pumping. And whenever they're increasing the rate, it means risk off, like uncertainty in the market is scaring the investors, especially the big one, even retail. Everyone is getting like, okay, the recession is here. We don't know how long it's going to last, where it's going to go. So risk off mode is on, and all the indices, all the like crypto, basically all the risky assets. And I think gold is one that like you can actually negotiate, and something that we could speak about. Sometimes it goes as a risk on, sometimes it's a risk off asset. It also depends on some kind of, I don't know, weird environmental thing that gold is. It's
Yeah.
just one thing that does not get affected by it. But everything else, literally everything, all of the markets are getting affected by the Fed rate. So whenever you see the curve is curving, and you know that they are softening the monetary policy, this is when you can basically expect to all the indices and all the crypto to go up eventually.
Yeah.
So this is a number one thing to look at. And right now, I feel that we are somewhere at a point that they have to start decreasing it really soon.
Yeah. Oh, 1 second. I think we are popping out here. Give me one second, my man.
Sure. Yeah.
There we go. I hope you guys can see. Oh, you guys cannot see it right here. Let me see if I can fix something else.
By the way, quick question.
All right.
Can I vape stream? I'm not sure if YouTube allows that or not. What's the policy?
You can vape, man. If you want to vape, butter, you can vape. Do your thing, man. We're smoking cigars as well on the show soon, so no, you can definitely vape.
I remember there's like this one Korean dude who does the streams, like, and once in a while, I forget his name. He only speaks Korean, and for me, he was like the anti-indicator. If he's long, I was short. If he's short, I would be like, okay, I must long, because he would always get like liquidated, and he would always smoke on a stream first. And I was watching it for fun a few times, but then I saw whenever he starts to smoke, he blocks his camera.
Okay.
And he's like putting his own picture he's smoking. So I guess maybe it affects his the YouTube algorithms and stuff. Therefore,
hey, we will find out soon. We will find out very, very soon. So I had one more question, my man. And this is something that I actually wanted to show on the chart, but right now it's not possible. However, very, very important. I would like to talk about gold. You just mentioned gold as well. Because what confuses me, and I think it confuses a lot of people also in general, right, is that gold is still seen as a hedge against, the current inflation. Whenever there's a lot of fear in the market, uncertainty in the market, you would say that like gold is like the get and go, right? The actual commodity pair that we're currently looking for to invest in, to hold some physical gold, in our arms, to accumulate as much gold as we can, to then preserve, our assets or our capital. However, gold has been dropping significantly already in the last weeks, right? I mean, I believe that the last 1, 2, 3, 4, 5, 6, 7 weeks are already negative right now, and we keep dropping more and more. So what is your opinion about gold? And why do you think it's dropping in a situation where there's a lot of fear, a lot of uncertainty in the market?
Yeah, true that, and there's a lot of uncertainty, and like this thing is really obscure to me. I never understood gold too much, except as this, okay, this is the asset that can actually be mined. We know approximate, volume of it. That's like somewhere that's dug in the earth, et cetera, et cetera. However, if you just make a simple research and you looked at 10 years ago, gold was worth pretty much the same as it is right now, given all of the inflation, given everything that's been happening, given the time that spanned from crisis to crisis, from 2008 until now, well, where all of the markets have grown so much and gold barely did a thing. Like it tells me that in the times when the markets are going up, gold is keeping its own value, let's say related to the dollar. We don't say about the value itself, just the dollar worth of it. And then when we see a recession, any kind, could be a hard recession or really soft recession, gold is also not doing too well. Yeah. It has some like drastic movements here and there. I don't know I think it has more to do with like fundamentals with the gold digging companies and how well they're doing on the reports that they publish yearly, quarterly, or whenever they discover a huge mine of gold, probably it decreases in the price because hey, like new volume is discovered, or it's just going to be dug really soon.
Yeah.
And I think it just if you want to be trading gold, to me, it sounds like you should be really trading only fundamentals of it and looking at the value of the gold as it is, but not to the US dollar. It's just a really weird asset that I honestly don't understand too much. I don't understand the way it fluctuates, and why is it always, having two sides, behaving as a anti-inflationary asset and then behaving as a risk on, risk off, and
Yeah.
just constant drastic shifts. So that's my take on it. I stay away from gold. I don't trade gold just because simply I do not understand it.
Okay.
This is it.
So you do not trade gold, but you do trade Bitcoin, right? This is your specialty
I
right
do
here.
trade-
So
That's the internet gold.
so why are you trading Bitcoin rather than gold?
Okay, I think it all has to do also. If I started trading gold like in 2017 when I started trading Bitcoin, and if it would drive my interest as a technology, like wow, gold, it's a great thing. Let's just learn a lot about it, and then maybe I would start learning about all of the gold mines, where they're located in the world. Just trying to find out as many things as possible while also learning the chart. I would probably be trading gold because I would understand it. But in my personal situation, it all came. I started with Bitcoin as a regular, we call it like a beaver, just not realizing anything what's happening. Bitcoin, you think it's pumping? Let's fucking trade it. And yeah, of course, got burned many times. But then eventually you just learn and learn and learn. And this is what I actually recommend to a lot of people. Just concentrate on one single asset, maybe 2-3 assets. Don't like really try to go over everything, especially if you're a beginner. Just try to learn one thing. You don't need to trade 10 pairs, 20, 50 pairs. I mean, as long as you know what you're doing and when your strategy is set up, and you know what you're looking for, yeah, it may arise in one pair way more frequently, or just give an opportunity to be traded today while the others don't provide it. But just starting out, I focused on Bitcoin mostly, and this is to this day, it's been the most profitable asset that I trade. So why change? Why shift to something that or start like learning new things? Of course, it's great to learn new things, but if we talk about profitability only, I think at least in my case, Bitcoin proves that it's way more profitable to me, at least, than anything else. Therefore, it is Bitcoin. Yeah, I understand it, and at least the technicals of it, and I mean not the technology of blockchain. Of course, I understand it too, but I understand the chart. I understand the liquidity. I understand the market makers. I see, at least that's what I feel happens, but I think I know what they're up to from times to times. I see the liquidity hunts. I see what stops them. We can analyze the volume pretty well on exit charts. We can, do many, many different things. And gold just doesn't provide that. At least maybe I haven't found it yet. Therefore, it is Bitcoin. What about you? What do you trade mostly?
So right now, we know we came from the same place, right? We started in crypto, and I transitioned more to Forex because personally, I like the fact that there is a little bit more volume in the market, that the market is a little bit more, it's more of an adult market, right? It's less of a bull and bear market. It's more of a consistent market where you can always, find your way out. But I do.
It's never gonna go to zero, right? That's the main point.
But what I really liked and what I really appreciated was the fact that I could use the same strategy for crypto in Forex as well. And that's the beauty of the strategy that we're looking for. It's kind of a universal thing, right? So my question to you, is that also something that you leverage when you trade Forex? You use the same strategy as you use when you trade crypto?
I would say that it's similar. However, there's no particular one strategy that I use when I trade Bitcoin, because every time something different arises. And within these years, I started just as a regular newbie, just looking at the trend lines and constantly moving them around. Like whenever a low doesn't fit, like, oh, here's the actual trend line, like back in the day.
Yeah.
And I would keep on doing this, keep on looking, hey, look, head and shoulders, there's like a weird pattern. Okay, let's trade this. And this, of course, caused a lot of trouble. So then it's like, okay, this clearly is not working. Let's try something else. So I went out and I looked, I took a bunch of courses from also some Russian speaking dudes. And it helped in the beginning. I was like, okay, this actually works way better. And then I tried another ones, and some smaller things, they just stayed. Even trend lines, they also stayed. You cannot completely, remove them from your trading,
No.
at least to the point that retail is looking at the trend line. So why shouldn't you be looking at it, at least to like understand where everyone else is looking at? And I'm not saying the trend lines don't work. Like the higher time frames, clearly they do work. Like it's been proven many times on any chart. So it's something that also stayed. However, I don't move them anymore. I know the rules of like making, and building a correct trend line. And then the same thing about patterns, because any pattern, even like the double bottom, whatever it is, the head and shoulders, is a reflection of a trend structure. So whenever the structure of the trend changes, it leaves that pattern. Like there's nothing behind it. And this is why patterns sometimes work, sometimes don't work. It's also 50-50. But it didn't stay in my trading. I don't trade patterns. But what stayed is the understanding of why they are actually reflecting on the chart and why they appear is because the trend changes and the structure changes. And this became a new point. Okay, why does the trend change? Why the structure changes and what reflects with it on a lower time frame? So I started learning this thing. And this gave me a little bit more understanding, and also this gave me understanding what the retail and the crowds are looking at whenever they see patterns, but sometimes they're just not there. Maybe it's the pattern is reflected itself on a chart. It's drawn like a head and shoulders, let's say. But if you deeply investigate the change of this trend and the structure, it didn't bring any pattern. Therefore, it's kind of reflected on the chart, but it's not really there. And this is why in many cases it becomes unsuccessful for a lot of traders. So that brought me to a next step of volume within the trend, because still to this day I think the nature of the trend is the most important thing that everyone should focus on, and trying to realize how the trend is building up, what causes it, and what causes the shift of the trend, like when it changes, and what things that we look at. It's super obscure. I know it's extremely hard to explain in detail, but just when you keep on knowing these new things and with a lot of practice, something stays. And then we can also, if you remember, when we worked together in that company, I was looking up to Chart Champions a lot, to Daniel from Chart Champions. I'm not sure if you know him. Also the guy who trades crypto a lot, has a super successful Discord channel, a lot of like members and stuff. And I found a lot of cool things from his teachings as well. Like they mostly work on crypto. They're also super technical. He doesn't care about fundamental analysis. Some things I clearly did not like. Some things definitely did not work for me. And I also think that they just don't work in general. But some things were like complete discovery to me back in the day. So that stayed as well. And with all of this as a snowball, it's been built up and gave some kind of a hybrid strategy for myself that I look for whenever I trade. And whenever a situation arises, like let's say some setup, I recall to each one of them and I see, okay, what could go wrong based on a previous experience that somehow, recalled in the memory.
Right.
And just as complex as it sounds, I think this is what everyone goes through. I bet your experience was similar, just starting over from simple things, then going to harder and harder, and eventually making your own hybrid version
Absolutely.
of the strategy.
Absolutely. Great. Thank you. So before we head into your top-down analysis and actually start looking at your chart, I would like to ask you a few questions from our community right here. So
let's go.
We have a question from Nick. He says, Oleg, has the decrease in volatility reduced your crypto P&L levels recently?
Yeah, absolutely. Of course, decrease in volatility. Actually, decrease in volatility means that a lot of ranges are formed and the price isn't moving much. It gives you more opportunity to trade more like on lower time frames and using higher leverage. That's something that you would expect, but it doesn't really work on crypto too much because crypto is way more volatile. So even when the volatility decreases and the ranges are formed, the liquidity hunts and stop loss hunts, especially with all of the manipulation of the exchanges side, such as like Binance Exchange, etc., it's just it's massive. So it provides less setups, and of course it's super easy to trade whenever there is a strong trend. I don't care where it goes, to the upside, to the downside, really does not matter. What really matters is the trend itself, and when it's just not there, it's not there.
Okay. We have a question from Aiden. He says, what time frame do you enter, or what time frame do you use mostly to enter your trades? I think he means
Well, that
like,
also
what is like, where do you start your analysis and where do you execute your trades?
Yeah, well, I start the analysis from the monthly. Like I look at the monthly candles, I look at the weekly candles, the daily candles, but then it also depends on what kind of setup I'm looking. It kind of like reminds me, I'm not saying that this is a bad question. I think this is a good question, something that I've had also many times myself, the same question, like where should I be trading? But the chart is fractal and each time frame works exactly the same as the higher time frame. So 15-minute time frame works similarly on structurizing itself as the weekly time frame or the daily time frame. So it really depends like what's most comfortable for you. For myself, I always have a higher time frame. It's the one that I'm looking for a trend. Then I have the regular working time frame is where I look for some structure changes or some significant volume incomes or whatever it is that I can find that would provide me a setup as a first thing. And then I have a lower time frame. It's definitely lower like than the working time frame, where I look for the entry, also based on some specific things that I look for. So if I would be working, let's say my working time frame would be 15-minute, then definitely I'd be looking for an entry on like at least 1 or 2-minute time frame.
Yeah.
If my working time frame is 4 hourly, then my entry time frame is 15-minute. And the same, I have a higher time frame where I look for the trend itself, which would be in case of 4 hourly, the daily, but in case of 15-minute would be the 4 hourly. So it all comes in like fractal. You select the one that you're comfortable trading first, based to your, your lifestyle, because not everyone can just be sticking to, the charts 24/7 as I do. At least some people just need to see the closure of each 4 hourly candle because they trade, daily or whatever it is. So it really comes to like your own special preferences and your own lifestyle. To me, to answer the question, my working time frame is normally the 4 hourly, sometimes either 1 hourly or 4 hourly, and I look for entries from 5-minute time frame to 15-minute time frame.
Okay.
Unless like if I'm scalping, it comes back down to 1 minute.
So you are more of an intraday trader rather than a swing trader, or you're using a scalping strategy as well sometimes?
Yeah, I would say I'm a perfect hybrid. I have some different exchanges. On one exchange, I only do the swing trades. On other exchange, I only do the scalping. Some pairs, I only stick to swing trades. The other ones, let's say some like Ethereum, I could do more scalping with than on Bitcoin, just because I think I understand scalping on Ethereum a little bit more than in Bitcoin. While if we speak about larger moves, such as like semi-swing trades, that will be Bitcoin.
Yeah. Okay, two more very important topics before we finally can go to your charts is just the observation of what I personally see happening in the community a lot. And one of the things is, of course, the one and only FOMO, right? That's number one. And the second one is closing positions too early. Let's start with FOMO first. What can you tell about FOMO? What do you think about it? How did you solve it yourself? I know you're a very, very good trader. Yeah, you probably went through the same stages as everyone else. So what can you explain about the fear of missing out?
I think FOMO is a soul killer, bro. It kills you from inside, and it's something that you rather study to live with and study to control your emotions, or you're really never gonna become successful. And to control your emotions, I think what is the most requirement is just the time. Just when you experience it 1 time, 2 times, 3 times, your subconscious kicks in like, hey, it doesn't give you a good result. When you're just starting out, you see a pump going, you're like, Jesus, I have to be in it. Let me just jump on a trade. I just want to catch a little move, but I'll do super high leverage, so I'll be profitable. And the second when you tap in a trade, it reverses and goes down, and then you're just completely caught. You want to just come out on a at least break-even situation, but the market don't give you that opportunity anymore. And this reflects in your brain once, like, okay, you were saved from a liquidation, you somehow got out. And the second time, if you repeat that and the same thing happens, you will get liquidated eventually. So I also have this thing that I consider that every good trader should have been liquidated at least once,
Yeah.
because this kind of gives him a stamp on his heart, like with a super hot knife or something,
Yeah.
that you fucking don't trade on emotions, you know? And this is the way people learn in a hard way, but I think this is like the only way. Unless you're super yoga meditative guy, then you can probably live without it. But
Yeah.
trading, what drives us in here is the emotion. It in the first place, it's gambling, and I come from poker background, so I know what it is. And
Yeah.
this is what also, you know, used to drive me to play poker, is this element, a little bit element of luck that we're all attracted to. Then you start, you know, living with it day to day, and you learn about it, and you learn how to behave this. So first thing first, just experience. If you get liquidated, not a big problem. But if you want an advice on how to overcome it, I think
Yeah.
the best way is, you know, whenever you want to enter a trade, just go take a walk for 5 minutes and then come back. If you still want to do it, okay, you try a little bit, you know, and but you'll go broke eventually if you keep
Yeah.
on doing this. So
Another
think
important
just-
thing I think that we could take consideration here whenever we talk about FOMO is also the understanding or the solid understanding of the strategy you're implementing or using. Because I feel if you truly understand a strategy from inside out, right, and you have all the correlations combined and you know exactly when to enter and not to enter, I think that could definitely affect the fear of missing out. It automatically makes you more patient because you know exactly where to wait for. I think FOMO can also come from a place of uncertainty rather than certainty. So therefore, I think that has a big impact on you know, the overall feeling of missing out on a trade opportunity right here.
Yeah, absolutely. But this is exactly the thing. Like professional traders, they don't get into FOMO state. They know what they're looking for. If it's not there, it's not there. And it's just there's no such thing as FOMO because you're trading the chart. Or let's say you're trading fundamental news, and you know that if you wanted this outcome on any kind of event and it did not happen, and you were not prepared for the outcome that did happen, then you just don't have your trade.
Yeah.
And before you enter any trade, you should always know when you get out, both stop loss and the take profit.
Yeah.
Some people just enter and say, okay, hey, look, Bitcoin is pumping. Let me just keep my trade open. I'll be rich within 3 months, you know, or 5 months, whatever it is. And they just don't stop paying attention to what's actually happening. And then it's good if they close break even after the price reverses. But mostly people just they skip the stop loss and what leads to liquidation. So you need to have a plan. This is a really first thing. Where to get in and why? Like, what are you looking for? What are the indicators? I mean, not the indicators as a trading view indicators, but what actually you are looking for, your own mental indicators. And then plus knowing your setup. Where do you get out? Where do you take profit? Plus, you need to keep in mind that you will have to readjust on the way, especially if you're trading like 4-hourly or daily charts. Things will happen. And let's say if you're long and the price has been going really well in the uptrend, volume has been increasing, but then you see a giant red dildo on a daily that just completely engulfs everything, or like 50% of this thing, this should change your plan. If your take profit wasn't reached, you should think about maybe closing partially, closing earlier, or, you know, just doing a little research and reconsidering what went wrong.
Mm-hmm. Mm-hmm. And if you talk about then, let's say people don't have the fear of FOMO anymore, and they're taking their positions at the right moment. Then once you're in a trade and things are going against you or not against you, how can we help the people here with closing positions too early? And what do you think the particular reason for, the closing of your position too early is actually?
Yeah, I would also like to recall, because I think it's really similar to FOMO state of thing. It's kind of an anti-FOMO, you know, when you're profitable and you're closing it too early because you think that it's gonna, you know, go back, reverse and go to your entry or to your stop loss. So you're really anxious, but in a different way. You're anxious about losing your profits, that the P&L that you haven't booked, and you just want to exit this. So this is the way it works. Whenever you feel FOMO, there's a special emotion that the market makers want you to feel. Because clearly, if they need to make money, and in order for them to make money, you need to lose money.
Yeah.
So they will do anything possible to trap you. They will draw any kind of pattern, any kind of engulfing shape, whatever it is, to make you feel that, okay, the thing is going to go down.
Yeah.
And this when, okay, you feel an urge to short because you see, oh my God, engulfing pattern, blah, blah, blah. This is crazy. Everyone's been longing or shorting, whatever it is. And this is the emotion that they want you to feel. And if it goes against your plan, you just really need to, just distance yourself from this emotion, at least try to distance and follow your plan. And the same thing about closing too early. Whenever you're in a profitable position, you have a profitable P&L, there will be things in a way, if you keep on staring at your chart, that will scare you. Like a sudden, turnaround, a sudden volume injections or weird behavior, some stop loss hunts. You will see that, especially on a smaller time frames. And you should just need to refrain from this. Just restrict yourself from looking nonstop at the chart. If you had your take profit and let's say your working time frame is 1 hourly, just watch every 1 hourly closure. You don't need to look at the 15-minute candles. If you see a bad 15-minute candle, it doesn't mean anything yet on the time frame that you're working on because it has not yet closed. If you specify that your working time frame is 1 hourly, everything that matters is the closure of each 1 hourly candle. On a 15-minute, they can draw any candle, they can do any injection, but then eventually it could be bought up or sold out, depending on which direction you're going. And eventually 1 hourly will close just fine for you. But you were looking at the charts, you panicked, and you went out earlier. So I would just say select the time frames and just stick to them and only check them out.
I must say that is absolutely some great advice there. So look at the 1 hourly candle closure rather than going on the lower time frame when you are feeling that actual fear of closing your position too early. Great, my man. Thank you so much for the explanation here. I really appreciate it. Is there something you'd like to add on before we move forward?
Well, not really. I don't know even where to start with this because it's just such a complex thing.
Yeah.
And this is what makes it beautiful trading. So even like when people ask me, okay, show me your strategy. And I think this is something that probably we're going to try to do right now, just at least to see like the way I analyze the chart.
Yeah.
There's just so many things that pop out on the way. And I keep the journal up. Like I try to review my trades all the time, see what went wrong. But with every single trade that you take, something is different as well. I don't always stick to like one specific strategy because the market adjusts and I need to readjust. Sometimes I would use things that are different. Sometimes, something that could look as a clear downtrend on like some smaller time frame isn't actually a good thing on a higher time frame because you can see that on a higher time frame it was a stop loss hunt which should probably inject the price up, but then you come back to a lower time frame and you're like, hey, this is a clear downtrend, how can you be considering a long here? But these are just things that eventually appear. So we can try, we can start and I'll just show my basic routine on analyzing things. And then we maybe, try to look for a setup on a specific.
Okay, sounds good. Let's do it. Let me set things up here as well. Like guys, we're still new. We're still optimizing as well, so you guys know that we are trying to get this thing sorted. Oleg can share a screen as well right now.
Also, I'm pretty newbie at this one. Let me see if I can.
Let's see.
Okay, I think this one should work.
Go.
Okay, you see my screen, yeah?
I can see your screen, yeah. Let me set it up right there. I mean, it's not perfect, but it will be good enough, yeah.
Okay, that's fine. Okay, so are we gonna do Bitcoin or what?
Yes, let me make sure if I can put it straight here. I mean, yeah, it should be good enough for now. Okay, yes. So whatever you would like to share here. We're going to talk about your top-down analysis here, just the way you approach the market whenever you look at the charts, and to see what we can learn from there.
Okay, basically, as I said again, I normally start from the monthly. Bitcoin, of course, I know every candle already. I know where it closed, where it opened, but for just because I had a lot of time with it. But if we just consider any other thing, what I start with is just the monthly level. Something that was really important, and I think is always important to everyone, are levels of the closures of the candles where they shift in trend. So if we just see here, we have clearly monthly level here. Where's that monthly? Okay, we have another monthly level right here.
Yeah.
Sorry. Monthly level right here, and then we just start to look where we had another monthly levels. We had one here, and we had one here, and at the moment here. Also, what's really important is the untopped levels. So whenever, let's say we had this monthly way before in March 21, when we were approaching this, whenever the level is getting touched and tapped the first time, it's the strongest level. If it's been tapped all over again, it doesn't really give any much power anymore. So I would probably just not use this level anymore because it's been traded many times and we don't really expect it to come back really soon. But what's interesting is at least this level right here. If we are on such a downtrend, then I think this is an interesting one.
Yeah, please let us know
And
which
clearly-
which area it is, so which level exactly it is, so we can read the numbers as well. It's really difficult to read, so maybe you can use that as well.
Okay. Yeah, but basically this one is the 45K area, 45.4 on Bitcoin, which happened in March 22. Before like the next extension of the dump, we had the very first dump from the highs of technically 69, but the monthly closure on the setup was like 61.3,
Yeah.
then 45. And then we had the really first monthly up candle right here from the level pretty much 20K, 19.9 to be super exact. So these are firstly the most important. Then what I do is I come back down to the weekly and I start to identify similar levels on the weekly, at least those that have not been tapped yet before. We have this weekly, although it's been tapped, we see on a third week right here, it's been tapped already.
Yeah.
Then we have, but I think it still plays a lot of importance in here. Then we have this weekly that has never been tapped just yet. And we have this weekly that was also tapped right away, right after it. We could say about this one, but as long as it didn't really change the trend too much, and we had another weekly closure below it, I don't really consider it as a weekly level anymore.
Yeah.
So I've drawn my weekly levels at the same thing as I'm doing the monthly, and then pretty much I go down to the daily, and I'm starting to identify similar level. So this is the very first routine that I normally do. Just
Okay.
putting these
So what you're in essence doing is you're using these levels to reduce the noise, correct? To just get the weekly levels out to know exactly in what kind of box you can eventually look for in order to move forward there.
Yeah, the thing is, I consider the level, each level has an hierarchy. Clearly, like the monthly level is stronger than the weekly, and weekly is stronger than the daily. And the higher we move down, the weaker the level become. So to me, that's what's important. If I see an approach to the monthly level, I understand, okay, most likely this is where the trend shifted. So it will probably give at least some kind of a reaction. And then I go down to a lower time frame and I see if the reaction was given at that level. And this gives me a signal, okay, that I should go even on a lower time frame and start to look for an entry there. Of course, it's not only based on these levels, but this is as a first,
Is it potentially possible that you can get your quality up to 1080p? Maybe there is a difference there. Just we can try it out.
Let's see. How do I do that? Let me check. One sec.
Underneath, you can look at the share screen settings, and then you can look at the change quality. I believe it could potentially work.
One sec. Oh yes, stream quality. Oh yes, I have that. What do I select? Source or 1080?
1080. 30
second.
frames.
Yeah, it is 30 frames. Let's go 1080. Oh, I need Discord Nitro to do that?
Ah, okay, that's why. All right.
Yeah, I'm sorry. I would have prepared if I knew about it.
Nah, I didn't know. I didn't know either. We're brand new. So no problem. Just move forward, brother. No worries. Sorry, guys. We can move forward with this.
Okay. Yeah, I'll just try to zoom in a little bit closer so it's more visible.
Yeah.
At least to some extent, yeah. So as of right now, if you take a look, let's say that as the last daily level that was formed, we can see that it's been providing a lot of support on a lot of taps right here. And it also works pretty much to the dollar. It forms the weekly level. Weekly level did not provide a lot of support on the first tap. And this had a thing to do as well with the more of a fundamental analysis, because this range right here, maybe I'm getting a lot, after ourselves, but this, okay, I think I shouldn't talk about this because this was a completely different thing. It's not going to go along with the strategy itself. So let's just skip on this. Let's just consider this one first. We sorry about the brag, identified the levels. And the next thing, what we're looking for is the structure or some kind of a change of the structure. And I've seen your streams. I know that you also work a lot with the change of character and a break of structure. So I don't think I need to explain like this to your subscribers, to your followers, as clearly it's something that you're working on, and clearly it's also important to me. But what I'm trying to see every time in a chart is how this works with the levels that I have. Like, let's say it would be daily, weekly levels, or the monthly levels. If it somehow intersects on the change of character. Let me go down to 1 hourly. And let's work with which one we should select. Let's say we select this first daily level that was formed after the dump. We saw a little bit of a reaction. It has a lot to do with Wyckoff as well, but let's just skip on this and let's just focus whenever the level is getting approached for the first time. We have this daily right here. Let me remove the noise of these other levels. And we see, okay, it approached right here. We had a great reaction to this level. So this also already has me interested in trading this setup on a long, of course, because I could see the daily. We knew the chart. We knew that massive dump, a lot of volume came out. We see the tap. We see the reaction. We understand, okay, we should look for long. And then the next thing that comes out is basically looking for a setup. Where does it come at? Here, it was, super easy. It clearly, like on a little drawback, it tapped exactly to the daily level a few times, like a lot of the times. We see a good support, but it's not always the case. You cannot just, see the reaction to the level and then place your limit order, even though in this case it would have worked. And this is a pretty simple one as an, entry. Let me change this as an entry at the daily, stop loss right here, take profit here. Like really simple trade. It would be a simple trade, but it's not, doesn't always work like this. So what I'm looking at is basically, I guess, the same thing that you are looking at as well sometimes, as the fair value gaps, as the order blocks, and the structure shift on, like, let's say 15-minute or 10-minute, plus the fib levels. Clearly, and I think the only why we're looking at them is that we want to get at least a discounted price. I'm not going to trade anything above 0.5 level, because it means my stop loss is further than the target. So it really provides a bad risk to reward, because the first target is always this one. It's clearly always this one, to get out at least like 20-25%. You can make a case that, okay, you're trading a higher time frame, so your target should be higher because you're trading the daily. But we know it's just not that simple. And first I had the same mindset, but then I realized that the market gives a lot of chances for us to get out at least like somewhat at the first target, and then just goes to grab the liquidity and eventually does a lot of games and only then approaches the level. So in order not to stress it, I would stick with the target on my entry time frame.
Okay. So when we are looking at the euro, can we do also Forex pair for the audience as well?
Yeah, let's try that. Yeah, sure.
Let's talk about, guys, let me know in the chat right now, which pair should we discuss here with Oleg? Jamie Clay says, interesting how even with crypto, the same principles are followed. 100%, my man. Absolutely.
I mean, the algos that are running these markets are very similar, both to crypto, to Forex pairs, to indexes, to everything, because they're all ran by algorithms. And these algorithms are set up by market makers, by central banks, by big players, and just they don't have an option to just enter a trade in a click, It's all algo based. So that's why it follows it pretty much everywhere.
Okay. Yeah, let's talk about gold. Let's talk about gold. I think that's a great alternative here.
Okay, let's talk about something that I don't really understand. That would be interesting. Okay, let's see gold. What is it? XAU to USD, yeah?
Yeah.
Ticker. Okay, which one are you using just for the comfort of it? Because I don't trade gold and
I have a very, very good idea, by the way. What we can do right now, real quick, brother, and this is the last pair we're going to discuss, but I can send you a Zoom link, and then we just do it in Zoom. I think the quality will be better there. Yeah?
okay, let's do that.
All
sure.
right, let's do that. See you. Guys, we're gonna do Zoom real quick, guys. The reason for that is personally because I believe that it's gonna be a little bit better also for you guys to see there. So let's invite our guy to Zoom, and let's see from there. Shout out to Oleg. Gonna be very, very interesting. There we go. All right. He should come anytime soon here. There we go. What's happening, guys? Thank you guys for the support. The support is absolutely real. Maybe in today's stream, if not Monday, we will reach the 10K subscribers. I'm super grateful to have you guys here. Thank you guys so much for being part of our journey. We're trying to improve every single day. Consistently doing the live trading, also the analytics, the education, bringing in guests, and also building out a fantastic, fantastic community. So all in all, looking forward to that. Gonna be an amazing, amazing time here. Let's wait for a guy here to hop on. There we go. What's happening, man? All right, let's give it a try here. I need to give you some, first your sound, brother. Your sound first. And then you can share your screen here. Bronson says, speak, Oleg. Let's talk gold and the news effects. Yep, we're gonna talk about gold here. Frankenstyle, thank you so much for the sub, my man. I appreciate you. Welcome to our stream. We're setting subs up here while we're waiting here for Oleg. Let's see.
Okay, I can hear you. Yeah, I fixed it.
Perfect.
I'm such a newbie with all of these Zoom technologies.
Bro, tell me about it. This is,
I don't use it so often. Such a sociophobe. Yeah, just locked up in my office.
Yeah. All right.
Okay. Let me share the screen.
We are very patient for you, man. We appreciate your value. Appreciate your time here. So do your thing, man. Do your thing.
Thanks a lot. Yeah. Okay, can we see that?
Let's see if it's a little bit. Let's see. Oh, 1 second. Yeah, this is already way sharper. We're getting there. We're getting there. Yeah. Absolutely.
Okay. We should have tested it all before, huh?
I know. You know how we roll here. We like to do it
But-
live. No,
but,
it's pure. It's pure,
Yeah, that only proves that it's not scripted, and we
not
really had
scripted.
not prepared for it.
That's it. Okay, this is already a little bit better. You have a very wide screen, we know that. So that's the reason for your wide angle, but it's already way better. So if you zoom in a little
Okay.
bit, it's gonna be very, very good.
I can maybe, shorten it a little bit. Okay, let's.
Yeah,
How about now? Is it better?
it's better. It's way better. Yeah.
Okay. That's okay. So what? Let's take a look at gold.
Please, yes.
Okay, so again, let's just quickly start with like the monthly levels, something that is the most important, at least to me. And let's see if it actually works, because I really don't know. Maybe it doesn't work on gold. Gold has always been the weirdest asset for me to trade with.
Okay.
And maybe your audience can help a little bit. But let's just, okay, let's just skip the old levels and let's just focus on some levels that we have recently over like the last few years, because I think that's what matters.
Yeah.
First monthly level here. Then we have monthly level here. We have untapped monthly level right here. And yeah.
And how do you know, just to clarify that for the audience already, how do you define a monthly level here?
Basically, we can see, let's say, few candles that just only go up, and then we see a reversal. So at least it happens somewhere. We see 1, 2, 3, 4 green candles in a row, and then we see a starting red candles. And the moment where it shifts, the bodies where they close, whenever the green candles turns into a red one for the next few at least candles, this is what identifies the level.
Yeah.
The closure of the candle before the break, the change of structure.
Yeah.
And this is what identifies it. We have one here, and then we have the last one here. This one could probably make a case for this, but the thing, because it was in one extension, from this extremum to this extremum, I don't really count it. I would count it when we were here at a time, because we would see that. But then whenever it's broken, it really doesn't matter. This one matters because it takes out this monthly level at the same time after this extension. So I mark this one on. And then anything that happens in between this and this, except I guess for this monthly, and we could make a case for this monthly too, because it happened before the extension was actually built. It really doesn't matter. This is not a monthly level, and this is not a monthly level too, because it's within the same extension. And as we know, for the trend, we need at least 4 extremums to form a trend. So I would only stick to this 4, and this one, as it hasn't been tapped yet. So these are the ones that are important. Let me get this one back on. Okay, monthly. Yeah, and this one was already tapped, but let's just keep it for the sake of it.
Sure.
And here, as an extension, after taking out, sorry, I wasn't prepared, so I'm just looking at it at the moment. After taking out this monthly, we only have this one that's significant. And for now, I think this is good with the monthly. Let's go to the weekly, and let's just use, I guess, the last extension on the uptrend that comes from here to here, and the one that we're experiencing right now. So clearly there's a shift. It's been broken. It many times held the support, and now we've taken it. We've closed the weekly, the first one right here, and perhaps we'll close this one as well. But whatever the case, we had the weekly closure, so it's important.
Okay.
And let's go with it. I don't think if it really matters right now to mark out these weekly, because we'll not reach them any time soon, unless something super weird happens. But let's just go with the flow, and we mark out the weekly right here, the weekly right here, which is really important. And let's say the weekly right. I mean, this one goes along with the monthly, so we don't really have to mark it out because it's at clearly at the same level.
Yeah.
So this is first what matters. Then let's identify where is the trend headed on the daily. And clearly the daily we see absolute downtrend. So by marking it out, I don't know if you want me to do that, but just we identify the extremums. And by extremums, I mean what we need to see is that the middle candle, we look at 3 candles. The middle one should have either the lowest point or the highest point to be an extremum. So this is what I'm looking at.
Okay.
In between three candles for extremums. So we see one extremum here. It was taken, so I'm not marking it. This one. We have one extension. Then we have a little bit of a bounce. This high is taken. It really doesn't matter anymore. Another extremum. And then we keep on going with the same thing. We identify extremums. And this clearly shows us that we're in a downtrend. Just as simple as that. Next thing that I normally do, and this is something that, stuck to my TA from very long back ago, is I'm trying to see if the trend is accelerating. And by accelerating, what I mean is the lows are further from one another on the extension of the trend. So we have this low and then this low. We had a move of 5.5%. And then I try to see what was the move of the next lows. We have 5.7%. So we can say that it's accelerating. Slowly, yeah, it's not a significant difference, but it is a difference. So the trend is accelerating. And before we have any reaction that the trend is gonna, turn around, and where we should have it is probably the next monthly. It's something that I may look on. It could always be wrong. It could just turn around right here, but it just doesn't have my interest in it. Same thing we can do is measuring by the highs. It would also give us a little bit of room to see if it's actually accelerating, but I wouldn't pay for it too much attention as to the lows, because in a downtrend, the lows are important. In a uptrend, the highs are important. But as the sake of it, let's just also measure this. And we would see that, you see the highs, they don't act as much. At least here we had a slowdown, but right here we have another, massive move, which is even higher than the first extension. So by this, we can conclude that the trend is clearly bearish. It's clearly downtrend. It has no signs of stopping. So what I'm only interested in is a short on a daily level. And the short, I'm not saying the short as of, of the prices right now, but clearly as we're following the trend, we're only interested in the short. Unless it reaches the monthly level, which is on a hierarchy stronger than any daily extremum. And this is where I would probably look for a long. It could be a swing long, it could be just a semi-swing, or even a scalp on a first tap. This is just something that I would consider. But before that, only shorts.
Right.
Now,
so this is just to clarify it for the audience here. This is just the way of really looking at the bias. What's the stance here? Are we in a bearish or in a bullish bias? And how are all these levels anticipating the current trend?
Yeah, basically just trying. You want to follow with the current, and if you see if the current is going down, why would you try to long it? And then swim against the current. You just go along with it, unless you know that there's something. Whatever, a breach or a shift, whatever it is, then you can change your bias a little bit. But for now, especially when the lows were taken, the really important lows, I think it's, and we see the acceleration of the trend, this is what's most important. Then we basically repeat the same thing on a 4-hourly. We identify the extremums that we see right here with the naked eye. And we also see, with the naked eye, that the trend is accelerating. So it gives us even more, bias to go short. But you don't want to go short, on a breakout level, or you don't want to go short right now because it's just a trend. Even though it would probably be, I don't want to say this, but probably would be better to go short right now than to go long right now because you're following the trend. But if you look at it mathematically, of course, it would be worse too, because it just, it's accelerating to the downside. We didn't see the bounce yet. Why would you do that? But just as a fundamentally and technically, when you follow the trend, you should always do that. And the next thing, what we do, we identify, okay, we want to enter a short. And basically, in between every extremum of this, of each extension, first thing that we want to do, once we see the first bounce happening, we want to see, okay, where do we enter if we trade? Sorry about, I'm getting some messages. Let me close that. Yeah.
So you have found your bias, and now you're looking for potential lower time frame, like confirmations to look for entries there. Correct?
Yeah, because let's say we're entering on a 4-hourly, or let's say our working time frame is a 4-hourly, and then we'll look for an entry on a 1-hourly. First thing that you want to do, if you found an extension, this one, of course, it's way too long to look at, but let's just consider that this has not yet happened, is you draw a fib. and you see the first bounce, before it taps in at least to the 0.5 zone, I have no interest looking at it, because I know that my stop loss should really be at least here. If I'm not gonna, be adjusting along with the trade, if I see some weird thing happening here that signifies that the trend is gonna change, probably, of course, I'll move it, or I'll just, readjust, or even get out of the position before my stop loss gets hit. But before it touches this, no interest. So here, this extension, no trade, clearly, because it never even went there. We go on a next extension, and we keep on looking at the same things. For now, what we have here, because we're trying to find an entry now, right? We have the last extremum as of right here. We could say that we had this extremum, and let's say we saw some signs on the way up here, and it would enter at least at 0.5 to give us interest to find for a trade, but it never happened. So again, no trade. And then we have right now, we can say an extremum, is this candle right here, because clearly the candle on the left of it is higher, and on the right of it is also higher. It has not yet closed. It may close right here, but let's say that this candle closes somewhere here. So we would have this extremum that's completed. And then what we do, again, we look at the 0.5 zone. If we start seeing that the price is moving towards that zone, this gives me an interest already. And what I can clearly see here and right now is a fair value gap that's super, visible and distinguished right here in between this candle and this candle. So it also is in the area that gives me interest, above 0.5. So this is somewhere that I would look for a short. We can also put, the supply zone right here. This would be even a better entry if it comes over this. And this would work on a lower time frame whenever you would identify that the price came right here and it's tapping into these levels already. This is where you go on at least 1 hourly time frame. And there are some specific things that I will be looking right there. Right here, we cannot see what it's going to give, but let's just assume that this will happen. So you just know the logic by which I'm entering the trade. So there are two potential zones that are favorable in here. It's the fair value gap, and this is then a supply zone. We could make a case for a little bit of an order block. I'm not really, I guess the order block in this instance would be the wick of this candle before the first buyout. At least that's what I see to me. So this is shaping up as an area that is potentially good for a short, especially when we have like our order block along with the supply zone, along with 0.62 as like a CC golden pocket, wherever we call it. So this is a cool area to look for it. And let's say the price comes into it and it first taps in fair value gap and it forms a range right there. So a range forming, somewhere at fair value gap, it means that it's pretty much, filling in the imbalances, but also it means that it's getting prepared for the next resistance to be taken. And if it's taken, it's great. If it's taken right away, also pretty good to enter a position. But at the same time, I would probably love to see this more with the tap, getting the liquidity at, coming in my zone, and then only going back down. As you know, just as I think it's very similar to any market. And coming back with the last point as an entry, let's say we see all of this happening right here. We see this, and then we see that the price is approaching the order block. Basically, really similar thing. We just go to the 1 hourly time frame and we look for potential same fair value gaps that appear right here. Let's say that it taps into the order block, it taps into 662 level, and then we see a reaction on 1 hourly or even 15-minute, and we see similar reaction of price approaching it. And then let's say three things that I probably look for is the PPR, and PPR, I guess you know what it is, but just to explain to the traders what it looks like, it's something like this. As we have an approach of green candles, then we have one candle that approaches the level, another one that takes out the liquidity in a form of doji, and then complete engulfing of this candle, at least, especially if it overtakes with the low of this low. This gives me a bias that, okay, on this time frame, I'm looking for a short. Even though I used to before enter right here and right now on the closure, once I see the PPR, having my stop loss right here, and just going for the identifying the take profits after.
Okay.
What I try to do now is a little bit more complex, but it kind of works as a fractal. Whenever you identify this and you see that the next candle forming, and especially if you see another fair value gap right here, and you just measure it as the same thing. You measure your same fib, you work as a fractal, you wait for it to come back down to fill in the imbalance on a lower time frame, and you enter this one. And in this case, you make your stop loss way tighter than you would normally do if you would just enter on a 4-hourly level, just as a fair value gap, because your stop loss must be really at least here, or even better above the extension. But whenever you zoom in and you just go time frame by time frame, looking fractally on the same things, you can eventually come back to like an even 5-minute, and you would see similar things happening. You would identify the same fair value gap, identify the same fib levels, and you'll say, okay, this is my entry. This tightens your stop loss because it should be only about the 15-minute value gap or whatever, like supply zone or something. But it gives you more and more confirmations that at least the first level that it tapped to was strong. It gave a reaction. Then you zoom in on a lower time frame. You see, okay, this level is the fair value gap or supply zone was also really good. And then you just like keep on zooming in until you reach the one that you're comfortable with. And I wouldn't go to like 1 minute, because this would most likely just take your stop loss away and go into your direction. You would probably need to select something to analyze the asset that you're working with and see what would be like the safest stop loss, at least to the risk reward that you're trading, or at least to your win rate that you normally have, because everyone should keep a journal and say, if you've taken 1,000 trades and your risk reward is like 40%, then 1-to-1 risk reward is not good for you. You need at least 1-to-2 risk reward, and then you're profitable.
Right.
So this is just a game of readjustment.
So if we talk about something that you mentioned before already, which is very, very interesting. If you zoom out and come back to the 4-hourly, or you zoom out a little bit more, we talked about, or you talked about volume, right? And if I think about volume, I think about areas of consolidation, or I think about a range, right? And we have the tool we call the fixed range volume profile. I highlighted this many times on the stream. This is something I learned from you, actually. I think... now I'm looking at that area of these areas of consolidation there. Is that something that you can relate to right now?
Yeah, this is a different point. Like, it's all about finding confluences. This is what I'm showing. It's just the very simplest thing that you look for before you enter a trade. And this is just one thing. As long as you can find other things, and it could be even a simple trend line, that you draw, because this is clearly a trend line. And the only correct way, at least in my eyes, I know some people do it differently, but the only correct way to build a solid trend line, I'm not sure about gold itself, because this has a weird structure of the wick and then these things, because I think it goes way more in this line. But the only correct way is from first extremum, we see this extremum, low, next extremum. This is the only correct way to me to draw a trend line in between two extremums. And it would be the same if we talk about let's say the change of structure. We have an extremum here and an extremum right here. So this is also the only way I would draw a trend line. And it could also be one of the confluences. But coming back to your question about the volume area profile, I think this is a super useful tool. And I must give credits, all the credits to Daniel from Chart Champions. At least it was discovered way long ago, but this is where I discovered it myself. I tweaked it a little bit to the way I traded, but this was presented by him. Therefore, I just have to mention it. So if we look into it, I would also say that everything comes with a range, because whenever we have an extension, any kind of extension, and we have extremums, and then let's say 1, 2, 3, 4, and then we would have extremums right here, but because they come within the same extension, they are not called an extremums. And like in a technical way, they are the lowest and the highest points, but whenever they appear within the same extension, this is what forms a range. And I need at least 4 of them. So this would be 1, 2, 3, 4. Oh, sorry, without not counting this one. 1, 2, 3, 4 to call this thing a range already. And this is where this volume profile tool comes in, Because whenever we identify a range, and it could even be identified with the naked eye, like this is a range, clearly, this is a range. We had an extension right here, and then it started, you know, shifting, forming some kind of extremums before it was actually broken. So this, in my eyes, is a clear range.
Yeah.
It started from this extremum and this extremum, and then it formed in within here. So what we are doing with this range, we are measuring the volume that was traded in this range before it was broken, like right before it was broken. And what comes out, what we see within this is that the most amount of volume, because if someone sold, someone should have bought, and if someone bought, someone should have sold. So many trades and a lot of volume was exchanged right here at this level. Sometimes we see some gaps, you know, we see a lot of things where the level is absent as of right here. And this is where people normally put their stop losses, because they understand if price comes in, that gap, it's going to be filled quickly because there were not many trades taken, not much volume. So it would probably keep on going, you know. So if we increase this, and if you're trading in a smaller time frame, you see the gap, it's smart to put your stop loss right here within the gap. I mean, whenever it approaches. But if we talk about finding an entry, this is an actual next point, as this forms as what Daniel calls, and I call right now too, as the naked point of control, as it gives a really strong tap on it as well. So we know that we are in a downtrend. We saw a range. That means that a lot of positions were taken here. And let's consider people who took short positions, probably their entry is right here, right? Most of the people, not all of them, but most of the people, or what the algos do, they acquired the most volume at this point. And other algos, let's say different retail people or whatever traders they were taking longs, they were also right here. So this becomes a very significant level where a lot of people are either underwater or in good profit as the market maker. So if the market maker, if the price comes back up and at least enter to this range, we have the volume area high and volume area low here, which are also important. And in this case, we see it didn't actually happen. But whenever it happens, especially in Bitcoin, and I really, really ask you guys to just go and check out Bitcoin chart with this tool, you'll find just, or maybe if we have a few minutes, I'll show it later on, extreme respect of these levels. Whenever we see the first stop at the naked point of control, almost always it provides some kind of reaction. If we see this kind of forming, yeah, it would probably be taken, and you know, there could be many different things. But on a very first step, especially super high, like high time frame, big ranges, we always see a reaction. And this is what makes, I think, that the most money maker to me. I don't only trade this one little thing, but when it also goes along in a confluence with the fib levels that provide me good risk to reward, or I see good daily levels, or I see this fair value gaps, order blocks, etc. Along with this is a money maker. And this is the stuff that I showed to you many times. And this is something that just algos are protecting. Whenever the price approaches them, there could be many instances why it approaches it. There could be, you know, a lot of liquidity built right in between. You know, there could be some kind of supply zone, then a strong level, a lot of liquidity. So it would probably take that liquidity and it would tap into that level. And whenever that happens, it proves like the super significancy of this one. We did not see it here clearly, but it doesn't always happen.
Yeah.
Just whenever it happens, it gives good results.
So what I noticed is that, for example, you know how what we were doing on YouTube, we're using the SMC concepts mainly in combination with price action and volume. And whenever we talk about the point of control, what I try to use it for is, rather than use the point of control as the actual, you know, line, I'd like to look for order blocks or areas of supply in that particular range. And most of the time, like 80% of the time, the point of control is actually pointing towards the right order block. So that's something I really like, is that we can actually leverage the point of control really well to determine which order block could potentially be the area where we should leverage from, right? Eventually. So
yeah, I mean, it's all about confluence. If the point of control, the naked point of control, is along with your order block or supply zone or whatever it is that you found, and it's right there, then it just gives you the double confluence that this should be a better trade, because it provides with even like the volume section of it. Yeah. And let's just quickly come back, because I really want to show it. This is something that I showed to a lot of people. Okay, let me just remove this. And let's go to the daily chart. And we can identify right away the strongest, you know, range, let's say. We had a range here as the, you know, let's say the bullish range. It probably started right here and it ended also right here, right? So we have these extremums along, they just follow kind of, they're shaping as an uptrend, then they go in a downtrend. But if you zoom out, you see this is the first range. So let's just consider this range,
yeah,
and then this range right here. So this range also started from here, and it kind of ended, I guess, on this candle, on this super manipulative candle.
right.
So let's just try to see what happens. We measure this with this tool. We identify our point of control. Let's just put it right here. Okay, naked point of control. And let's see what happened on the very first tap of this point of control. Let's just go, boom. Why does that happen? Like, why do we see such a reaction? And it's not a coincidence. At first glance, it may look like a coincidence, but it just provides with a huge volume right here. And it gives a reaction, which is super immediate right away.
Wow.
Of, what was it like?
Can you zoom in a little
yeah.
bit? Can you zoom in a little bit to that wick there?
Yeah, let's zoom in completely to the wick. Basically to the dollar. Like the difference of it.
And this is
was,
Bitcoin, right, guys? This is Bitcoin.
$30.
Keep that in mind.
Yeah,
the most volatile asset on the market.
Yeah, manipulative and it gives a bounce of 40%, of 40 fucking percent. Like, and this is just the magic of it. Of course, we're looking at the daily. I really urge everyone to look and test out the ranges and see what happens within the ranges. And let's see again, let's see this one, similar thing. It wasn't as great as it is, but if you go on a lower time frames, you would see the reactions happening.
Yeah,
right here. Of course, it broke this level. There are many reasons why it did that right there. But even if we go to, let's go to like 15 minutes, it may be a little bit hard to go back to this because of the, yeah, it should be.
okay, we have 10 minutes, my man. We have 10 minutes left.
Okay, then this will be a homework for for everyone to do. And you can also check out like 1 hourly ranges, 4 hourly ranges. And whenever you see the taps into similar ranges as of this range right here, whenever you see that, it doesn't always happen. But when the price comes there, it provides some kind of a reaction. So, and for now, we can also mark out these levels on Bitcoin. And these were not touched, but we see a really strong range before the next leg down. So what do you think is going to happen when the price goes for it? Most likely some kind of a reaction will follow if the price comes back there.
Yeah. That's some amazing stuff, man. Thank you for sharing.
Yeah, it's some experience that came with the years, and I'm happy to share it with everyone. Let's beat the fucking manipulators, the market makers, and let's make some money with it.
I love it. I love it.
Yeah. Keep in mind, we'll have to readjust at some point, and then this may not work, you know, later on. But as long as it works for now, I'm happy with it.
Absolutely, absolutely. Okay, let's go back. Let's go back to the screen, my man. Let's have a closure here. Thank you so much. Appreciate it.
Okay, thank you for having me. Yes.
Where's the... There we go. All right, ladies and gentlemen, this was Oleg. Oleg, where can people find you right now? I know you're not on YouTube yet. You're planning to come on YouTube. We have talked about this already for a while. If you are on YouTube, we're going to get you there. We're going to get you some subs. We're going to get you some viewers. Because, of course, your skills are, you know, 100% on point. And I have to give a lot of credit to you, of course, over the last couple of years as well. So where can people find you right now? Do we have some sort of community somewhere where people can join you? If they have any questions related to crypto?
Right now, people can find me in your Discord channel. I think this is the number one. The number two, they can find me on Instagram, even though I'm not really active on social media. And my friends think that I'm dead because I hadn't posted anything within 2 years. But I do speak there, like with the direct messages and stuff.
Yeah.
And the last thing, I do have a little community. It's like a more of a private community that's based only on crypto. And this is where we share knowledge, we trade, we just, you know, we do a lot of stuff. It's really small. It's like only 30 people.
Yeah.
Again, it's led by me. I share some of my own thoughts on the market. I share my investment portfolio, only crypto based, basically what things I'm buying. There's some things about ICOs that we do because we have a lot of things where we can enter way earlier on pre-sales or seed rounds because I do have some access to it. And that's why this community also, I don't know if this will be an advertisement or not, because I don't want to
100%.
Okay.
All good.
Okay. Yeah, we have this community again, really small one, only 30 people, and it's not really active again, I must say. But I share a lot of things, and there are a lot of Excel files and stuff. It's one-time entry fee, and if someone is interested, let me know. But we only take pure savages and degens who are in crypto 24/7.
I'm definitely a degen. That's why I'm there, man. Okay, I'll put the link in the description.
Right.
All right, brother. Thank you so much for being here, helping out the community. It's great to see a little bit of a different approach as well from somebody else, and to see if we can highlight our perspective there as well, man. Thank you so much. Would love to see you anytime soon again.
Yes.
All right.
Thanks for having me. Cheers, guys. Good luck. Good luck. Bye.
See you, man. Bye-bye. Yes, ladies and gentlemen. Our man. That was our man right there. Our one and only Oleg right here. Absolutely fantastic. It's great to have him on the chart. Sometimes it's very, very great. I love this guy. We've been trading a lot together already, way before we started YouTube. So it's great to have the opportunity right now, and also to bring in some guests here on the show. And because we're almost at the 5 figures, I can start reaching out to some other guys as well, and maybe get some more collabs done. Right? That will be fantastic for the community, and I hope we can learn here and that we can highlight our perspective here. Like I said, we're doing everything, from the get-go, so we are not really always prepared in terms of, high quality charts and so on and so on. But I like the fact that we can just do it and throw whatever comes in our mind here. Okay? Let's keep it as transparent and honest as possible, and I do really preach that. But guys, thank you guys so much for sticking on the stream. Let's continue with the chart setups here. And actually start seeing if we can still look for some opportunities to see what actually happened here. Gold has been dropping, guys. Gold has been dropping. Let's continue the way here. We are coming down. We're going to bring in more guests later on, guys. Absolutely looking forward to that moment here. Also, guys, keep in mind, I'm not sure if we're going to make it this stream, but 70 people left. 70 people left, and then we are, we finally made it. We can be acknowledged here on YouTube. All right. Looking forward to that. So let's go into gold here. Okay, let's go talk about gold real quick. All right, so we have the chart here for gold right now. We came back down a little bit further. We're actually entering this zone. We are actually entering this very, very important zone here. It's at the 70.5. It's a 1633 right there, 1633. We are entering that zone, and this is something that I was personally waiting for a significant amount of time here. We are already where they're already for a significant amount of time. This is already this is already for the last 9 days here. It was 9 days ago pretty much or 7 days ago until we broke these lows here, took out these lows. So this is the moment where I will start looking for potential longs for gold right now. I do believe that this could be a short-term bounce, or at least a short-term reaction from that area, just because this is a higher time frame area of support here. And I know that because the 62% and the 50% were highly confluential here. All right, we had this support here, resistance, support, resistance right here. Then we had the 62, support, 4-5 times support, until we finally broke down right now and entering potentially the 17.5 that is aligning here with that 3 daily order block. So I'm really looking at this area right there, and I think gold is one of the longs here, and I think this is going to happen very soon. And I'm definitely I'm super interested in potentially looking at gold and potentially looking at longing gold from this range. Okay, I want to see what the initial reaction is once we are tapping into that zone. But from that moment, I really, really like that. Really like what's happening, right? Okay. Elementus says, how can I prevent myself to gamble at day trading? Gambling, man. This is a killer right there. So yeah, it's just understanding your strategy, my man. Making sure you don't, leverage the FOMO. You get rid of the FOMO right there. And you make sure that you're sticking with the same strategy for at least 30, 40 trades. And this is up to you, man. This is up to you. Can you do that? Can you handle that? That's what we're looking for here. Also, do not risk that much until you got this. Trash Woodshop says, I like the viewers like ratio. Amazing. Thank you so much, my brother. The Euro Swiss franc is about approaching the 5-minute OB. Okay. Let's have a look at the Euro. The Euro index first. Aha. Okay. Let's have a look at the Euro against Swiss franc. I like the reaction here. Okay, this is very, very interesting reaction so far. I really like what I see here for the Euro against the Swiss franc here. Looking very, very good. Also, same thing as what we just explained with Oleg here. What do we see here? Again, we're seeing this beautiful range here, this beautiful area of consolidation here. This is what exactly can be leveraged as well. So I do think we're gonna form at least some sort of resistance from that particular range right there. Okay. So the fact that the Euro is right there now we could look at potential Euro pairs right here. So this one is invalidated. The Euro Canadian dollar is not looking that fantastic right there. The Euro Swiss franc actually looking very, very good. Let's wait for the lower low and look for a retracement right there. The Euro against the New Zealand dollar. Looking good, looking good. Okay, we're coming close to entries here. And then the Euro against the US dollar as well. Okay, that's fantastic. We'll look at some entries here very soon. For both the Euro Swiss franc and the Euro USD. In terms of the USD CAD, this is quite interesting. We came back down. Swing high to swing low. Right here. And we tapped into the 62% and then took off from there. Okay, so we did not fill up all the inefficiency right there. So this was the area where we placed our limit order right there for the USD CAD. But we did not manage to get there completely down for that scalping opportunity. But look at that range, man. Look at that initial pump here right upwards right there. Very interesting. Very, very good setup right there. However, normally I would like to see the imbalance getting filled right there. Tapping into this 5-minute order block. In combination with the 70.5 and the 79%. So that was something that would have been nice. That would have been really nice here. The other one that we have is of course the dollar index. The dollar index is pumping right now consistently here. We're just keep moving up here. The only thing that we're looking for is any retracement right now. Okay. What I see here is a super rally base rally. And when the moment we come back to our base, we can start thinking about a potential opportunities right there. Okay, so this is one of them that I really, really like. So this is definitely one. So even for the dollar index right now, coming very, very closely, that's in range where we should start looking at. Okay, the US dollar against the or potential trades like GU. Let's have a look at GU here as well. I think the GU could definitely be one of them. If you like that I bring on some more guests to the show, let me know. Drop a W in the chat, because I think it's time right now to improve and to get more guests on the show and make it way more interactive there. We're getting there, guys. We're building. It's happening right now. We are coming closer and closer. So yes, British pound against the dollar here is potentially one of these trade setups that we're currently looking at. But that's very nice, very interesting. Filling up the inefficiency right there. Very good. Okay, we have still some news coming out right now. Of course, the dollar, very, very important again. It's a little bit different here than what we saw last time. Oh, again, we have Jerome Powell speaking in 2 hours from now. So, in my opinion, guys, we're gonna cover this up here. We're gonna make it a long, long stream today. Okay? We're gonna be prepared for everything. We're gonna get ready here. So this could be the moment indeed. Indeed, but like a lot of you guys are saying, that gold can finally start making a move today. I do think that could potentially be the case here. Okay? Gold potentially could finally make a move to the upside, in my opinion. I think that's definitely the moment here. If we wick down towards this range, we are at a perfect momentum here. Perfect spot here. To look for that setup here. Coming into this 3-day order block. Tapping into the 70.5. While the news is entering this zone. I really, really do like that. And I really like to see that. The fact that we came back all the way down towards this area after taking out these lows here. I do like this zone here. This particular level. Right there. This particular candle right there. If you zoom in on the daily. Let's see if we can find a little bit more of a clear zone here. Yeah, it's the same setup. The same range there. Yeah. So this is exactly what we're looking for. I truly believe that gold is now the moment for to work out for, to look at today. Especially once we are having Jerome Powell speaking. Okay, so it's a little bit late, I know that. But we can make a really good trade on gold here. Because these are the moments where we can wait for... You have to wait for these moments a really, really, really significant amount of time. Right? The reason why is because we haven't touched this zone in literally 2 years, okay? 2.5 years almost. Okay, 2 years. 2 years. So we came back into that area here, 70.5 pip. We have taken out all that liquidity here already. Taken out these lows here. We have seen only bearish candles right now. We're tapping into the 70.5. And like I said one more time, before we move to other setups, I do like it more because even the 62 was very well respected here. The 62% was very, very well respected. And the equilibrium was very well respected. So right now we are entering an order block in combination with the highly confluential area of demand, which is the 70.5 and the 79%. This order block is right there in the middle. We are entering this very, very close while Jerome is going to speak in around 2 hours from now. So hey, looking very good. Looking very, very nice here. Blurberry says, can you give me some feedback on my analysis on Euro GBP? I placed it on the Forex setup in Discord. Of course. Of course, of course. Absolutely. Forex setups. Let's have a look. Let's have a look, Barisha. Please let me know which one you're looking for. And let me know at all the guys. Guys, if you are in the community here, you can look at all the trading ideas from our verified SMC traders as well. Okay? You will learn a lot from it. Constantly are shared every single time. So you can always look for trading ideas. Always boom, boom. Trading ideas, trading ideas, trading ideas. This is what you're looking for. Bear to be, okay. Let's see. There we go. Okay, you're looking to short Euro British Pound from 88.956. Okay, let me check. The British pound is really doing bad today. It's going really bad today. 3% here today. That's significant for the British pound currency index. Wow, it's actually catastrophic, guys. The PMI came out very bad, and it had just a massive reaction. Okay. So wow, the British pound is looking extremely weak here. So let's go over the British pound against the euro against the British pound here. Wow. Okay. $88.956, right? Okay, let me check your analysis here. We look at the 3-minute, right? Well, I think that there is not really a way of looking at any particular shorts at the moment for the euro against the British pound here. I definitely we can potentially short-term come down here. I agree on that one. Like, we can definitely come back down here, but therefore we have to look at the euro index. Why? Because the euro is the dominating pair. Okay. The euro is the dominating pair we're looking for. So, yes, in terms of the euro right now, we are entering that area of supply here. Right? We mitigated that zone for the second time. And we see the reaction right now. So, yes, I do agree that there is downside potential here. We create a lower low, can come back up, come back down here. I agree on that one. So, that's correct. Now, go back to the Euro GBP here. Thank you for the sub, my man. You are part of the first 10,000 subscribers. Welcome. Thank you so much for being here and being part of our community. Like that video, guys. Would highly appreciate that. Because we're making moves here. We are making moves here. 4,000 members in our Discord. That's why I do not sell a course. Because I believe in the platform. I believe in the coaching part. I think coaching is always way better than, you know, a particular course right there. Because it's personalized. Like, a strategy is not the only way you think about or deal with. A strategy is not the only way. It's about mindset. It's about responsibility towards somebody else, right? All of these different factors are coming into play when trading. And not just a strategy. So therefore, right now at this current stage, I'm not interested in developing some sort of course whatsoever. I think a community is way more fun, way more exciting, and therefore way more beneficial and rewarding as well. But anyways, man, to come back to your chart setup here, okay? Because what I see here is that we saw that area at 88.956. But we already went up higher here. And I think that we're just starting to accumulate here and come back up right now. So what we're going to see already for the euro right now is with such a weak British pound, right? So weak. Literally 3% is a lot. Look at that. It's really significant here. Okay? Even if the euro would come down right now, the British pound is so weak right now at this particular moment that even that will not affect the price of the euro or of the euro British pound here. So I think the only way right now for the euro against the British pound here is up. Okay? So this is definitely something that you should take into consideration. With such a weak British pound, it seems that there is no stopping right now at this particular moment. And you can definitely see the parabolic reaction right there. And no stopping, no signs of weakness whatsoever. So the only thing that I would potentially look for on the lower time frame is the continuation. the continuation of a trend here for euro against the British pound. Okay, this is what we're looking for. So yeah, I thank you for sharing, my man. But my suggestion is look at the currency indices and to look for a reaction right there. Can you look at the USD Swiss franc? Yes, absolutely. Koen says euro and New Zealand dollar looks good. Okay. US dollar against Swiss franc. Okay. Well, the DXY is same thing right now. We have news coming out for the Swiss franc, by the way. We have news coming out for the Swiss franc, I believe, in 30 minutes, 25 minutes from now. SNB chairman Thomas Jordan is speaking. This can have an influence on the Swiss franc right there, okay? And on gold, by the way. So take that in consideration, okay? Gold is a matter of 2 hours. Once we're gonna look for that speech live from Jerome Powell in around 2 hours from now. It's gonna be a very long stream. We are gonna talk about gold, and I think gold is the setup we're looking for. And I'm gonna fully focus on, okay? Because I think that gold is the actual trade opportunity of tonight. I mean, the big trade opportunity of tonight. Okay? This is definitely what I'm looking for. So I will explain exactly what we're gonna do here for gold. Going all the way to the lower time frame. After we were mitigated this area right here. Alright? Gonna be very, very interesting. So far, by the way, liquidity underneath. So, potential, more downside potential. But let's talk about the US dollar against the Swiss franc. Yeah, okay. Let's clean it up here. Let's look at the currency index here first. Currency index looks very strong. Dollar looks very, very strong. No signs of weakness whatsoever. We have these ranges right here, even on the 15-minute, if you see what I mean. We have that rally-based rally. We have that nice area right here, that nice, beautiful candle here. That bullish, bearish, bullish candle. We came back up into this range. We created this low, we created that low on the 5-minute, if you know what I mean, right here. So this is the swing low right there. We have not created a low since. This is the swing low, this is the swing high. And right now, this is the 50%. This is the equilibrium. This is the candle right here we're looking for. Right, this is the area of supply here. This particular candle. So if you tap into that zone, I want to see a short reaction from that zone. So the US dollar Swiss franc right now is looking significant right here. So I do think that this area, let's go to the lower time frame right now. This is still the range. So the 30-minute candle, this is still the range right here. That is unmitigated. Why? This is that area. We came here, we dropped, we based, we rallied. We came back down here. So this is the zone that I'm looking for that is aligning with the dollar index here. If we come back down here right now, then that is exactly the area where we can look for here. One more time. Okay? So this is the scalp trade. Okay? This is a scalp trade for potentially very, very soon. Okay? That can happen in 15 minutes, 30 minutes. Let's see. Let's set an alert here as well. Alert is set. Now let's go to an actual, higher time frame area where we can start looking for. Okay? Okay, let's see. This is the daily level. This was the first big impulse. It's so beautiful, guys. If you understand market structure here. Okay, let's remove this alert. Let's set it ready right now. But this is so beautiful. Okay? Let me show you. This was a significant break of structure here. Okay? This is what we saw here. We saw that break of structure to the downside. This was that whole area of consolidation. What happened here? We created a higher high. Finally created a higher high here. So this was the range where we were looking from. This was the actual area where we broke the highs, right? This was nice, but we were just consolidating here. We broke it. This was like a head and shoulders right now. As clean as it, or inverted head and shoulders, as clean as it can get here. And a retest. Actually perfect on the daily. But we saw this zone here. So we draw the Fibonacci from this swing high, swing low to this swing high here. So now we have the zone here. Do we see an area here? Do we see an area of consolidation, an order block here that you guys like? I see one at the 62 here. Okay. Right into this area. I see one underneath that zone. Right here. So what happened here? Knowing that we broke structure to the upside, we had a beautiful, beautiful change of character to the upside here. An internal one, right there. Right? We have the imbalance sitting there. Above that range. We have that area of imbalance sitting underneath that range. So what do we see here? This is a beautiful, beautiful order block. I really, really like what I see there. So I would potentially look for a trade right there in that range, targeting new highs. Right? Especially around these ranges right here. So we failed to break to that zone. And we ended up underneath that zone. At the 88.8. Okay? So that can happen. The first initial reaction was good. That's why we have that scalping opportunity here. Why do we like that so much? Because we saw that initial reaction here in that zone. And then we had to add an amazing break. So let's say you come back down here for the dollar. You tap into the zone. Then you can start looking for these scalping opportunities here. And even if you smash through it, you have found the trade setups you're looking for. Right? But eventually we came back down to this range right here. We smashed to this zone. Eventually, same thing happened into this order block. What do we see here? Again, the same initial reaction. We tapped into that zone and we saw that pump. Right? We saw that initial reaction. Keep in mind, this is on the daily, guys. So this is already 3 days of bullish behavior right there. Okay, this is also 3 days. Came back down and then we came back down again. We tapped into that zone. We mitigated this area. And from this moment, we started to launch up. So we know that from this change of character here, from this actual change of character, we saw a change in trend. And this higher low on the higher time frame eventually confirmed our change of trend. So now we have confirmed that. What are we waiting for? We're waiting for a new higher high. That's our higher high. Okay? So what happens here? Consolidating. Consolidation. Taking out liquidity. Making the actual move. All these stop losses were taken here. Aggressively. We came back down. We tapped into that zone. Why into that area? Because of this zone right here. We saw this area. I think it's an 8-hour, 4-hour order block right there. We filled up that imbalance here. One more time. And we took off from there. So first we took out the liquidity above. Then we came back to tap into that order block. And then we took off from there. So now we have a complete change of trend, right? Completely. We created a change of character. We tapped to the zone, started to consolidate, took out the liquidity, came back into the zone, and now we are now we have confirmed our uptrend right here. This is what we're looking for. So now we can start zooming in. Now we have actually can zoom in looking at the time frames right here. And we went up from there. So eventually we came back on all the way to the area where we are right now. Right? And that's just an amazing way of looking at the market and looking at market structure and leveraging market structure to look for opportunities right there. So that's the areas where we are right now. So what's happening right now? Let's go to the daily one more time. So we saw this beautiful area, this beautiful range here. What did we learn from Oleg? You have this area of consolidation. We have this order block here. We have this point of control here. We should highlight that for the future. Right there. Why? Because we have that beautiful strong area of consolidation here. So if we at some point come back down here, we have this marked out. We have that marked out and we can start looking for these particular ranges right there. So what do we see right now? Actually, if you go on the lower time frame, it has been very choppy here. Very, very choppy. Right? So we have created a lower low, but then we've created a lower high here. From this moment, we created a lower low. We created a lower high here. We have created again a lower low. And now we have created a lower high here. But now, we have not created a lower low. So that's interesting. We have constantly created a lower low. Lower low, lower low, lower low, lower low. Higher low. That's interesting. So should you look for shorts now? Not really, right? We have created a higher low here. But this is the area we're looking for, right? Now we are here. And we're looking for it to break these trend lines here. So what do we see on the 1 hourly? In my opinion, here we see this again. Break of structure to the downside, change of character to the upside. Okay, we're getting there. We're getting there. We're coming very close right now. What happened here? Another break of structure to the downside. Change of character to the upside. Fibonacci, swing high to swing low. What did we see? We tapped into the equilibrium. Right there. You see that line here? This is the equilibrium. Exactly. And we took off from there. Created a higher high again. Same concept. Equilibrium again. Right here. Look at that. Again. Higher high again. Same thing. Equilibrium. We keep going. We keep going again. Moved forward here. And now we took off. Okay. So what do we see right now? Now we see again the same reaction. Consolidation. Expansion. Retracement. Consolidation, expansion, retracement right here. So what do we see? This is the point of control here. Let's mark this down. Does it align with an order block? I think this is definitely an order block. Absolutely. So now we have this zone here. Now we can see, wow, beautiful reaction here. We have the imbalance sitting here. So would you look for longs right now? Or would you look for shorts right now? When you look at the higher time frame? So the answer to the question is potentially this right here. We want to break these highs. We are back. Okay. So we want to create these highs. We want to break these highs right here. Tap into that zone. Come back down. Mitigate that order. And then move forward from there. So this could be a great long opportunity right now. For us. The moment we break these highs here. And we tap into that zone. We will find potentially a very significant trade here. A beautiful trade opportunity. So this is what we're looking for. If we break these highs, we come back down and we will find our trade setup. Okay, I hope that answers your question. On the lower time frame, however, for now, okay, we can still look for a scalp opportunity, right? We are extremely bullish here for the dollar index. So we can still look for a scalp opportunity today's stream. Same for the US dollar against Swiss franc here. So what are we looking for? Swing low to swing high. Tapping into this zone. 50% equilibrium. Keep in mind, we've talked about this one. Do we see a nice area of demand here? Yes, a rally. Base. Rally. Hey, interesting, man. Interesting. We are extremely bullish. The dollar index is extremely bullish. Okay. There we go. 50% equilibrium. Coming closer here. Coming closer here. Okay. The other one is a potential trade opportunity is on the 10-minute, I believe. Is this order block right there? I believe, oh, it's a 5-minute as well. Right here. Okay. So based on the DXY here, we will look for an opportunity. We have that imbalance to be filled here. And we can start looking for setups right now. Let's go to the lower time frame of the dollar index here right now. We broke structure to the downside, came up, broke structure to the upside here. Downside, upside. Still bullish on the lower time frames. Arrows like these. 5 minute. Good align with the US dollar Swiss franc. So I would potentially long here. Keep in mind we have news coming out in 8 minutes for the Swiss franc here. We're gonna see what the news will bring for us. Willie says, thank you for getting so in depth. Appreciate you. Thank you. We need 60 more guys to sub today's stream. We already got around 60 already in today's stream. We need 60 more to hit the 10 Gs right there. All right, invite your friends, invite the people around you. Make some noise. Let's make this happen. Today's day would be the fantastic weekly closure right there. And a huge milestone. A huge milestone for us as a community. Khan says there is signal in Discord. Yeah, kind of, yeah. We have the Manta charts indeed. We have the Manta charts where we place the setups here. Bro, do you think the news will have that much impact? Yeah. It can have. It can definitely have. For the Swiss franc, yes. We have 6 minutes to go here. I'm doing. Thank you so much, my man. Welcome to the community here, my friend. It's a Friday. People are tuning off. People are taking it easy with trading here. However, we are still crushing it. We're gonna wait for our Uncle Jerome to have a nice conversation again. Okay? Yeah, Khan, that's very good, Meme. Thank you for sharing. It's not directly signals, and the reason why. You can say it's a signal, but the reason why, we explain why, okay? It's not just a signal. A signal is buy here, sell here. We don't do that. We explain also why we think that this could happen and what the actually, you know, analysis is, what the reason is for our trade setups. So people can actually learn from it as well. In the meantime, what is our community sharing right now? I'm very, very curious here.
I go into my trading account and I say, hey, let's talk, you know, $30,000. I'm thinking like, hey, this is somebody I can really, maybe I can learn something. And shit, I open my chart. Wow. And like, she went through some, I said, so, you know, if you were going to take a trade.
Look at that, guys.
Tell me how you.
People are writing down, learning in our coaching platform right there. You can just join the voice chat every single day. We have our coach, James. He's the head of coaching in our community here. He's one of our team members.
I'm thinking you got some professional.
It's absolutely amazing. Absolutely fantastic. What can I say? It's just great. It's just fantastic. We're building something beautiful here. Shout out to James. Shout out to our man James. We are building the best, most accurate, most accomplished, limitless team in trading. You know, trading community out there. Trust me. That's no joke. Willie says, is it one-time fee for life? Yes. We have no monthly subscription. Alex says James. Ari says James is a legend. Van says Oops says Jay is the GOAT. Yep. See if this is King James. That's what we're doing here. That's why I say I do not sell a course. Why? Because I believe in coaching. I believe in personalized coaching or in group coaching right there where people can listen, can write down their notes. They're feeling that they're a part of a community, part of a family that is learning, sharing, laughing, enjoying. And trading can be quite a lonely job. So it's way more fun, way more exciting than, a stupid course, in my opinion. Okay? I'm not saying I will never make or never ever create a course. I'm just saying I think that a community is way more valuable and way more rewarding. Rewarding and fun. Exciting and bonding as well. Okay, so the US dollar Swiss franc, let's keep a close eye on this one. I wanna mitigate this order block here. I wanna mitigate this order block, and if we mitigate the zone, I'm looking for a limit order right there. I'm looking for a limit order right there. Yeah. Oh man, I'm so happy, guys. You have no idea. I'm so happy with the community. Like, I've created new friends. New friends. I talk with them every day. From all over the world. I'm on private voice message or calls with them, talking about life, talking about whatever. And it's weird because it's online, right? It's kind of weird. It's kind of strange for me. I never really was that online person. I always said to myself, I'm never gonna make a YouTube account. I always told it myself. It's not for me. You know? But then I was like, you know what? Let's just do it. And boom. 2 months later, we're here. New friends. People that I talk with every single day. Hey brother, how's your day? Had a good sleep? What did you look? What did you do today? How is your daughter? How is your son? Blah, blah. Whatever it is, right? Talking about life, talking about cars, talking about whatever. Things that we like. Interests. And trading. That's the beauty of communities here. And, yeah. Honestly, for me, my personal life here, the fact that we were able to create this in such a short amount of time and create the bonding as well, has totally changed my view on the internet, you know? Because I was always that guy, internet, like, it's nice, it's good to make money. Always knew that, always understood that, always did that. But in terms of friendships, I was like, real friends, you have to know them in real life, blah, blah. No, man. You can really bond with somebody. So it's really crazy. Okay, so this is the USD Swiss franc. We take that into consideration for soon. We have this trade set up. So let's set that one apart right now. Let's make sure that we put our alerts there. Once we are getting there, we can leverage that. Okay? The news is coming out here anytime. Okay? Keep in mind we're gonna see what's happening here. I believe the current interest rate for the Swiss franc is minus something. Okay? So I think they're gonna change it up right now. So if we can see what's gonna happen there, it's gonna get very interesting. So let's keep a close eye on the Swiss franc here. But I think it will not be good. I think it will be not as good as for the dollar here. But let's see. Let's see what we can expect here. Okay? So let's write this one down here. Let's put an alert there. Okay, our alert is set. Once we are getting there, we're looking to potentially long this, okay? Okay, let's look at the euro. We saw that connection here. If you create these lows here, this is the final low. So let me see. Came back, tapped to the zone. So higher high, lower low. There we go. Higher high. Lower low. Swing high, swing low. 50% equilibrium. That's the area where we bounced from. So if we create a lower low, either here or on the lower time frame, right here, be somewhere around this range, we can start looking for short opportunities, right? Is it true that the DXY has a negative correlation with gold? Yes. But sometimes the gold is actually decoupling randomly. And that has to do with oil. Okay? So again, there is like a triangle here between gold, dollar index, and oil. However, there is definitely a negative correlation. Saksam says, today I saw flying over Bali video on YouTube. Such a beautiful place. You are welcome to join, my man. Everyone is welcome to join Bali. If you are in Bali right now, shout out. Shout me out and we meet up. No joke. I would love to do that. If you are in Bali or you're planning to go to Bali, hit me up, okay? So in terms of the Australian dollar, I looked to short here. Okay, of course. This was the high. So yeah, if you guys can help her out, I would highly appreciate it. Okay, so we are waiting for the news of Jerome Powell. Jerome Powell is going to speak in around about 1 hour from now. So what we're going to do is we're going to wait for Jerome Powell until the moment we're going to talk. Help you guys out with all the particular setups you guys are looking at right now. So if you guys are looking at any setup whatsoever, please let me know which one you want me to look at. So we can just do the top-down analysis for you guys completely. So we can have a full discussion about, you know, the potential outcome there, the way we view the market, and, you know, in general. So we can make sure that, yeah, we can actually do some education as well at the same time right now until Jerome Powell speaks. In the meantime, the main trading pair I'm currently looking at is, of course, gold. The reason why is, like I said before on stream, is exactly because of this area of demand here. This area of demand is super interesting. Right there. So this area of demand is very, very interesting right now because everything that's happening in here is going to be crucial for us to take consideration. This is the swing low to swing high right there. This is exactly the moment where we created the low, where we created the high, where we eventually created the, you know, the change character to the downside, change character to the upside right there, and eventually just took off from there. This was 2 years ago. Eventually, we created a beautiful double top here. Already a significant sign of a potential reversal. We have created low, we have taken out all that liquidity underneath that area, and even haven't taken out all the liquidity underneath this area right. So now we have taken out the majority of the liquidity here. There's an order block that's really interesting. And the main interested order block I'm looking at is, of course, this one. It's the 3-day candle right now. And we are really, really significantly down right now. We can also use the RSI divergence. Sometimes I use that on the higher time frame. Let me see if I can look it up right here. Zoom out a little bit. There we go. We have the RSI divergence on the 3-daily. Okay, I normally don't really use the RSI divergence. However, only for higher time frames. So only for time frames such as the daily, the 3-daily, you know, these type of time frames right there. And what do we see here? Well, actually, we're seeing something very interesting. We're seeing something that we call a bullish divergence. So this is a equal higher, actually a lower, little bit of a higher low here. But if you compare that to the price, we're seeing something else here. We're seeing a definite lower low. You see that? This is what we call a bullish divergence, right? So whenever we target the bullish divergence, same thing as here. We saw an uptrend right here, right? On the RSI. Okay, we are live on YouTube again. I think we are live here on YouTube again. Let me see. Let me see. Okay, we're live on YouTube again. Anyways, we can still do it right here. Okay, we're live on YouTube again. Anyways, we can still there we go. Let me cut this out as well. Oh, that's interesting actually. I can stream on Discord while also streaming on YouTube. Okay, that's dope. That's really, really nice. Okay. That's actually amazing. I didn't know that. So I can stream on Discord and on YouTube at the same time. Okay, I learned something today. You see, every negative has a positive right there. So that's quite interesting. Okay? Fantastic, fantastic. Let me do some settings real quick so we can continue here. You guys can stay in the YouTube or in the Discord as well if you guys want to. That's actually really nice. Permissions, everyone. Okay. I just created some settings here so you guys cannot speak at this particular moment. There we go. Yeah, we're working again. We are live again. Okay. Interesting. We learned something again. That's fantastic. Okay. You guys can hear me in the Discord right now. Let me know real quick. Because I changed some settings here. I do think so. Okay, perfect. Okay, let's continue our journey. I learned something today, guys. Fantastic. We can stream in Discord and YouTube at the same time. Exactly what we're looking for. Okay. So what we're seeing here on the 3 daily is something that I like to use or tend to use for the higher time frame. And what I mainly look for right now is the actual zones here. I still heard somebody here. Let me see. Okay, fine. All right. So we have this bullish divergence here on the RSI and we're tapping into this major order block. So whenever Jerome Powell is going to speak today, the first thing that I want to see is us tapping into that order block and see what the initial response is. Okay, so let's go to the 4 hourly here. Your live link on Discord because there is not going to be a notification. Remove this indeed. That are in right now. Let's go. Okay. So this is what we're looking for. When Jerome Powell is going to speak today, this is exactly the moment when we're going to start looking for, that retracement. And I'm really, I was looking for this area of demand for a significant amount of time. I still hear not everything good. Okay. Can one of you guys try to speak? I just want to test it out real quick also on Discord here.
Thank you.
Yeah.
Okay, it's still possible. Okay, guys. Thank you. Please try to not speak here. Unless you have a question, just write it down. I will definitely answer your questions also in Discord at the same time. So I appreciate that. Thank you so much. And let's continue our journey. So yes, when Jerome Powell is going to speak today, this is exactly what we are looking for. So that's the beauty of what we're looking for here right now. We are looking to actually come back into that area. And what we want to see here on the lower time frame, we want to see that initial reaction here, such as just a significant higher high. So if you come back down right now, we tap into that zone here and we create that higher high, then this is definitely the moment for the retracement when I will start looking for any long setups whatsoever because I'm looking for the confirmation. This is what I'm looking for right now. And I do think it will be super beneficial right here if we are actually coming back down, tapping into that zone, create a higher high, come back up, come back down, and then take our position right there. I think that's exactly what we are looking for right here. So gold is going to be super interesting for when Jerome Powell is going to speak today. And I'll definitely take that in consideration. Also, we are still looking for the potential continuation for any particular Australian dollar against the US dollar pairs here as well at the same time. So the moment the DXY comes back down right now to tap into this order block right here, the moment we can actually start looking at the particular zone here, why we have not created our high, We have mitigated into that order block we saw already earlier. We discussed already beforehand. It was this one right here. But right now, it's time to look for this one underneath that range right here. So if we come back down into that area, right? And we come back down into one of these zones here. And we know that there is liquidity built up for the Australian dollar against the US dollar right above that zone. We have the liquidity built up above this area. We have the 50% equilibrium, right? This was the last swing low, swing high to swing low. Why was that a swing high to swing low? Well, clearly we came back up, created a higher high, to came back down to tap into that zone here and to create a lower low right here. So this is the equilibrium. This is that order block we're looking for. So if we tap into that area right here, you can even look at the lower time frame, but it's definitely a 5-minute area of supply that we're looking to reach here. So what we want to see, we want to take out these people, take out all the stop losses here, mitigate price further down here, like we're coming right now, tap into this zone. So let's remove this one, tap into this order block right here. This is what we're looking for. We have one more actually here right now, but we have not created a higher high. So this zone is what we're looking for. This is a 5-minute order block that we're looking for right now. Tapping into that area, tapping into that zone, potentially have a short-term reaction from that area, and to then look for a potential short for the Australian dollar, US dollar. So this is a nice range where we can look for tapping into this range, coming into this area right here, tapping into this area here as well. Entry, stop loss, order block, profit there, a nice one-on-one. Why? We're just looking for the continuation for the dollar. Okay. Keep a close eye on Jerome Powell. We have Jerome Powell very, very soon. We're going to stream this on YouTube again once he's speaking. Until that moment, you guys are welcome. For all the people that are new in the Discord, have a look around, right? Have a look around here. See what we have to do here. Look in the general chat, in the verified SOC traders, all the setups we're doing. We're building, we're trying to improve every single day. And the fact that we already have a decent amount of people here in the last 2 months is absolutely fantastic. So it's great. It's great. And I got an amazing idea now. From now on, I will also start streaming in the Discord and YouTube at the same time. So thank you for that. So Jerome Powell is going to speak right now in round about 30 minutes. Okay, so we're going to do this on YouTube again. However, until that moment, let's keep a close eye on gold. I'm telling you guys, gold is going to be exciting. Gold is going to be super interesting right now. There is still liquidity built up here underneath that zone for gold. So there is a chance that we come down, the wick out, tap into that range some here. And even if you come back up and then come back down, same particular move right there. Eventually, we want to touch this zone and see what the reaction will be for gold in general. Okay? But that's going to be very, very interesting. Saksam says, what do you think of EU during the speech? Let's talk about EU as well. There we go. So for EU, yeah, very similar setup as well. We need to see what the exactly the same reason, pretty much the 5-minute. Okay. Keep in mind the FOMC meeting, the actual inflation or the interest rate hike was already 2 days ago. Okay. So right now what we're going to see is we're going to see still some volatility, but it will not be as aggressive as what we have seen there. Okay. It's just going to be another layer of manipulation, another layer of potentially, you know, leveraging some news here, seeing what the reaction will be. And if it's a crazy statement, yeah, then potentially you can expect more volatility. But until that moment, nothing really to think about or to actually worry about right now. So let's see what will happen there. Again, liquidity is also built up above this range. We already mitigated in this order block right here. It's already a mitigated block here. Then we have, again, that zone. We can still hold here. Okay, we can still hold at this area because it's all gonna depend on what the dollar index will bring. What I do like from the dollar index here is the fact that we have still created that higher high. That's the exact reason why I still like what I see here. We have still created that higher high here. And that's, for me, an indication of potentially continue the way up here. Okay, the other thing that we're seeing right now is also a little bit interesting. We're seeing that we're building out some liquidity here above this range. We are starting to slowly come down as well. So we have these areas, we have these areas. We have two ranges right here, two blocks that we can take consideration. Mainly because of the swing low to swing high area of demand here. So this is a range where I want to look for. The 50% is the is the main range. Okay. Snoop says, yo bro, just wanted to let you know that I used your correlation strategy and secured a 50 pip profit today. Much appreciated, my G. Wow, that's absolutely amazing, my man. Thank you so much for testing it out yourself, trying. Great results there. Fantastic. Absolutely amazing. If you guys have any further questions, right, we're going to look into the FOMC meeting very soon. But if you guys have any further questions about everything that we're doing here, about the chart setups, let me know and put it into the chart. We are continuing the setup here. We're trying to make it happen for today. All right. We have been streaming for 4.5 hours here. Okay. 4.5 hours and we're still going strong right now. So the next thing we're looking for is what I want to see here. And that's the Japanese yen. Japanese yen is also looking very, very interesting right now. Okay. What are we seeing for the Japanese yen? Well, we're kind of accumulating. We're somewhere in the middle right now, but the Japanese yen is coming back up here, finally, showing some strength again. Right, so the fact that we created that zone here was very nice. Because what did we see here? We tapped into that zone, we created that lower low. Right there, we created that higher high. Right there. So every time, let's clean it up for you guys. Every time you see this, do you see what happened after that? So lower low, higher high, right? Most of the time when we're looking for that zone here, we're looking for the tracement. This is not always the case, right? But it higher to probability here. Then we come back up again. Then that's our zone we're looking for. And we saw that huge reaction from that area. So this is so nice. This is so beautiful about market structure. It's because you can eliminate so many different things, so many different layers when looking at the chart, right? You know exactly where to look out for when you understand market structure. And that is exactly the reason why we are also streaming, streaming, when we're also going to release a video about market structure and Fibonacci on my YouTube channel this upcoming Sunday, okay? I'm going to go very, very deep into market structure, the Fibonacci, and why you can use these combined metrics to create a beautiful understanding of when to look for potential entries and when not to look for entries, and when to look for longs or shorts, right? But that's key to understand there. And I think it's going to be very, very important to take consideration as well. Marco says, you are Dutch. Yes, my man, I'm definitely Dutch. However, I do not live in the Netherlands. I live in Indonesia. Maar ik kan wel Nederlands. Ik kan wel Nederlands spreken. Can you talk about the US30 again? Sure. So the US30 is very interesting. So before we target the US30, we have to understand the main correlated pair towards the US30 right now. And the main correlation is what we call the volatility index. So if you want to add this to the charts here, it's called volatility index. Okay? The symbols of the ticker is called the VIX. This is exactly what we're looking for. The VIX, volatility index, or the VOX, right? This is the futures. And the Chicago of the volatility index, what it is, it's, let me type it in. What is the VIX? So the VIX is the ticker symbol and the popular name for the Chicago Board Options Exchange, CBOE Volatility Index, a popular measure of the stock market's expectation of volatility based on the S&P 500 index options. So what it in essence means is the options market is huge. It's absolutely, it's insane. It's super big. A lot of leverage there. What happens in the options exchange? Well, people are actually betting on the future price of the indices, right? In this case, the S&P 500. So what happens is you can place a call option or a put option. You can say in 30 days from now, the S&P 500 or the US30, let's go to the US30 as an example, because it's highly correlated, will be at blah, 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 29,000. And other people are saying, hey, no, in 30 days, the US30 will be at 30,000. Okay? And then we have something that's called the options expiry. So people pay an interest for these options, right? You need to pay a fee. Okay? And you have kind of an insurance policy on that trade. And people can say, okay, I take it or I don't take it. But you always pay a fee. So there's huge leverage involved. Okay? So the speculative asset based on the US 100, US 500, and US 30 is highly, highly beneficial there. Because the VIX is extremely volatile. What they did was they took all of these options and they formulated this into a chart. And based on that, we have created the volatility index. And whenever we see a bullish VIX, we're seeing a bearish indice, right? So it's invertedly correlated. It's honestly up to 85%. That correlation is significant, right? So let's look at the US 30 right here. Let's clean it both up here. There we go. Let's go to the 4-hourly. What do you see here? Let's invert the scale of the VIX. You see that? We started to range here. We dropped, we ranged, we came up, we dropped further down, right? Very, very similar. So because I trust in the VIX, what you can do here is you can leverage that. You can say, okay, you know what? Whenever the VIX is reaching a strong area of demand, right? Let's go to the daily. Whenever the VIX is entering a strong area of demand, we are looking at a potential opportunity for, you know, the indices. So what are we looking for? It's very basic, very interesting. So let's go to the daily. And let's show us the market structure here. What did we see? We were in a downtrend. Okay? This was 15th of June. Here we were in the end of August. So this is a period of 2 months. We're coming down here. What did we see? We saw a break of structure to the downside. And then we saw a change of character to the upside, right? We broke the internally. And then here, the change of character to the upside. So now we have seen something on the daily right here. Now we know, hey, something is happening. Something is changing. What happened? We came back up, of course. We're looking for this area. We draw this from swing low to swing high. We see that range. We tapped it to the 62%. You see that? Again, the 62%. We also had this order block right here. We could have taken consideration. Did not mitigate. However, what happened after that? Created a new high. Now we have the continuation of that high. Draw the daily area of demand. What happened? We tapped into that zone right here. Exactly at the 13th of September. Okay. Now let's go to the US 30. And let's go to the 13th of September here. Alright? This is the moment where we exploded. Let's go to the 13th of September. There we go. So this is the Dow Jones here. Okay, let's go to the 13th of September here on the daily. 13th of September. Hey, look at that. That's interesting. Look at that zone. That's exactly the area we're looking for. You see that? This is exactly what happened. This is where that major drop occurred. Right here. This pump was this drop. And what happened? We know we saw that break of structure to the downside, to the upside. We created a higher high. The only thing that we were looking for is this area of demand. We tapped into that area of demand and what happened? Boom, we took off from there. So if the volatility index is reaching a strong area of demand and the Nasdaq or the Dow Jones, for example, let's go to the lower time frame here, is reaching a strong area of supply. Let's zoom out a little bit. Right here. Let's take this one from swing high to swing low. Swing low to high. There we go. What happened? we tapped into that same area. You see that? Right here. We came back into the 50. Sometimes the 50 is very accurate. This is exactly the zone where we should look for. We tapped into that zone. And at that moment, we tapped into the zone. So any moment, what were they doing for the Dow Jones here? What was actually happening? Well, look at it one more time. We tapped into an area of demand. We know if we are tapping into a strong daily area of demand, bearish for indices. So you can leverage that. The moment you tap into an area of demand, you know, hey, we can start looking at an area of supply or the Fibonacci and see if we can align there and look for a potential opportunity for the US 30. So how can we confirm that? Well, here, clearly, what happened? There we go. What was happening here? If you guys know what I'm doing here, we were talking about liquidity all the time, right? What we were doing here, we were building out liquidity underneath that zone. Trendline liquidity. People go long here, people go long here, people go long here, people go long here. Where do they put their stop losses? Right there. Right? So hey, we know that liquidity is getting built underneath. We know that the VIX is right now in an area of demand. Is it not interesting to start looking for shorts right now? Absolutely. So this is what we were looking for. This is exactly the reaction that we saw. Boom. And that's how we can trade the indices based on the VIX. And sometimes we can align it in combination that if you want to look for another confluence, we can start looking for another confluence such as the DXY. And the DXY is a pyramid, right? We have the DXY, let's say, with the VIX on top. We have the DXY on the right side, the indices on the left side. If the VIX is in an area of demand and it aligns with the dollar index also being in a strong area of demand, you have all the confluences with you and you can really accurately trade the indices. And with supply and demand on each asset, such as the volatility index or the DXY, understanding supply and demand, understanding market structure, understanding how to use the Fibonacci, and then understanding where liquidity is built, man, your accuracy for trading indices will be huge. However, the only thing is you have to be patient. You have to be patient from the higher time frame zones to look for these opportunities here. But if you are patient and you're looking for the right areas here, and you see the volatility index aligning with the dollar index in an area of demand in this case, because we have still created a higher high, right? Then that's exactly the moment where you can get these kind of trade opportunities here. We're talking about, 6-7% boom in one particular trade right here. Right? It can be even bigger. Right? I mean, these are the actual perceptions or actual things you can take consideration. You can also look for opportunities there, right? On the lower time frame. This is exactly the candles that we're looking for. This was the exact candle where we exactly came from. This small range, this area of consolidation. Right there. So if you use the VIX, the Fibonacci, the VIX, the DXY, very well with potential opportunities here, then you can get insane trade opportunities right there. And that's the beauty of using correlations when trading. Leveraging the correlated pairs here. Then the other thing that we're doing here is we have a scalping alternative for correlated pairs as well. Scalping alternative as well. Okay, if you want to know more about scalping here, you can go to my channel, look at the scalping setup as well. And this is also for scalps. You can be way more accurate right there. You can trade way more pairs right there, right? Way more frequently. But these type of opportunities will present themselves once in a while. And if you are fully aligned and you catch it, you have monster trades, okay? And that's why it's just a nice tip for you guys to use the VIX in combination with the dollar index and the indices right there. So coming back to your question, what about the US 30? Okay, what's happening with the VIX right now is the fact that we have created significant higher highs again. So I take this one very serious. Right here. You have this zone right here. But let's go to the lower time frame. What are we looking for? Let's clean everything up here. What do we see here? This is where we saw the break. And this is where we saw the break. You see that? So what's the swing low? This zone here. This is the range where we're looking for. So this is exactly the range where we are. And where we're come and go here. We have built out the liquidity here. We took out the liquidity aggressively. Why aggressively? Well, people will have stop losses there and they want to target them fast. That's the reason why we're there here. Now on the next layer, what do we see here? On the lower time frame. We also have lower time frames, you know, for relationship. Let's go to the Volks, a little bit more accurate. There we go. You have this range right here, this order block right there. Okay? This is a very interesting order block. So we have still created a higher high. You see that? We still have created a higher high right now. What we are looking for is, you know, the next setup, the next potential setup here. If we break these highs here, right? Then we have two order blocks to look out for. We have this one and this one. And I'm talking purely about scalping setups right now. Okay? So we can potentially take short trade. What we're looking for here is to break these highs. Hey, that just happened right now. We broke these highs here. What do we want to see? We want to come down here. Tap into that zone, create a reaction. If we create a reaction, then look at the DXY as well. Right here. Is the DXY aligning with the Volks? Yes. It is. If we come back down here, we tap into that zone here. And the VIX is right down. Which they were pretty highly correlated. Okay. Not as correlated as with the S&P, of course. But there is a relatively same... you see, the chart is not accurate. But it can work as an extra confluence here. So the moment the VIX is coming into that zone, look at any particular indice right here. Okay? Look to short any particular indice like here. Let's take this one for example right here. Skin it up and go to the same areas right here. Go to the lower time frame. Oh, look at the break of structure here. Go to the 5 minute. Clear break of structure, right? Where did we create a higher high? Not here. Here. This particular candle wicked out above it. So I take that one as a swing high. So yes, use this one as a swing high to swing low. Look at the equilibrium. Yes, at the 50% we have a beautiful market neutral candle here. So if this aligns here with the VIX right now, coming back down, we will have a trade. Okay? We will trade this. Tap into that range right. Some people say, hey, I can use this as a trade setup, you know, 2-to-1 or 3-to-1. I personally would look for a scalp here. Because why? Particularly, well, on the higher time frame, the actual swing low to swing high is not clear here. Okay? The equilibrium is lower. So only for a scalp, I would leverage that area. Okay? That's the only thing I'm personally looking for. So what we are looking for, if we align and come back down, we are looking for the same area here and look for potential short up. That's why I'm looking to short this. Right here. Entry at 30,614. Take profit at 30,586. Okay? Let's be aware of Jerome Powell. Our uncle Jerome as well. Okay? Let's be aware of these pairs as well. We have created a break of structure to the upside. That's beautiful. We can start also shorting any Euro USD, GU as well. Look for these type of pairs. But yeah, the US 30 is looking very aligned right now with the VIX. Okay? So let's see where the VIX or where the US 30 will be when the VIX is here. Okay, so let's keep this pair open and see what we can see right there. Okay. By the way, thank you for all being here, man. I appreciate all of you. Res, Bert B, Valius, Jamie, of course, Joshua, Coin, Kriki, Malivre, Mamang, Matt, Porno, Chio. I love that name, brother. Porno, Chio. Primo, Cuero Dinero. Saxa, my man. Sharon. Sir Pips and Lots, welcome also. SM9. Fantastic, fantastic. Alright. So yes, the US30 is something interesting here. Jerome Powell will speak in 50 minutes. We're going to continue our journey on YouTube there. Let's look at the DXY as well. Okay. Okay, I already reached this one. Star of consolidation here. Looks very nice, by the way. Yeah, we're gonna see what Uncle Jerome has to share with us here. We're gonna look forward to that. Sakar says, did you take any trade today? Yes. Mark the US30. That's a good point, man. Thank you for sharing that. Actually, gonna use the VIX for that, not the US30. The VIX right here. There we go. Coin says, I need my Lorenzo fix every morning. Oh, my man. Appreciate that, man. Thank you. We're just trying to help you guys out there. Then we have, the DXY. So the DXY is coming back down, tapping into that range potentially right now. That means that the Australian dollar will go up, the euro will go up, GU has been dropping tremendously as well. It's cleaning up here. Okay, wow. Look at that. Yeah, of course, the British pound is looking so super weak. So I'm pro a shorting GU and any particular retracement here. I'm really pro shorting EU whenever we can. Okay, whenever opportunity presents himself here. Just because of the weakness right now. It's extremely weak. It's pretty significant, right? A drop from an indice of what? 3.4%. That's significant. That's really, really crazy. We don't see that much. 1%. Max 1.5, but 3.5 is really, really bad. It's really bad. So yeah, the continuation of the downtrend for GU is likely. So let's look at order blocks here. Well, this one is really interesting right there. You have this one right here. We can take that one in consideration. On the 10-minute. Right there. We have some trendline liquidity there. Let's see where we align with the dollar index. If we come back down and tap into the zone, let's see what happens here. Okay? Let's see what happens at that specific moment. We have this whole area of consolidation. We broke these highs again. Right here. So yeah, that's it's pretty wild. Joel is still here, boss. The Discord is getting interesting. Yes, my man, absolutely. I invited a lot of people to our Discord for one day. They can join for one day to just look around, because live streams on YouTube are out. All the live streams on YouTube are off. Not a single live stream worked. So we were offline for like 45 minutes here. So we decided to also stream on Discord at the same time right now while we're streaming on YouTube as well. So we are back live on YouTube and waiting for Uncle Jerome here. Thank you for the sub, my brother. We are coming very, very close to a celebration here. Like I said, we're going to do something wild when we have the 10k subs. We're going to stream for a significant amount of time. I said 24 hours. So yeah, let's see what happens. If we can make that happen. Let's see if we can survive. We will find out. We're coming very, very close, guys. Coming very, very close. Joel says the greatness is in the Limitless Discord. I appreciate this, man. 100% I agree. Sakar says, today I did a loss because I guess a pair was not aligning with the index. That could be one of the reasons. We need to look at your charts for that. How much does it how much does it cost to join the Discord? $59. One-time fee only, lifetime access. We do not do monthly. And we do not sell any mentorship courses or whatsoever as well. So the community is where it's all about. Okay, so the DXY is just a continuation here. Is what appeals me. And potentially the indices as well. So I do like that. And you see the alignment here, right? You see the alignment right now. Look at that. Look at the alignment right here. It's an 80%, 85% correlation here. So a potential short scalp could come into play here. We have 10 more minutes left until the Jerome Powell is here. Our man. Let's see if he can set up the YouTube already. Gary says, how long until the Fed keep increasing interest rates till they realize the inflation cannot be brought under control? I think they already know it, to be honest. But yeah, if you say that, you know what will happen then, right? You know what will happen when that actually occurs. So yeah, let's see if we can find Uncle Jerome here already, making sure that that's clear. Let's see if it's this one. Could be this one. Let me see. Let's be patient here. I think a 24-hour live stream will be the first time in YouTube history. I don't think so. However, yeah, I've never seen it in trading, in live trading. So yeah, could be the first. But if I'm gonna do the 24-hour live stream, then please invite all of your friends, everyone involved. Boom, let's make it a true hype here. We're coming very, very close. 40 more people to go. If we can get this done before the Sunday or before the weekly closure, that would be absolutely fantastic. Let's see. If not, Monday. Okay, so the VIX is ready. Let's also have a look at the US 100. So we make sure that everything is aligned there. Look at the US 100 here. Okay, the continuation was here. Look out these highs. These lows. Okay, this is where we created the high. There we go. The swing high, the swing low. Saw that reaction already. Actually, it was here first. We came into the 62%. Exactly, on the dot. And then we mitigated further down. Okay, we created a new low. Now it's just the continuation we're looking for. Okay, so continuation. Very interesting. We want to create a lower low here. All right. Let's go to the lower time frame. Yeah, this is the same thing as the VIX here. We still have that same order block, that same particular trend we're looking for here. Okay. Something like this here is aligning beautifully. Let's see if we can align there. The Nasdaq is always responding a little bit more aggressive to the VIX. A little bit more aggressive than the US30. Keep that in mind as well. $10-minute news USD. Yes, we have the yeah, we have some stuff coming out here a little bit later as well. Nothing spectacular though. The main thing is Fed Chair Powell. In 6 minutes from now, I hope he's speaking live, that we can actually look for him. And that we can start looking at particular reactions from the DXY. Okay? I highly recommend to be very patient with trading whenever Uncle Jerome is speaking here. Okay? I think that's quite quite important, okay? Let's be very patient there. Let me check something real quick, guys. I want to be prepared here. Okay, in 5 minutes, Jerome Powell's gonna speak here, guys. I'm gonna head back to YouTube, okay? So if you want to join the Jerome Powell stream, listening to him talking, see how the dollar index is responding to that, then join the YouTube, okay? I'm gonna close down the Discord. Thank you, this was a great alternative. For the new people in here that got that one-day pass, enjoy, have a look around. Have a look at the YouTube. We're not gonna remove you straight away, so do your thing. And I'll see you on back on YouTube again. Thank you. All right. Give me 1 second, guys. We're preparing real quick. We're heading back into the subs. All right, let's see what they're doing here. Let's see if we can find our Uncle Jerome. He's coming in 3 minutes. It's gonna be very, very interesting here, especially for the US30. Okay, we look at the US30 potentially. We look at the dollar pairs as well. I think these make the most sense here. All right, DXY, VIX, and Swan. All right, this is what we're looking for here. But this is one chart setup we have ready. Let me see on the 5 minute here. There we go. So yeah, let's see where we at once we are there. The DXY, of course, we have as well. GU aligning with the DXY potentially. Let's see. Let's put up the DXY here. Look at that reaction. Wow. Okay. There we go. Consolidation, expansion. Right here. Let's see if we align here, guys. Let's see if we will align at this particular level for GU. The moment the dollar index steps into that to that zone right there. That's gonna be interesting. Let's have a look at the Australian dollar indeed, Barisha. Barisha. Okay. Look at the zone here. Liquidity is built up above this area here as well. However, this is where we create a lower low again, so this is a nice range. This is an order block that we can definitely take consideration, for sure. We've created a lower low again here. Go to the lower time frame. Lower high, lower low. Okay. Same as with the dollar index here. Let's also put the dollar index right here as well. Australian dollar against the DXY is very similar here. Very similar setup. Okay, but we cannot trade during the news. We can easily just smash through it, break through everything. Keep that in mind. But still, we always have to mark down our areas here. Okay. Let's see if we can find Uncle Jerome here. Let me get this ready for you guys.
Together people and organizations representing businesses, low and moderate income communities, workforce development enterprises, employee groups and unions, community colleges, retirees, and many others.
Okay, 1 second. We're gonna see some movement now.
And I also think we delivered good transparency about how the Fed works to the American people through this process as well. So these events have now become a permanent fixture of our broader outreach. And my colleagues and I remember, I'm sure we remember each one of these events that we've been part of. They're really the real life embodiment of our policies and the way they affect the people that we serve. And they do inform our thinking as policymakers. So we continue to deal with an exceptionally unusual economic set of disruptions.
There's a little bit of an echo there, but it comes from this video. Okay.
Policymakers were committed to using our tools to help see the economy through what has been a uniquely challenging period. The insights you share in these events help us to home in on the challenges and opportunities that are shaping what we might think of as the new normal of the American economy. And it'll inform us as we try to get
this
there.
Is not good, guys.
My colleagues and I are very happy to hear from our participants today, to host those of you who are tuning in to listen, and to do the work that we do on behalf of all Americans. Thank you. And with that, I will turn it over to Governor Bowman, please.
Thank you, Chair Powell. Good afternoon, everyone. And I'm so pleased to be here with you all today in person to moderate today's discussion. And I just want to express my thanks to all of you for your willingness to travel to Washington, D.C. to be with us here today for this Fed Listens event. Over the past year, we've held a dozen Fed Listens events across the country hosted by our reserve banks. And we found these conversations to be a very valuable resource for us as policymakers. Hearing directly from people in different communities about how you are experiencing the economy helps provide important context for the economic data that we consider. These discussions help us develop a richer understanding of how economic conditions are impacting people in their businesses and everyday lives. And it helps us think about how we can best achieve stability and support for the economic well-being of all American families. Today, and in other Fed Listens events over the coming year, our intent is to shift the focus of discussion toward understanding how the pandemic experience has reshaped the economy and the workforce, and the challenges and opportunities that we will face during the transition to the post-pandemic economy. So with that, let me turn to our first set of panelists, who bring with them direct knowledge and experience of how the economic landscape is evolving for U.S. businesses. They represent organizations that include small businesses, manufacturing, supply chain management, and the hospitality industry. I know that all of you have experienced firsthand the extreme economic and financial hardships brought on by the pandemic. And during the economic recovery that has followed, you've likely also seen rapid and substantial changes in supply and demand conditions in your industries and in the communities where you live and work. Given those lived experiences as business leaders, we are especially looking forward to hearing each of your perspectives. And as we hear from each of you, I'd like to invite my colleagues to follow up with any questions that they may have. So let's start with our first panelist. I'll introduce Tom Henning. Tom, thank you so much for being here with us today. Tom is the CEO of Cashway Distributing, a wholesale distributor of food products for convenience stores and food service establishments in the Midwest and the Great Plains region. Cashway began in 1934, delivering candy to local grocery stores in Kearney, Nebraska, and the company now manages an inventory of over 20,000 products. Cashway has remained privately held by the Henning family, with the second and third generation family members involved in the business today. So Tom, for our first question, could you please describe how the pandemic changed the demand for transportation and warehouse services? And to what extent are shortages of material and labor still affecting your business and industry?
Keep it closer. I want to look at gold as well. Gold
Thank
is very
you.
important.
The pandemic changed demand for transportation and logistic services in some manners that were expected and some that were unexpected. After the pandemic, we expected a fair amount of pent-up demand that would be released, and it was. In fact, probably the demand that existed out there was greater than what it was pre-pandemic. But what wasn't expected next, before the pandemic hit, was the demand for workers would exceed the supply by a larger margin than what existed pre-pandemic. The size of the workforce became much smaller than it was pre-pandemic. We also believe that many left the workforce, and for a variety of reasons. And we were wrong on that too. We really thought the workforce would grow. There was a shortage of truck drivers and warehouse workers prior to the pandemic, which the pandemic further exacerbated. The shortage of truck drivers before the pandemic was estimated at 61,000 drivers. Today, the estimated shortage is in excess of 80,000 drivers. The shortage of drivers was an issue then, and it'll be a much bigger issue now. And the prediction is it will be an issue in the future. We've seen some estimates that the shortage will double by the year 2020. And to give you an idea of the size of the driving force that is out there, the universe of truck drivers today is 1.53 million drivers. So you take, a 5% shortage, a 6-7% shortage, it's going to be significant out there. As a result, the cost of labor has increased significantly for everyone in the supply chain. With the supply of labor down, the competition for drivers heated up immensely. There was an extreme amount of pressure on the transportation and logistics side, and still is, and probably will continue to be for the foreseeable future. In order to attract and retain drivers, our company raised our wage rate 3 times in 2022 so far.
Wow.
In 2019, we gave all our employees free health care.
To be honest, I wonder how much they actually raised it, because I do not think it's 12 point something percent.
And then we gave all our drivers and warehouse workers retention bonuses. If they stayed with us to the end of the year, they would get a bonus paid out on the 30th of January. And that did much to solidify the workforce. Then there were the supply chain issues. And the shortages of products we sell every day from our supply chain vendors was significant and still exists at a high degree today. Prior to the pandemic, and we measure our inbound fill rates from our vendors every week. We have a number of metrics that we utilize every week. Our inbound fill rate from our vendors was 99.2%. So for every 100 items that we would get in or we would order, we'd get 99.2 in. Our inbound fill rates right after the pandemic started dropped down to about 55-60%. By December of 2020, it was up to 90%. And in 2021, we had a pretty good start, and then it dropped to 78 to 80%. And this year, it was probably in the 80% range, 82% range. And for the last 10 weeks, it has been running 90%, which is good news. We changed our inventory philosophies because we had many customers out there that depended on us for products. So
Gold will
we
drop,
started
yes.
loading up our inventory.
I hope so.
We used the popular inventory philosophy of JIT, just in time. And then we changed it to JIC, which is just in case. So we're over inventory, but those people need products. A restaurant who has got an event planned for Friday night and you make a delivery Thursday and the product isn't there, he's in trouble. And it's all, our business is all about customer service. As a rule today, most of the time, we don't know what we're going to receive from the vendor, and which is kind of unusual. There are many challenges for the vendor community out there. A lot of it has to do with raw materials. They have labor problems also. They've got priorities on certain lines that they're producing. And so anyway, most of the time, we don't know what we're not going to get until the truck unloads, or we might have a call from that vendor, which is a switch from the norm. And the timing of deliveries is probably not as great as it was pre-pandemic. Since the pandemic began, our vendors have eliminated over 900 items.
If we break these lows here for gold, it's going to get very, very interesting here. Okay, I do like that imbalance there. I do think we're in a massive bearish trend. I do think the continuation for the dollar index is looking good so far. Yeah. We still have a way to go to this 3-day order block here. This is where things could change until that moment.
We believe and have gone through our numbers and look at the inflation numbers. We look at our inbound freight rates, understanding that we get probably our products from growers, from shippers, from manufacturers. So they have freight into their establishments and their freight costs have increased. We have got freight from their establishments to our warehouse, and then we've got charges, freight charges basically, that are built into our pricing to our customers. And we've been trying to calculate what percentage of the food inflation is relative to transportation and logistics. And we've got kind of a consensus between all of us that probably 38 to 45% of the food inflation that we're feeling right now has become because of logistics and transport.
38 to 45%. Did he set that? Did he set that?
It could be greater. It could be greater than that.
Wow.
We do a cost index report on our total product mix, and we do that every week. We started doing that about 25 years ago, and because obviously you've got to have growth, and you've got to have organic growth. And the difference between the growth you're realizing every week and inflation is basically organic growth. So our cost index report, and I've got numbers from, I think, since 19 since 2020 indicate where we've been, the path we've been on. This last week, our inflation rate was probably the lowest it's been in, I'm going to guess, probably 4 or 5 months. It was down to 10.3%. But yet, compare that to what the inflation rate was the same week a year prior. Our total inflation from 2021 is probably 22, 23%, in that range. So we're seeing some drop there along the line. We're also seeing some softness in the marketplace, which probably is indicative of why the inflation rate is lower. On the other side of the coin, we still have increases coming through. We're still struggling with product shortages and labor. Product shortages are occurring for a variety of reasons. One of the big factors that's going to have an impact on inflation, probably yet this year and probably next year, is the drought we've been experiencing. I can tell you right now, and we hear this from the potato growers, we've seen the price on what we call Baker's potatoes double in the last couple of weeks. And this last year, the potato growers in the Idaho area, which is really the prime country for growing the kind of potatoes a food service establishment likes to have, they knew they weren't going to get water. So instead of planting potatoes, they planted wheat. And so now there's going to be plenty of wheat that comes out of there, but the potatoes are going to be thin. There's an extreme drought that's hit in California. And California is a big producer of food that we consume. One of the products we're not going to have this year is going to be pears. I remember in 2012 when the drought hit, and we sell a large number of school districts, we imported fruit mix. We imported peaches from Israel. And Israel has, and that was probably the only place, some of those products were available. So we may be in that same boat here down the road. Tomatoes are a little bit on short supply. The other thing that's happening, we're in the corn belt of the country, along with Iowa and Illinois, and we've had a lot of drought there. We're finally starting to get some rain. One of the things that happened last year, and you've read about this and you heard about it, because of the war in Ukraine, the price of fertilizer, nitrogen, potash, and phosphorus just went off the charts. Nitrogen went from like $200 a ton up to $930.
Wow.
I know for a fact there were many farmers out there that were doing a balancing act. How much less of this can we use and still grow a crop? And what does that add to my costs? So my guess is going to be that we might find our production of maybe corn and soybeans maybe down a little bit this year. And depending on what happens next year and the experience factors they've got there may have an impact on whatever some of the commodity prices are. The beautiful part in our area of the country is that the cattle market is good, and we're starting to get a little bit of rain now. But if you look around the world, you go into South America, you go into China, you go into Europe, and it seems like every continent is having their share of drought. And so this might be a factor all in the future for food production, and especially the near future. That's just a personal opinion. Labor is still an issue. The driver pool is...
Funny thing is, nobody's was watching before. This was already done. Every single year they have these conversations there. Nobody's watching. Nobody was interested right now. Look at that. 13,000 people.
Still far from being adequate. We have a driving force of 250 individuals, and we have positions we work to fill every week. There was a time during the pandemic we were short 20 and 30 drivers. We have one supervisor for every 10 drivers, and they drove all year. They drove vacation routes, time off for other drivers, and the like. Sorry about that. I forgot to turn that on. If I can find it.
All been there.
Sorry about that.
No problem.
DXY pumping here. Gold
Interesting ringtone.
coming down.
Maybe to our second question, which is about what
Gold
your
breaking
business
down.
outlook for next year.
I was just going to get into that.
Okay, great. And what other challenging issues might be facing and expecting to face?
We're coming
Our
very
business
close to
outlook
this
for
order
next
block
year
here.
is good. I wouldn't say it's great. First off, we sell commodities. Our company was founded in 1934, and that was during tough times.
There we go.
It was founded in 1934, and the products we sell are really, in a sense, recession-proof. They're people have got to eat, so we're looking for probably a fairly decent year. On the other side of the coin, there's going to be casualties in the marketplace, and we could have some short-term challenges out there. And the way we're dealing with that is interesting. We're working programs right now to keep our customers profitable, and we're reaching out there because they're the lifeblood of the organization. And I think during the recession in the '80s, there were a lot of folks that didn't have a lifeline. Communication wasn't great, so we're reaching out to those folks now. We need to see them through this thing. And it's not a matter of extending them more credit. It's not a matter of giving them some type of stimulus along the line. It's helping them better manage their business, make it more profitable. So that's going to be one of the challenging issues we have. The other challenging issue we really have, and this is critical, I think there's I can't tell you exactly, there's over 2 billion trucks in this country. We have not been able to upgrade our rolling stock, stock for probably 2 years. We have 250 tractors, we have 400 trailers that we need to make the deliveries. We haven't been able to acquire a new tractor since November of 2019. We typically replace 10% of our fleet every year. The last tractors that we purchased in November of 2019 cost $106,000, and it's pretty much a standard product that we buy. Got 5 coming next week. They're $165,000 a tractor.
Wow.
40% increase.
Just the beginning, guys.
We've got to pick slots now. We're guaranteed kind of halfway of having probably 20 tractors. We really need 50. We're guaranteed to have 20 tractors in 2023. So we're gonna spend probably 5, 6, 7 years getting things caught up in our fleet. The cost of putting trucks on the road today is very significant. It's gone up right around $80,000. So that's going to have an impact on transportation total. Mm-hmm. And when you look at the number of trucks in the country, and the options aren't great. We had a number of trucks sit this last year for 7-8 days because we didn't have microchips. They were 2017-18 models. The parts availability, tires is one big thing. On trailers, insulation, we had trailers we ordered 2 years ago that we finally got in the first part of this year. Those went up 40%. So 40% sounds like probably an average cost increase that we're going to see with rolling stock for any operation out there. So I think I'm getting down to the end.
Tell me, how does that inflation and cost for these necessary replacement items, how does that impact your outlook for going forward, or changes to how you prioritize expenses in other areas?
One thing about it, you got to have the cash flow to do it, and you've got to have. So that will be the challenge in, developing a plan, a business plan, which we will do. I think in our company is sound and solid. I don't see a problem there. But I do look at other companies in the industry, and I think they will have some challenges there along that line. And there's some options out there that they can certainly use. But it's going to be a challenge. We spend more money today on just maintenance. A vehicle gets so old and you have a problem. The other thing we need to do that's going to be important is we need to get the manufacturing of a lot of those component parts back here in this country. And I could give you a list of things that we have to source outside of our country that put us really in somewhat of a predicament when it comes to keeping your trucks on the road.
Thank you. We'll probably follow up with you to learn a little bit more about that. But I'd like to ask my colleagues if they have a question.
Yeah, just a couple, one narrow, one broad. The first question is, are you able to pass these costs along? You obviously have been hit by, costs right across the board. And the second thing is really, do you feel like we're getting through this process? That there was enormous disruption to your business and many others, and all these cost increases and shortages and everything. Do you feel like, and I guess there's not that much progress with the drivers, but do you feel like we're getting back to a better place with the suppliers and the customers yet? Or is there a sense of progress?
I think there is a sense of progress. We're making the move, and I think the moves you make are extremely important. And I think that'll get us in the right direction, and applaud you for it. I do think that we're moving maybe a little faster than what I thought in terms of the economy and everything. So no, I'm confident we're going to get there. We might be, the only thing I'm not confident in, I remember when the pandemic hit us, they said, in 30, 45, or 60 days, things will be back to normal. I think what we're encountering right now is going to take a period of normalcy. It's going to be probably 2-3 years off, 4 years off, maybe. We've got to get caught up. It's not going to happen overnight.
And on costs, you've been able to pass those right along? Since
we have. Yeah. And the dollars we work with are large enough and the customers really don't have a choice. They don't have a choice. We can't lock in old pricing unless they've got contracts somewhere out there. We can't lock that in. And so they end up having to pay it. They're so voluminous right now that part of the problem is you don't know what the cost is. If you ask me what the cost of eggs were, I could tell you probably in a few minutes because someone just told me what they were paying here a little bit ago. But, it's fast and furious.
So despite the higher prices, demand is still there.
Demand is still there. And I suppose it's a question of the amount of money that is still floating out there, in the economy. The bad thing is it's going to be some reaction here. People that really take a beating, and we've anyone that's in production, if they're in sales, if they're in manufacturing, whatever the case is, their salaries have kept up, drivers and everything. But we've got a layer of people out there that haven't had a lot of opportunities for increases. In fact, right now, one of the things we are doing is taking everyone that hasn't had an increase and figure out how we can give them one, and how we can give them one that's substantial enough. So
okay, let's do a poll. Let's do a poll real quick, guys. I'm gonna set up the poll. DXY up or down?
Probably for everyone down.
No. Gold up or down? Gold up or down?
We appreciate your perspectives, and we'll move on then to our second panelist, Chidi Kumar. Chidi is the chef and owner of Garland, a restaurant and performing arts space in Raleigh, North Carolina. Chidi's a self-taught cook who studied recipes while pursuing a career as a guitarist in several rock bands. She was a semifinalist for the James Beard Awards Best Chef in the Southeast from 2017 to 2019 and was a finalist
Do the vote, guys. Do the vote.
For the award in each of the past 2 years. Chidi participated in our board Fed Lessons event last year, and where she shared compelling stories about the challenges that she faced running a restaurant business during the pandemic and in the early recovery period. Chidi, thanks so much for being here with us in person this year so we could actually meet you face to face, so that you can share also your perspectives on how things have changed since last year. So our first question for you is about how your business has changed actually since we spoke last year. How does customer demand now compare to what it looked like before the pandemic? And have you seen changes in dining patterns that you think could be long lasting?
Thank you, Governor Broman, and thank you for having me back. It's a pleasure to be here. So our restaurant, music venue, bar complex is one building that we have been paying rent on since 2010, and we closed our doors at the end of August. So, you know, there were many factors leading to that decision, and most of them are really, you know, I want to say at the outset that I'm a restaurant owner, I'm a chef, and we're working on a new project. I am speaking from my perspective as an independent restaurant owner. Restaurants are ubiquitous. You can eat at a fast food chain, you can eat at a fine dining chain that's in airports and hotels all over the country. Their perspective is going to be very different than mine, and I almost wish that we had a different name for our sector of the industry, because our challenges are unique, and the way we approach those challenges are very different, because the math is very different. So for us, so many factors led us to
Thank you, Meme.
decide to close our
Appreciate
doors,
you.
and the main thing is that you know, dining patterns have changed. Our restaurant has been located in a city center of a very small city. We're the capital of North Carolina, and we're surrounded by government buildings and, you know, law offices, a lot of tech companies, architects, you know, small firms of that nature. We relied on presence in that aura. You know, people would come to lunch, and whether they ate with us or not, they were aware that we were there. There was mostly, you know, professional white collar workers. Well, they didn't work downtown anymore, and they discovered new eating habits. They cooked more at home. They got food from CSAs, farmers, which is awesome. They've discovered their neighborhood restaurants, and they just approached dining out differently.
Elmer, thank you for the sub.
And they didn't maybe want to make a trek downtown and struggle to find parking and navigate construction that has been ongoing. Construction has not slowed down from my perspective. In fact, things take longer to build, and I know this because we're building out a space right now for our new project. So the project starts, and then you wait 2 months for an electrical, you know, a little breaker switch or whatever, 2 months. Or for a meter base, which are just nowhere to be found, or copper, or whatever it is.
Literally, guys, 103 votes, up 50%, down 50%.
So we're not the only downtown that has a lot of construction just sort of dragging on and on. And that doesn't really invite people to come to your restaurant, right? I go to Nashville and I see the streets are dug up
I get a
for
drink.
years, and there's a restaurant right behind that. You know, it's very easy for people to say, let's just go somewhere else. And they discover a new spot and they go there, you know, and there are a lot of options when it comes to dining out and dinner and how you approach your food for your family and for yourself. So we're very cognizant of that, and that's a very mercurial kind of situation. And, you know, during the pandemic, all restaurants, I think, were faced with decisions on how to pivot, you know, the P word that keeps rearing its head. And so we all tried things that were completely outside of our normal way of operating. Fine dining restaurants started doing meal kits and takeout, and so you could get, you know, maybe you were mailing something from Goldbelly. So we're doing things that are completely different for us. We're not built out for these kind of operations, but we did them. And so you start thinking about different ways to operate, and the consumer is kind of connecting with you in a different way. So things are still really very much in flux. I don't think that we've settled into what an independent restaurant looks like and what this industry looks like. And I don't think that we're going to get there for another 3 to 4 years. But in this meantime, people who have 1 or 2 shops can't really sustain this much change and these many losses for that long. If I had 100 shops, making a very small profit or very small loss, you're it's an aggregate. You're looking at the health of your total business. But for us, several weeks or several months of, what are pretty big losses for us, very difficult to navigate. So we're trying to, within our footprint, within the menu that we are known for, within the type of service that we do, the way our dining room operates, how many people we need to work in the kitchen, how many people we need to prep, how many people we need to get a guest from the door to the table, and then what happens after they place their order, and all of those little steps. Restaurants are basically dependent on a series of repetitive steps, and all of those are very time sensitive. There's no malleability, there's no work from home, there's no take your time, because if the guest has a bad experience, you'll lost them forever, right? And if you don't know that that's happening, because as an owner operator, you're also working, you're no longer just overseeing. You're washing dishes and you're cooking and you're prepping and hosting and bartending, and my husband and I have done all of these things many times over the last 2 years. You're gonna miss those details, and that all these little cuts cut down your business, and they cut down the level in which you really wanna be operating at, and that the guests, expect. And that's not to say that I think we did a really good job, but it's exhausting. We're two people, we're a family operation, and places like ours, our staffing situation has been just like Mr. Henning alluded. It's always a difficult industry to staff, but now it feels impossible sometimes. I do feel like it's getting a little bit better, but we've lost a lot of our young people who we might have considered as career hospitalitarians. They maybe want to get a job in tech sales or go back to school or maybe become a nurse. That would be an ideal way to go, but we can't really compete with those kind of benefits. We can't compete with not working at night. We can't compete with work from home. We can only offer so much paid time off, and that demand kind of gets sucked in by, or completely obliterated by people getting COVID. And so from the start of the pandemic until this May of 2022, we had maybe 3 people with COVID, and between May and August, probably 80% of our staff had COVID at one point or another, myself included. And we are very careful. We test all the time, we mask and everything. So, the way the pandemic is affecting day-to-day life isn't as data-driven as it is now. It's just a reality, right? So if a cook is out for 7 to 10 days, in 2019, that would be like, you can't do that. That's unheard of. Like, what do you have, the measles? Like, what? That never happened. But now we have to sort of think about how many people we need with those contingencies built in, but yet the cost of each person's hourly wage is...
If we break these lows now, this is going to be a very strong block. It's going to be very hard to break and come back higher.
15, 20% higher. Our revenue is unpredictable because of the way our demographic in our part of the city is. And if there's a variant that was raging, that was more of an issue maybe last year when it was... Now it's just everybody gets COVID all the time, it seems like. So it's not this like wildfire that, ebbs and flows, but we've had to sustain the losses throughout that time. So so we have our labor costs going up. And then, your question, Chairman Powell, was, can you pass that increased cost down to the customer? Well, we're the customer. We're the end game. And we can only raise our prices so much. So, when you go to a restaurant, everybody goes to a restaurant and they see a chicken dish or a pasta, an entree that maybe previously in a nice restaurant was $28. Well, now it's maybe 34.
Yep.
But you're not going to pay 45 for it. I mean, you're just going to say that's insane. I can make that at home, and
Yeah.
you know, you think you can. Some things you can, and some things it may not be quite as good, but it's still dinner, and you'll survive. You know. So there's sort of this like we reach a ceiling of not being able to have anywhere to push those costs for us down. So, you know, we see fuel surcharges on our invoices from deliveries. And again, as an independent restaurant, I'm a chef operator. I make creative decisions anyway about how I cook, what I put on my menu. I work with a lot of small farmers, but they're leaving too. You know, they're getting tech jobs and web design jobs because it's hard for them to find somebody to help harvest their crops and bring them to us. And, you know, it's a small operation. So, yeah, I mean, I'm not sure if that directly answers exactly your question, but there are so many factors that go into a very simple decision on where am I going to have dinner tonight. And it's everything from your location, what happens in your neighborhood, where do you live, what's around you, how much are you prioritizing, supporting local, are you feeding a family, or are you know, a young couple with disposable income, you know, who is able to operate? Is the restaurant that you normally go to able to have all of their sections open? Or did 4 of the 7 servers that they have call out today? And so you still have to open, but you can only sacrifice so much of what you can and can't do. You can't say, hi, welcome to our restaurant. We have 3 of the 9 items from this first section available today, and 2 of the entrees are available. I'm so sorry. You'd be like, what is this? Like, I'm never
And they're all laughing about it.
coming back here. But in reality, I wish we could do that, you know, because sometimes you just really have to say, can we open or not?
Well, thank you so much for your excellent answer to the first question. It was so good. You answered my second question, which was about inflation. So if there's anything you would like to...
I don't understand why they're actually so happy, man. Like, in general, they're so like... Is it because they know they're on camera or something like that? It's super sad. Like, prices of food, everything, man. People cannot afford rent. Things are actually very, very bad. There's nothing to be happy about here.
Talk a little bit more about, you talked about wage inflation, but the input inflation, you talked about how you can't pass it along. Are there other concerns? And I would like to open it up to my colleagues too.
I have a quick thing to add. I think real estate is such an important component of small brick and mortar places. You know, real estate has been thriving and growing and booming, and that's great. But developments are happening everywhere in every city in the country, and you know, the starting rent is a certain amount. So as you know, in previous times, 30% of your revenue food costs, 30% labor, and then you have your operating expenses, blah blah blah. Now labor is hovering around 48, 50%. Your food costs have gone up to 35. So there's 75%. Credit card processing fees keep going up 3.5% to 4% off the top. Rent is now, you know, I mean, where does it fit?
Crazy.
You just, after a point, you get to 100% and you haven't paid all your bills. And now you're operating at a loss. So, you know, for us, we were fortunate enough to be able to buy a building, and that kind of changes everything. But we're lucky, you know. We utilized an SBA program and worked with a local bank, and you know, we've been in business for a dozen years. We have a presence in our city, but that's not the case for everybody, and that's not accessible for everybody. So, you know, rent going up and everything else going up, and the ability of a small independent restaurant. Where we get them. So was with us for 6 years.
Okay, we were off
But then
again.
most
YouTube
of them
has massive
were
problems
in the
today.
last 9 months. We offered 2-week severance to everybody, you know, that we paid after we closed. We offered an open door. Please come back and work with us when we reopen, we have a couple of people that we retain and going to pay through this transition. So, it would be a very different situation, and the timeline and how all of that worked would be different if I didn't know, and that most of my team could go and get another job. And in fact, I really helped place a lot of people with a new job with restaurants that I like and that I know, operate with integrity.
Okay, gold coming down.
Well, and treat their staff well. If it had been a different time, we probably would have, said we're closing in 2 months, and it would have been a lot slower. But I know that most
Liquidity
people
on the
can
upside.
find a job very easily. But even still, we gave them enough time.
Compressing, we're
find that
compressing
work,
here.
Be paid, and then help them find another position.
Thank you.
You're welcome.
Thanks, everyone, for all of your excellent questions. We'll move on to our third panelist, Jess Pettit. Jess is a Senior Vice President of Commercial Strategy, Insights, and Analytics at Hilton, a leading global hospitality company with a portfolio of 18 brands comprising 7,000 properties and 1.1 million rooms in 122 countries and territories. It's a pretty big role. So in your role at Hilton, Jess delivers customer
Liquidity in the
performance
upside.
and economic insights to Hilton's leadership teams and partners. Jess leads the only fully cross-functional global analytics team in the hospitality industry, covering brands, digital, call center, new hotel development, and other key corporate disciplines. Jess is a born and raised hotelier and has committed his career to his passion. The impact.
Why do I say that? Well, on the lower time frame, real quick, guys, real quick. Break of structure to the downside. Change of character to the upside. Retracement. Coming up, retrace back down. Tap into that order block. And this is lower time frame, right? This is the 1 minute. Tap into the zone. Liquidity was built up here. We're going to take that out. It looks like we're going to come down, but look at that. If you really look at structure here, we can potentially come back up. Let's see. Interesting.
Impact that hospitality has on society.
I struggle to imagine an industry that was dealt as difficult to blow during the pandemic. 80% down plus in the depths of it, and it's been a challenge. But also, I think at least on the positive side for hospitality on our end, starting to see that real recovery, and it starts with leisure travel. To your question. Over the course of this summer, but also last summer, our industry shifted much more towards a leisure focus. It ties very closely towards disposable income, stimulus. Folks had more money to spend on travel. So, complete opposite of 2020. The dynamic in 2021 summer and 2022 was this concept of revenge travel, right? You had not seen your families. You haven't seen your friends. You haven't been able to go to the national parks or see much of the country. And so revenge travel was a very real thing for us. And we see that dynamic in leisure markets, so consider beach markets, Southeast US. You see that dynamic in national park markets. You see it in long weekends. The holidays, we become much more compressed from a business demand perspective. And so over the course of the summer, we saw our demand from leisure travel, so when you account for all seasonality and all the other noise, up 10% versus 2019, right? And that's overall from an industry perspective, which is great. But then you realize that there's another 50 or 60% of our business.
Like we said, market structure, guys. Break structure to the downside. Change the character to the upside. Come back down, tap into that order block. Liquidity was built up of.
Business, which comes from business travel and group travel, right? And in order for our industry to truly have the compression it needs to be successful for our independent owners, is you need all three parts of that three-legged stool to truly be successful. So what have we seen over the course of this summer, right? So leisure was doing very well. We started to see the initial signs of corporate travel coming back. Starting the beginning of this year, corporate travel was down closer to 25-30%.
I like it because there's way more volume than usual Fridays. You see the difference here.
Now through the summer, we're getting closer to that 10% down range from a demand perspective. Group travel, obviously, for all the reasons you talk about events, all the reasons that group was the most depressed from a demand perspective, we saw that in our industry, down roughly 35% in the beginning of the year. By the end of the year, we expect that full year number to be closer to 15, 16% down from an industry perspective. So you're seeing the recovery, and it's very much as we would have predicted it back in April of 2020. We built our first models, and we said the first thing that was going to be coming back was essential travel, what Tom talked about earlier, the folks that we needed to travel across the country. Then we saw leisure travel, small businesses which needed to travel in order to be successful. And we saw a bit of an air pocket there before we saw large companies coming back and then finally larger groups. I think the other dynamic we see, and I often use this story from my own experience, weddings and events, right? We went from nobody being able to do that in 2020. I was meant to get married in 2020, first in June, then in September, then in June of 2021, and then finally in September of 2021. And the dynamic you see is there's compression, right? Everybody had that same experience. So I went from a Saturday at one venue to a Sunday at another, right? And so that's a very similar sort of pattern that we've seen cutting across. Yeah. yes, yeah. I think maybe revenge babies as well. Which, yes, I have a 10-week-old at home now. Hopefully he's awake watching this. So yeah, we've seen some of those dynamics from the rest of.
Yes, guys, the world is fucked. Let's have some fun. Let's joke about it. Let's have a cup of tea. My mother.
The market come back, and so it's not just about leisure periods. As we get into September, we're seeing some signs of life in all segments. But by the end of the year, we're still going to be down overall demand for our industry around 5%, and that's when you take into account leisure up 10, and then everything else a little bit lower. And so what does that mean? I'll jump a little bit to how that impacts price, right? Because we similarly are downstream from a price perspective, right? We're impacted by labor, we're impacted by food costs, a variety of other supply chain related things. When we look at our price on a year-over-year basis, I'm sure folks see it if they're traveling, you could see prices that are up 20, 25%. On the whole, our industry forecast prices are around 15% up.
Like honestly, guys, do you really think that they just don't see it? That they just don't see that we're gonna face a recession like never, ever, ever before, like the worst crisis in history, ever? I don't know.
Over year, but when you account for inflation over a 3-year period, so comparing to 2019, our real average daily rate, we're still lagging 2019 levels. And it's really because of that lack of compression from all of the market segments coming back together, right? And so I think that's going to be the interesting thing to watch as we hopefully see demand reach levels across all customer segments, then price would follow in a similar way.
Do you think that the pandemic experience has reshaped the way the industry operates?
Yeah, and so I think a couple things that I would talk about there, and it kind of alludes also to the last question. There is a tale of two cities, right? And it's interesting because you see resort markets, drive-in destinations, they have been...
Okay, liquidity hunt here. We took out the liquidity underneath. We went up, took out the liquidity here, went down, took out the liquidity here. The question is, are we going to break these lows here? If we break these lows here, then I'm still interested in in the short opportunities. Why? Because I want to take it to 1633. 1633.
Doing quite well. Extended stay hotels have done really well. Again, Tom's market and other markets like that they've really supported extended stay travel.
Also this.
What we haven't seen is really the return to urban markets and large conventions, right? Those are the lifeblood of major cities, right? And so we're starting to see that recovery, right? But there's obviously pandemic risks and other things that folks have been considering. We need that overall return to desire of travel. And so we're starting to see that come back. And so Las Vegas and Orlando, we're starting to see that sort of turn back up. Markets like San Francisco, Chicago, New York, not as much, right? And San Francisco, obviously, much more dependent on the tech market, which has been quite, different than the rest of the overall business community. So we're seeing a little bit of that. I like to think about sort of where do we want to get back to normal versus what's going to be a new normal that we expect, right? Back to normal is return to normal segmentation. Folks are able to have
New normal.
their social weddings and events, get back to regular meetings, normal travel patterns, right? Students being back in school matter to us, right? Because people tend to follow the school vacation schedules. So as we see that come back to some form of normalcy, we're starting to see normal travel patterns.
Okay, real quick, guys. Real quick. So gold is down, yeah? So let's go to the lower time frame. What do we see here? What did we see first on the lower time frame, right? Break structure to the downside, change character to the upside. There we go. We build out liquidity underneath, above it as well. We took out some of the liquidity above that range right here, then went to continue down right now. Now we have created a lower low here. So now any retracement is potentially the opportunity. Any retracement right now could be the opportunity. Right here, downside, right there, swing low, high swing low, right there. We're getting there.
From a new normal, labor schedule around, right? And you don't get the consistency of scheduling that our team members demand and expect. We're also seeing, the inflation of wages in our industry broadly double what is the broader wage inflation. So typically in the 12+% range, we've seen across sectors and across regions in the U.S. So we're seeing some shifts in dynamics from that perspective.
I know Governor Cook has a question.
Yeah, please.
The data thank you for the presentation. The data that you're presenting are for the U.S. or are they global?
U.S.
Okay.
Yeah, although we see similar trends. I mean, it's such that it interests you. We do see similar trends outside the U.S. One interesting dynamic is, take Europe as an example. It's so much more dependent on cross-border travel, right? And so obviously that was more depressed when cross-border travel was more of a challenge. Here we didn't have as much of that.
Sure.
But major U.S. cities, right, the lack of international travel into New York or San Francisco has certainly played an impact on demand.
And taste preferences?
I'm sorry?
Taste preferences, same kind of thing?
Yes.
Sort of,
yeah, generally we see that. I mean, focus on the U.S. from a customer perspective, but yeah, we see those sort of trends. I would say obviously there are countries where it is quite different. China obviously is a different sort of customer environment, but yeah.
I think Mr. Brainerd had a question.
Clean it up here.
I just wanted to follow up
Remove
on the
back soon.
labor question. So, if you look at where employment is actually down relative to pre-pandemic, 1.4 million in in-person services, it's heavily in leisure and hospitality in your sector. Is that because people aren't coming back to that sector, or is it because your demand is down and so you're not demanding the same level of employees?
It's undoubtedly a mixture of all things, right? And as somebody who grew up working in hotels and is passionate about that sort of service economy that we had, it's in some ways can be less enticing of a job in a COVID type world, right? Essentially
there we go.
Essential
Yes,
workers having to be face to face in ways that us in corporate office world we're not necessarily having to do. So I think there's an element of that, which is we need sort of a mind shift back to where we were and the value in face-to-face experiences. When I think about what we're trying to do from an employment perspective, it's hard to get people to come back to work. So I think it's a little less of the our demand isn't requiring as many folks coming back. I mean, right now, as I said, we're close to 5% down from a demand perspective, so not massively for that level of job displacement.
So can I ask just a related question? So recently I was talking to a large firm in leisure hospitality, and they were talking related to what Governor Brainerd just said, that their turnover rates, job turnover rates, had doubled than pre-pandemic, that even when you can get workers, you can't keep them. Is that something you're seeing in all these areas?
I'm sure we would see something very similar. We're all competing for the same subset of folks, that it's a smaller pie that we're all competing for, right? So you see certain places where folks are putting out big bonuses to try to convince people to come their direction, and then we have to all go back and forth. And so the pie of workers in our industry broadly is just not wide enough.
So regardless of what we do for demand, you're still going to have demand for labor.
I think
Coming close, huh?
Well, Just thank you so much and congratulations. We hope you're getting some sleep. So, we appreciate you being here with us. Our fourth panelist is Kara Walton. She's a director at Harbor Results, which is based in Southfield, Michigan. Kara leads the company's manufacturing intelligence business, which collects and analyzes millions of data points from thousands of manufacturing companies in North America. Harbor Results collects data from more than 600 privately held small and medium-sized manufacturers each year. Kara and the team at Harbor Results utilize these data and information to help small to medium-sized manufacturers improve their competitiveness in the marketplace. Kara also studies economic, business, trade, and tariff trends impacting the manufacturing industry, and she consults with clients on their business impacts. So Kara, thank you so much for being with us today. Can you help us understand what your most pressing concerns are for the small and medium-sized manufacturing businesses that you work with?
Yeah, absolutely. First off, thank you, everyone. It's an honor to be here. I really do appreciate it. As you said, right, we work with the small and medium-sized manufacturing base. We're also a small business. We have about 15 people total on staff, so we're quite small. But beyond working with those small to medium-sized individuals, generally they're all less than $500 million. Some of them are $5 million companies in a year, and some are 700, right? But generally speaking, they're under that range. We did the math in our organization to give all of you a sense. It's about $30 billion in an annual year. That was incorrect. And it's $30 billion annually in terms of total output that they're putting out in the market. So to give you a sense of what they're looking at, they're privately held, they're not consumer facing, so they're supplying to a tier one or to an automaker or an appliance maker, and they're generally not unionized. So these are they're small and they're family owned, right? Sometimes we have second and third generation leaders. Our team took some time to kind of come up with an answer to this question, and we broke it into two core facets. Their biggest challenge from our perspective is labor, and we'll talk about that one a little bit. And then their second biggest challenge is the ability to make money. So if I could start with the labor piece, frankly, there are many facets to it, all of which I cannot answer here, or else we might be here for a while, as I'm sure similar to you guys, but I'll do my best to give you a high-level explanation. So the number one core challenge that our people have is that they can't find people, number one, and more specifically, they can't keep them. So in some cases, they are absolutely getting people into the door. These stories all the time. What we see happening when we look at the data is that a lot of our manufacturing clients stopped hiring during the Great Recession.
YouTube.
Frankly, you guys know better than I do. Their businesses were quite challenged. So they stopped hiring at that point in time when a lot of millennials were graduating out of college. And frankly, that gap is really rearing its head today. Not only do we have an average age of an owner, right? The average age of an owner is over 60. We have an average age in workforce overall. We don't have succession plans, not for key leaders or for other areas of the business, right? So if I have a production manager who's in his late 60s and says, hey, I want to retire in the next 4 years, there's no one there that's even considering being the next person to be that production manager. You lose a production manager, your facility doesn't run. So beyond that, right, what we're really watching in our bottom line is that it's costing these guys a lot of money. And what they're starting to tell us and what the data is starting to show us is they're choosing not to grow their businesses, which is a big challenge, right? So they're saying, hey, I'm not going to take on more revenue because I don't have the people to do the work. Or in some cases, they're even saying, I'm going to shrink my business, which brings me to my second point, their other biggest challenge, which is they can't make money at the rate that they used to be able to. You said there's a lot of compounding issues and everything. There's a lot of compounding issues in this one as well. But some of the core pieces of it that we're seeing is that despite these businesses increasing their efficiency levels, so they're absolutely doing better from an efficiency and throughput perspective, they're not making more money. So when we look at their actual profit margins, they're not going up. They're frankly going down quite substantially. It's due to a lot of different reasons. One of them is the labor piece, which we talked about, so I won't go into too much more detail there. The other piece is this overall cost of doing business. So it's everything from energy prices, it's transportation costs. The rail strike was a really big, or potential rail strike, was a very big challenge to these individuals. Healthcare costs, and everything from temp agency upcharges, right? So when somebody's trying to get temp labor in the door, it's 30 to 40% higher than it used to be. Interest rates on loans is a big one. Most of these companies do not have cash. They're privately held, but they all use lines of credit. So that's really impacting them as well. The other piece that's preventing them from being able to make money, at least consistently, is they had a lot of PPP or ERC funding, just depending on the type of business. Most of them did get that because they are privately held and small. Some of them used it better than others, right? Some of them used it as a lifeline and frankly just delayed some of the challenges that they were feeling before COVID even took its toll. And now that that money's dried up, they're feeling those same challenges again. My final piece on kind of their challenges from a financial perspective, which is potentially the most challenging.
Thank you for the sub, my man. We're very close.
Into numbers, is this increased chaos that they felt over the last 24 months.
Thank you, guys.
Really preventing them from being able to make money. So the best way I can kind of articulate that to you is that most of the customers and companies that I work with don't know their customer demand. They don't know the schedule on their shop floor. They frankly don't even know who's going to show up to work in a given week, and in some cases in a given day. I mean, there were periods of time in 2020 where we would talk with customers who would say, I got into work today and 8 things changed between 7 and 8 a.m., right? So they don't know how to do this. At the end of the day, what that's doing is
2 zones here.
Massive amounts of transactional waste. It costs a lot of money
Because of the DXY. You have 2 zones because of the DXY. If the DXY keeps dropping like this, to fill up that inefficiency right there, coming back down, and we see what the reaction will be here. Interesting what gold gonna do.
They never show up. It still costs money to get them and process them and give them healthcare and all of that. Additionally, it's tying up a lot of money in inventory. So we've seen massive shifts in inventory right now. And the final thing is that it's really costing them way more cash than it ever did before. So their ability to have any flexibility in terms of how they spend their money and how they make money is gone. And at the end of the day, right, this is a massive group of people. They're not all the same, but the viability of many of these businesses long-term is really concerning to us.
Those are very difficult challenges that you're dealing with. Could you give us some perspective on how supply chain issues are continuing to impact your business?
Yeah, absolutely. So I will flip to the final page of the notes. So from more of a supply chain perspective, we are based in Southfield in Detroit, Michigan. So we do work a lot in the automotive space, but we also work in others. I personally came out of the appliance arena, so we work across most of them. A lot of the challenges today seem to be around semiconductors. That's a big thing that seems to get picked up a lot in the press. It is absolutely an issue. I'm not going to belittle it. But there are a lot more problems than just semiconductors. To speak on the semiconductor one just for a second, some of the core challenges that we're seeing is not only does automotive need semiconductors, but your refrigerator needs semiconductors. There was like a new PlayStation that came out last year, and that needs semiconductors. A lot of people talked about it. I don't. PlayStation and Xbox are confusing to me. But
okay,
either
gold
way,
coming up.
So that was demanding microchips, all of these different things. So automotive companies can get them, which means that this whole demand problem that our customers are facing, they have no way to plan when they're going to get chips in order to put them into the parts that they're ultimately supplying.
Very nice.
The other piece on semiconductors, just real quick, is that when you think about an electric vehicle coming into play, they require at least 30% more, sometimes even more than that, than an internal combustion engine does. So if we adopt more electric vehicles, we're demanding more semiconductors than we ever have before. But beyond the semiconductor challenges, probably some of the more concerning things to me and maybe less easier to solve challenges from a supply chain perspective are centered around things like transportation and freight, which all of you talked about in different arenas. But a lot of that applies to things much more than automotive as well, right? So you talked about the agriculture business. We work with companies who can't get washers and bolts to make trailers to hitch on the back of their F-150s to get whatever they need to get, wherever they need to get it, right? The other big supply chain challenge that we don't really see a light at the end of the tunnel for is natural disasters. You talked about it from an agriculture perspective. There's a lot of impact to that on the resin and steel markets as well. The resin market specifically, there are certain types of resin that ultimately allow you to make your dashboard or make some of the plastic that we probably have in this room right now. The capability for them to get that resin even before the most recent round of natural disasters occurred, some of the major freezes that happened last year, it was already in force majeure. So these companies were already taking the time to go, we need this because it's a crisis, and then it got worse, right? And that had nothing to do with any of the port challenges or any of the difficulty getting a bolt out of China or somewhere else.
Okay.
So that was one of the big pieces on the supply chain front. I guess to bottom line it for you guys, at least if I could, in terms of what we're seeing from the supply chain piece of it, automotive specifically historically has been a 17 million a year sales volume in the US. This year we're forecasted to do about 14 million units. if you look at the OEMs, which are
Keep it close on the
publicly
dollar
traded
index
companies,
now.
unlike my customers, they're making money and they're doing quite well. They have their challenges, as do all businesses. They don't necessarily have a reason to go back up to 17 million units based off what we see today. The reason why I bring that up is because this means that we have a lot of people who are supplying to them who are dealing with a much higher mix because everyone wants something different in their car today or different in their appliance, and we're dealing with a much lower volume. So at the end of the day, what that does is that increases the complexity for everybody that we work with. And then within that, what that does is that makes them really challenged to manage all of the supply chain pieces that we talked about. And at the end of the day, they're focused on this week, am I going to run out of cash or am I going to shut down
Do we sell gold now? Not now, brother. Not now.
my supplier's line, right? So, I mean, these are the kinds of decisions that these companies are facing. So I don't know if that fully answers it, but that's where we're at.
Fantastic. I'd like to open it for anyone who.
Yeah, so I'm just curious if these firms, it sounds like some of them have more demand than they can handle. So if there's a downturn in the economy, how are they going to manage it?
Yeah, so they absolutely have more demand that they can handle. From an inventory perspective, we're still well below it. We saw demand on average for them go up nearly 30% between 2020 and 2021. It's plateaued a little bit, but it's still relatively high. In terms of that demand lowering, I frankly think some of them would be, I'm not going to say pleased, but would be relieved by that. Because the intention of that demand lowering would mean, hey, maybe a couple of my 20, 30, 40 open positions I no longer need to hire for. Maybe I can take a breath to actually manage my business and focus on continuous improvement. Obviously, we don't want demand to shrink too terribly much. Right. But what I will tell you, and at least in automotive specifically, is there's pretty hefty demand planned from a tooling and new product perspective. So we have a lot of new vehicles coming out in the market in the next couple of years. It's really positive. So we absolutely have the demand to do so. The challenge is if they're able to run their businesses to still make money, even when the demand is still there. Does that help answer?
Yeah, actually it does.
I have two questions about the long run. In my previous life, I was a professor at Michigan State, so had students from Michigan. And in my senior seminar on the current state of the economy, and I taught it for about 15 years or so, the last time I taught it was 2019. And the question that I posed at the beginning of the semester is, do you think you're better off than your parents were at this age? And for the first...
So what we're looking for is gold here. The DXY actually coming down. You want to see it coming down to fill up that inefficiency here. Fill up that fair value gap. And if that actually happens and comes down to fill up that fair value gap, that's the moment we can start looking at gold. Where is gold going to be? No? Is it going to be here? Or is it going to be a little bit higher right there? Right, this is what we need to see.
Time in 2019, students post Great Recession, they said that they thought that they were better off because they had interesting jobs that their parents had to work on the line, and that they thought these were boring jobs. So, you know, people don't want to show up for tool and die jobs. My students' reaction would be, that's boring, that's not the Apple Store. So, like, that seems long-term, that seems structural. So how do you address that? I mean, how do your businesses say that they would address something like that?
Yeah.
How do you make manufacturing sexy?
Yeah, that's
Okay,
the end-all question that we face almost every day with our businesses. It's very challenging to make manufacturing sexy, I'll tell you that. I would tell you that if you go into the average manufacturing facility, there are floors that I would eat off of. I mean, there are impeccable facilities in this country. They're beautifully maintained. Everything from, I mean, yes, OEMs and tier ones, very large companies are doing a great job, but I walk into $10 million plants that are beautiful, have state-of-the-art equipment. You've got 20-somethings working on $1 million machines and coding that never got a 4-year degree, but went to an apprenticeship program and are doing really cool stuff. The biggest challenge we have is encouraging more people to do that. The only way that we found success so far, at least our clients have, is they've focused on actually talking to the parents at very young ages, so starting in like elementary and middle school, about the benefits and the career development opportunities in manufacturing that don't require a 4-year degree. I have a 4-year degree. I know many people here have a lot more than one 4-year degree, so I understand the benefits of higher education. but it doesn't mean that everyone needs it. So we're focused very strong on trying to encourage people to go into manufacturing because I'm a nerd for it, but it's really cool.
Okay. So I have just a quick question, and this is a longer term question too. So to what extent, because of these labor demand challenges, to what extent have businesses adopted automation to fill the labor demand?
Yeah, they absolutely focus on automation pretty clearly all the time. I was at, you spoke about big conferences. I was at the international.
I ordered some celebrational food, guys. Some celebrational food. You guys know it.
Manufacturing technology show in Chicago a couple weeks ago. Actually very well attended, so that was positive. I stayed at a Marriott. I'm sorry about that. But either way, we were at that show, and the core focus was on automation. So it's everything from automation within a machining cell. So if you're cutting a piece of steel, they're really focused on how do I have multiple pallets to make sure that I can do things without people, right? How can I run this machine for 24 hours and then have some guy sitting at home on his cell phone being able to monitor it? Because, I mean, they have that technology today. Every machine monitoring company will give you an app on your phone. So they're focused quite a bit on that piece of it. There's also a lot of automation in terms of lifting and material handling, and even in terms of some of the warehousing pieces of it as well. So how do I get a machine to wrap a box? And how do I get, frankly, any automation to do what even in manufacturing we may call the less intriguing jobs? So that we can have people actually making parts and actually designing and actually checking quality and doing the things that are, what I'll say,
We want to see the dollar coming down.
more fun than packaging a box of parts, right? We have, at this point, automation that can do that.
I just had a quick question. I think Chris and I are kind of going in the same direction on these questions, and I'll ask it to you, but anybody else can jump in. So in a normal economy, if demand softens a lot, first thing businesses do, they often will lay off workers. This seems like an unusual economy where businesses have been scrambling to get workers for so long. If demand softens, do you think they would respond differently this time in terms of those workforces, or do you think they just would do the kind of usual playbook in terms of trying to shrink costs?
Right, yeah. It probably depends on the business a bit. Obviously, everyone's different, and I don't know all of them, but I do think they would approach it differently. I think one of the things that, at least in our space, they may consider doing is looking more closely at who is it that may actually be close to retirement age anyway, that we could help them, and now they maybe feel comfort to be able to leave the workforce. And then how do we get that tribal knowledge out of that individual before they leave, right? The big thing with our workforce is going to be that the people who may necessarily want to leave the workforce at some point in time, they have all of the knowledge on how to do everything.
It's just crazy that these conversations here have a ridiculous amount of influence on the price. Because what they're in essence saying is that it's going to get really, really bad.
Every average good that we see in this country, right? There's some guy sitting in an office that's a tool maker that knows exactly how to manufacture that part. I don't think they would do massive rounds of layoffs, but I do think they would potentially strategically say, hey, frankly, let's rank our A, B, and C players, right? Who adds the most value in our business, and who are we hiring because we were just really desperate for people in this massive demand surge, and they may choose to let go of some of those individuals. But that would always, for them, be non-skilled labor. I can't see any circumstance where they would get rid of skilled labor, and would probably not be a critical mass of their workforce for the most part, at least in the privately held businesses I work with. I can't speak as much for the publicly traded guys.
Thanks, everyone. Thank you so much to all of our first panel and our panelists, Tom, Chidi, Jess, Kara. All the information that you've provided and shared with us today really just helps us better understand the data that we look at here at the Federal Reserve. So now we'll take a quick break. We'll come back in about 10 minutes, and Vice Chair Brainerd will chair our second panel. So
thank you.
Then it will get interesting. We're going to get very close, guys. Okay, so let's dive into the charts right here. In the meantime, let's bring some other guests onto the show real quick. Okay, we're going to do a celebration together. We need 8 more subs, 2 months in the game, 4,000 people in the Discord community. We are building the best community out there. I'm telling you, it's going to get wild. It's just the beginning. This is just a statement right here. This is a statement that we're making, and the reason why we're making this statement is because we are going to build something incredible, but with the 10k subs, it's nothing spectacular, right? It's the reason why it's interesting is mainly because of the fact that, how do you say that? When you have 10k subs, like, people are more interested right now. You can do more collaborations, you can be that guy, you can have more confirmation, you can get more guests onto the show, and so on. So it's just a statement, that's it. It's nothing spectacular, but it's just a statement that we can make here. And, you know, we can improve the quality of our content. That's all it is. So right now, gold is slowly coming up here, okay? We still have created that lower low. We have taken out the liquidity right there, which is very, very interesting. The question is, when the dollar index right now comes down, to tap into this range right here, to fill up that inefficiency right there. Let's say we have some liquidity built up right now here. There is a big chance that we come back down. We tap into either this zone or, you know, mainly even like this one right here. It totally depends, right? We need to see that reaction. That initial reaction is going to be crucial for us to understand exactly where we're at with gold. So if we're with gold here, then hey, that could be a great entry. I'm still looking to long gold in the midterm, okay? Why? Because of this area right here. Because of this daily level, right? Strong daily 70.5, 79 level. Exactly in that range right there. Under that equal low. Oh, so we took out all of these equal lows here, right? On the 62. Correct. Yeah, exactly. So we took out all of the liquidity here, right? All of the liquidity was taken. All these lows were taken out. Super crucial level. All taken out right now. This is fantastic. Now we have the 3-day area of supply of demand here that I really, really like to, or at least I'm super interested in. Why? Because I know that the 62% was very, very respected. The 50% was very well respected. Right now we're coming down to the 70.5. So the only thing that we can potentially look for is a really short-term trade, which will be a short in my opinion, to then look for a long, right? So initially the midterm range and everything that we're seeing here also happening overall is the shift potentially for gold back to the upside again, okay? We have been coming down for a significant amount of time. I think this is a crucial area to look out for. And so it will be very, very strong support at 1630, right about the 6030 area, okay? It's a very, very interesting level we should take consideration. Of course, we have lower levels as well. However, I think this is one of the levels where we see a fused reaction for, and we should be ranging around that zone at that specific time right. So what we're looking for right now is just look for the dollar index aligning with gold. If the dollar index holds here, if gold is there, short gold. If gold is there, short gold, right? If you break this, it's another story, okay? It's about, we have pretty much until this area to make a decision here to potentially make a short opportunity. But that whole has to align here with the dollar index. And let's see what we can find there. The other one is, of course, US oil is coming it's looking very interesting as well. You have that inefficiency here, which I would like to be seeing filled as well, to tap into that range, to look for that continuation there. We already traded that area here with the US oil right there. Came back into that range and sold off from there. To be honest, closed the position a little bit too early, okay? However, we are now further down. We have that imbalance right there. We can come back up as well. We have that range that we can take potentially into consideration. The euro created a lower low, okay? The euro created a lower low, so that's interesting as well. At the same time, we have found out that we can come back up right now. The euro looks strong. Well, the dollar looks very strong, so the euro is, of course, a little bit of a weaker paradigm. That can also be taken into consideration as well. GU we have and AU we have. AU is also very interesting here. Yeah, let's see what we can do with AU and okay. But it all depends. It all comes down right now to the dollar index. Dollar index is going to determine exactly what to expect here. We have this area here for the dollar index. If you come back down in that range, then this is the range that we can do. If you hold here, then that's the moment for us to enter gold and potentially look for an opportunity here where gold is at that particular moment. Okay. Until that moment, it doesn't make sense to long or short gold right now. Because let's say we are here. We can still continue the way up, but we can also come into this zone. this is where we can at least make a decision because of this era of consolidation and that expansion and that balance that we have here, right? So once we're here, then we can say, okay, short gold, whatever. If we break it and we come back down, right, and we test this as resistance right here, that's a different story. So we need to see exactly with the dollar index what will actually happen right there.
Brilliant.
Before we can actually make a decision. In the meantime, I would like to bring on a guest, one of our admins, or yeah, I can say admins from our Discord. Let's see if he's here right now. We can have him on the show as well. Actually, test now. Let me give him a shout out. And then we can resume the final hour of our Fed and heading into the daily close right now. So looking forward to do that. US30, yeah, let's go over the US30 also real quick. So the US30 is very, very interesting right now. Okay. There we go. Okay, the Volks is coming down. That's interesting. The Volks is coming down. I had an alert set there already. Okay, so this was the area I was looking for, potentially. So that's interesting. Thank you for sharing that one. Because right now we're holding kind of at this order block as well. I do think that there is some imbalance underneath. We can potentially come back lower here. That's interesting for sure. So let's have a look at the US30 right there. US30 should come up a little bit. Yep. Wow, look at that. Fantastic reaction so far. We have that order block right here. Okay. We marked this one out. However, what would we like to see right now is the following. We want to see the VIX or the Volks right now coming back down. So let's open the Volks here. Coming back down. To this order block right there. Okay, let's remove this one. Fill up that inefficiency right there. If we come back down to fill up that inefficiency and the US30 is still underneath this area of supply, then that's a great trade. That's a very, very nice trade. Okay. Samuel says all the padding they put before telling facts. It's so true, my man. Absolutely. Absolutely. Okay, let's see if I can give our man a call here. See if he's available. What's up, my bro? You're in the car.
Yeah, I'm driving still. Don't worry, it's okay. We can deliver information. We can do. Don't worry.
You ready? Okay, let's go then. 1 second.
I'm
One
ready.
second. Let's go. Okay. Guys, this is one of our moderators from our Discord channel. He's actually the admin of our channel. Let's get him on board real quick. Let me put this one right for you, my man. Give me 1 second. There we go. Not this one. All good. What's happening, my brother?
But I was actually looking at the news, and it's just a joke how these people.
Internet, brother. Internet.
It's just out of my mind. How you guys feel? How the YouTubers and all the guys that have given us a lot of subscribers feel today?
Bro, oh yeah, internet is working again. Beautiful. You were cut off, brother, but you're back.
I was asking how the community feel in the YouTube, because in the Discord everybody's really happy. We have seen really good advance in people who just came and in knowing nothing, only trend lines and liquidity and trend lines and support.
Yeah.
And now they're talking about fundamentals. They're talking about liquidity. They're talking about supply and demand.
Yeah.
They're actually, I'm really proud of the work that James is doing down there with the people. Honestly, really good.
Fantastic, brother.
And then,
fantastic.
Yeah. And then you on the other hand, like dropping bombs down there.
Right? We're killing it, bro. We're killing it.
100%.
Perfect balance right here. Perfect balance.
Yeah. One of the reasons and I'm grateful that you give me a call at the minute I'm driving, because first of all, we can prove to the community that doesn't matter where we are, we always gonna deliver our work.
Yeah.
But I wanted to talk about, and with this opportunity that you give me, about the patience that we need to have with the market.
Yeah.
Every single time I'm giving this mindset trading psychology session in the Discord, I always said, allow the reading of the market, humble the beast to yourself. Guys, every single trader build their own strategy based on principles that have been told.
Yeah.
Right? But at the end of the day, if you don't allow the market to comply at least with 3 of fundamental of your strategy,
yeah,
you should not go into the market. You should not go into the market, because we are here to, yes, we are here to make money, we are here to learn, but mainly we are here to stay safe. I come from a military background, and every single time, I'm a sniper, by the way.
Mm-hmm.
And every single time we were training, they would say it's better to be safe than taking the shot.
Yeah.
If you realize every single time, are you there, Lorenzo?
I'm listening, my brother. Yeah.
Just because I'm cutting off. I'm in the forest right now.
Okay.
Every single time, if you realize in life we need to wait for everything. We wake up in the morning in order to get food. We need to wait for the food to cook, the breakfast to be made. If you want to get your salary every month, you need to be consistency in your work, and you need to wait for the payment day. If you want to conquer a girl, you need to wait until she say yes. So why we are not gonna wait for the market to come to us? Why we're not gonna wait for the situation in the market is in our favor. We cannot control the maker, the market. Only market makers can control the market.
Yeah.
The only thing that we can do is just follow it. It's like life. You cannot control life. You cannot control the things that happen in your life. The only thing that you can control is how you're gonna react to those things. But if you book with previously, you're ready for those circumstances, you're gonna be way more better to face it, in a better position to face it. So try to control. We're humans. We're never gonna have full control of our emotions. But at least we can put some rules that we can see every day. In my desk, in my computer, every time I sit down, first thing before I'm just open the trading or open the Discord or open everything, I just read my rules, my trading rules, my strategy rules. And the first thing that says, be patient to yourself. Patient in this business, guys, get paid.
Yeah.
We need to treat this. Trading is not just gambling.
So what do you mean with patience? So the patience of building your trades, or expecting too much from yourself when you start out in trading from the beginning?
Yeah, I think first of all that trading is wrong advertised by a lot of people.
Yeah.
And they sell the image that people are gonna come here in 3 months, they're gonna make 100 to 200,000.
Right.
And then people come here with their wrong expectation of Forex.
Yeah.
And without education. So we need to be patient to prepare ourselves first, to educate ourselves. Because otherwise you're gonna get hit. You're gonna get hit, and your psychology is gonna be messed up.
Yeah.
Because you're gonna get fear, you're gonna build insecurities. And most of the cases, people quit.
Yeah.
Because they say this is not for me. And it's not that it's not for you. It's that you didn't set yourself ready to engage one of the most difficult things in the world, that is trading.
Yeah.
We are actually engaging one of the most hostile environments in the world to make money.
Yeah.
So you need to have patience to feel ready, to educate yourself and feel ready for that. And if you don't do that, you're gonna go blind to a fight. Basically.
So what is the European main reason? What is European the main reason why 95% or 97% actually of all the traders in the world fail.
Bad education, and bad education in trading, and bad bad education in mindset psychology to trade.
Yeah.
Trading. Let me stop for a second because I can know. Guys.
Right. In the meantime, brother. 10,000 subs.
Yeah. Don't tell me that. Congratulations, man. We are making it, man. We are making it. I know. I'm pretty sure that mainly all the people that went to the Discord and saw the beautiful community that we have there just came and subscribed.
You are part of the revolution, my man. You were here live at the exact moment. Your energy brought the final subs to our channel. You know, thank you so much, my man.
Thank you. No, thanks to you to give me the opportunity to deliver myself to people here.
Of course.
I wouldn't be here if it wasn't for you. And building people with strong mindsets.
Yeah.
Mainly, that's what I'm doing, because trading and who we are married. And I'm gonna explain you guys why. When you're facing the market with the personality that you have.
Yeah.
And sometimes we want to be swing traders, and we have a really desperate. We are hyperactive. We don't have patience to be a swing trader, so you need to be a scalper.
Mm-hmm.
Sometimes we have too much patience, and we don't have. We are not, our personality doesn't allow us to just be in the market for a few minutes, take your money, and go. We want to wait. We're patient people. We're ready to be swing traders. So you need to find yourself in the market. You need to see yourself in every candle.
Yeah.
Because you cannot force yourself to be something that you cannot be. Not even in trading, in life. You cannot force yourself to be something that that is not your essence. So first of all, you need to find fundamentals, strong fundamentals to trading.
Yeah.
And my advice for every person who is listening to this is that face your fear or fight your fears with knowledge.
Right.
That's the only way. There is no, for us traders, the only way to sit down and open a trade with confidence is knowledge. And another thing that I want to share with you guys, which is really, really important. In trading, we need to find the right space or place to learn, because we all know how toxic sometimes can be trading environments, how much people want to prove to each other, how many people doesn't take this seriously, how many people don't understand the heaviness of what they have in their hands,
and the potential as well.
What the heaviness, that's what I want to say, is what I mean, because you can change your whole life in 2 years.
Yeah.
If you're willing to have the right coaching, if you're willing to follow the rules, if you are ready to become a good soldier of your own strategy, because nobody can build a strategy for you. I can say to you, well, I can see a short here, and then I buy here, and then I take profit here. But you are the one who is gonna build the confidence where you want to trade the short.
Yeah.
When you want to trade it, inside what cycle of the day, the weekly, or the month you are. How much lot you're gonna put inside, how much wide your stop loss. All of the decisions comes to you.
Yeah.
And nobody can come between that and you. Nobody can break that. Never allow the things outside trading come to you to trade.
Mm-hmm.
Because if you stay down in your computer to trade with problems, sitting next to you, trading with you, they will take your focus away. You will trade seeking something that is not in the market, trying to fix something that is not in the market, and that will take you to losses. Do not interpret the price action in the right way. Not see yourself and feeling yourself inside the price action. I was talking to James today in the Discord, and I say to him, there is a beautiful thing that we sometimes don't know. That even when we are teaching the principles of trading,
Yeah.
the main thing that every trader need to be aware every single second, every time they're in the market, analyzing the market, is price action. For example, I'm going to give you a simple example.
I agree.
Mainly the weekly cycle is bullish, bearish, bullish. Monday bullish, the real movement of the weekend. In the rest of the weekend, Friday we have a retracement, and we create the candle.
Yeah.
That's the principle that we show you, that we teach you here. And that's in a bullish week. That's in a bearish week. In the bullish week, it's reverse.
Yeah.
So sometimes the price action on Friday, like today is a really good example. The price action is telling you we don't know where we're gonna finish the Friday. We don't know. We already are in bearish day.
Right. Yeah.
Then the principle said that, well, Friday should be finished bullish, so we can make a fake move in the next Monday and have a continuation. But if the price action is telling you different, hold your horses.
Yeah.
Trust the market. You need to trust what the market is telling you. The price action is a language that you need to exchange with the market every single time.
Yeah.
And that is when you have that knowledge, when you have that connection with the candles, you are going to be confident when you open a trade and say, well, this is the amount of money I am willing to lose.
Yeah.
Right? And if you lose that trade, you're going to be in a place of happiness to sit down and say, okay, what happened here? Because if you put money that you don't want to lose, that you're not willing to lose, you're going to get angry at yourself. You want to think, oh, the market hate me. No, the market didn't hate you. The market doesn't know your name.
Yeah. So can I ask you a question? What is the first thing that's, let's say you are trading for a couple months, you have like a basic understanding, you know how to place trades, how to place orders. You have tried out strategy here and there, but nothing specifically, right? What is the first thing you need to do in order to move forward and to really build a good foundation, in your opinion?
When you already have the knowledge and you sit to trade, or when you are a trader that just come for first time to the trading flow, to the trading environment?
Let's say you have placed a couple trades here and there, you know how trading works, you've done some YouTube videos, you're in it for a month or two. That's it.
Okay, let's gonna say that you already have a strategy built.
Yeah.
And you trade gold. That's what I trade. I trade gold. I don't trade anything else.
Yeah.
So every single time before I sit down in the computer system, I have a notebook.
Yeah.
That have my journal of the last week or the last day. And then in every page, every day, I write down with my hand my strategy again. I write it down. I have my strategy in my head. I only gonna trade shorts or reversals with shorts in supply and demand zones. I sometimes have been waiting 14 days for one trade.
Yeah.
And I get desperate.
Yeah.
And like, but I know I need to control myself.
So what is the reason why you only trade one specific pair? In this case, gold.
Because we have something in our. This is something we need to understand about the human behavior. We have something in our body that's called dopamine.
Yeah.
That is the hormone that makes us feel happy when we smoke, when we're gambling, when we have sex, when we are watching a game and they make a goal. That explosion of happiness also is really attached to the market.
Yeah.
Because when we win a trade, there is an explosion of dopamine inside, and then that creates some kind of addiction to that. It's really highly addictive.
Yeah.
Really, really, really. Dopamine is really highly addictive. And then if you don't know how to control that and have a balance.
Yeah.
Sometimes I win a trade and I say, Joel, don't get excited. Because I know what is going to happen in my body. That I'm going to have something developing in my body that is going to make me addicted to win. But when I lose, you're going to have the completely opposite. You're going to have a lack of dopamine and you're going to get depressed.
Yeah.
So that's why when you try to be ice cold. It's impossible. I'm telling you, it's impossible to be cold at the market. But just the only way to control those moments and the only way to control yourself, read your book.
So
read your strategy.
Once, like, let's say you're just started out as a trader, you don't have all the knowledge yet, but people want to start trading with money. You hear this all the time, right? You hear people saying like, don't start with a demo account, start trading with real money, because real money brings real emotions and a demo account not. What is your answer to that?
My answer to that is that I spent 6 months studying and trading in demo account and journaling everything.
Yeah.
And treat your demo account like it's real money. Because there is a lot of people in the market outside trading that just face this industry.
Yeah.
And then there is a lot of people coming and say, oh yes, just go and put some money, put a small amount, and then but when you put a small amount of money or big amount of money, it doesn't matter. You cannot flip the 100, you cannot flip 20 millions.
No.
Because you don't have the knowledge, to flip that amount of money.
Yeah.
It doesn't matter. So my advice to new traders is that go for FTMO. Start with, make an account in a prop firm, make a demo account first and study. Find a place where you can actually study. I am, not because I am one of the person who are in Limitless, but our community is safe. Nobody's gonna bully. Every single time somebody loses a trade, we sit down in the community and we analyze the trade because we all want to lose. We want to learn from that losing.
Yeah.
And we have a concept that we are gonna lose for you. We're gonna take the hit for you. And that is in every person in the community. When they lose a trade, they post it, guys, let's analyze what happened here.
Yeah.
So try to spend at least 6 months educating yourself, getting ready yourself, getting confident in yourself to just face the market. When you spend 6 months and you have a good win rate, then you can pay for STMO, and then you can just go and try.
Yeah.
With confidence, with knowledge. Or if you want, you can put your real money, doesn't matter, but you already have the tools to face the market.
So what about your journey? What about your journey?
Well, my journey I am one of the products of the misleading of the market. I found trading when I was in Russia during the pandemic, and I started to see it, and then I got this idea that they sold me, hey, come here, people driving Lamborghinis, and I started trading 1 year, and I have a mansion, and I'm living my life in I don't know where, and I was like, hey, if the money is there, and I just need to go on the market and grab it, I'm gonna go.
Yeah.
So when I came to Finland, I came with my car, and I sold my car in 37,000, and I put on my money in an account, real account.
Yeah.
3 weeks later, I was having $600.
Wow.
So the hit was good, but this is one of the experiences that I wanna exchange with the people here in the community. You lose for a reason.
Yeah.
And that reason is not your fault, because when you lose because you don't have the knowledge, it's not your fault. You already have information about yourself to go on ahead. Okay, you say, okay, this is the reason I lost. Now I'm gonna get ready, because I'm not gonna give up. I'm gonna get ready because I know the beautiful future that I can have if I get knowledge. What you lost is already lost. You cannot take that back. It's already gone. What you gonna do with that knowledge? What you gonna do with the experience of losing? Instead of blaming yourself and breaking your glass and blaming everybody, look at to yourself and say, okay, what not even what did I do wrong? What happened here? Why I didn't see? What I didn't see. So when you get to that level of analyzing yourself without judging yourself, you have the 70% of your career win. So I did that. I started to educate myself. and then the signals arrive to my life. This is another crazy thing.
Let's talk about signals.
Oh, yeah. Like this guy is messaging me on Telegram, hey, I'm gonna give you signals, and you're gonna make money. And I was like, okay. At the meantime, I'm learning. Why I'm not gonna follow the signals so I can make some money? Right? Wrong. I guess I make a little bit of money, I lose a lot of money, but I didn't see the progress. And I felt at some point that I was learning, but I didn't depend on me to make money. I needed to wait, sometimes give one signal a day or 3 signals a day. Sometimes they don't give signals. And then I was like, I cannot put my future in somebody's hand. I cannot, because I'm still a slave.
Yeah.
I want to be trading to have freedom, financial freedom, and actually live life and enjoy life and help my family and help my community. But if that depends on other people, I'm not free still. I'm still a slave of somebody else doing the job for me.
Yeah.
So then I took the decision to start to search. And then I found you, Lorenzo. And one of the most important things that happened in my life, I'm 41 years old. And there are 3 things in my life that have been life-changing for me. First of all, the mother that I had, an amazing woman. Second, my daughters. And then you, my brother, honestly. Because you present yourself in my life a guy who just want to teach and want people to have knowledge, because you see the wrong of what the people are doing. And then I make to this quiz thing, and I remember I just win
You
one
won.
FTMO account with you.
Yeah.
And then I saw myself, like, in a week, from having no confidence in myself, don't know what to do, finding this person, and then having an FTMO account of 20,000.
Wow.
And I was like, what? Like what is this? That was the moment when I decided, okay, if I have the opportunity to talk to Lorenzo one day, I want to give back what he have gave to me. And here I am.
And you definitely did, brother. You definitely did. And this is a beautiful beginning of our journey together. And not only with us, with more and more people around us, building such a unique community. And like I don't know, I have not been in other communities myself that much, but what I know is that what we are doing here and what we are experiencing with people here together, it's really
insane.
another level. Like
it's man, it's with the experience that I have gone through, because I know how the world works in trading outside our community, and it's insane. The other day, I'm not gonna mention his name because I don't want to violate the privacy of our the people in our community. But there is a guy in our community that when he arrived 2 months ago, he's also there from the beginning. I'm sorry, that's my camera. He didn't know anything about trading, nothing. And the other day, he established a conversation with a guy who have been trading for 6 years. And then the guy from our community was talking about fundamentals and indices and things like that. And this guy was like, what is that? And the guy said, like, how can you have been trading for 6 years? How can you don't know about indices, the correlation of the indices and VIX? And how can you don't know about fundamentals, news, like interest rates? You don't know nothing about this? And the guy didn't know anything about it. And then you can see now that he have an opinion in the community. He have knowledge.
Right.
And it's beautiful to see that evolution in a person who come. And of course, he have put a lot of hard work.
Yeah.
Right. But that's the only way. That's the only way. Another thing that people don't understand is that when we became successful in this industry, people only see the life that the traders have, but they don't know how many hours they have been sitting in front of a computer, failing and learning from the failing, studying market structure, studying. Hold on a second. Let me face this guy because I don't want to. Um, they don't know how many hours we have been working, how many hours we have been dedicating to learn. That's why I say to all the community, inside the Discord, outside the Discord, in this YouTube channel, educate yourself before engaging in a fight.
Yeah.
You cannot go a fight. You cannot go into a ring with somebody's arms.
Yeah.
You need to go with yours. And the only way to get good at fighting is training and training and training and training and having people who are willing to actually help you with the good heart. Teaching is not only about, okay, you're gonna pay me this, and then teaching is more than that. Teaching is just I really care about the person to learn.
Yeah.
And having the skill to deliver the knowledge. That's what games have.
Like I said, that's exactly the reason why I didn't want to create a course, but I wanted to build a community, right? A platform. I think it's all about a platform because the engagement in a platform is so much more valuable than any course you can make or create and sell, or even if you would give it for free. Like a community is just something else. It's just something else. Like, you know, I know you guys are talking in the morning, you wake up, you call some of the guys in the community, you have a conversation, how's life, how's everything, had a good sleep. Well, what's happening with gold today? You know, like, and boom, the day started. It's just absolutely interesting. So, yeah, we are doing a lot of beautiful things right now. If we can do this in a month, what can we do in a year from now?
I think that in a year from now we're gonna change the name of this community. We're gonna call it Limitless University. That's what we want.
Limitless University.
We are, yeah, we are gonna create. I think. I mean, we cannot talk too much about it, or should I?
Yeah, you can. You can.
Okay.
It's a 10K
We
special.
are. Yeah, we are creating a really special platform and a structure of teaching for people who doesn't know anything about trading, for people who want to go deep inside their own curiosity about the market.
Yeah.
We are creating special events inside the Discord. We are creating giving away in the Discord. We really want to help people to understand the market because we understand how difficult is the life in the world right now.
Mm-hmm.
And from here to 5 years or 1 year ahead, 2 years ahead, the only blessing that we're gonna have is people learning. We even have right now a team that wake up at 2 o'clock in the morning. That is in America. All the people who live in America, they wake up and you wake up at any time, 24/7, and you see people exchanging ideas.
Yeah.
And you were saying something that is really true. It's not the same having a course that you pay and you learn in your own in your house, that you have in a community that you can exchange idea. Because what happened with a lot of people that are coaching outside is that they deliver to you the information that they want you to have to be dependent on them.
Yeah.
And that's what we don't want, because we have the freedom of, we are going to be coaching people, but then there's going to be people in the community that you have the freedom to speak to everybody, to talk to everybody, to exchange your curiosities and your doubts and your winnings and your concepts with everybody.
Yeah.
We have no limits. We have no limit. We don't hide anything. We want to spread the knowledge. That's what we really want.
Yeah. And especially the fact that we are gonna, you know, now we have our legend James, one of our OGs right now of the community. But we are gonna attract more and more, or actually not only attract, but also educate and assign more and more coaches towards the community in also different categories, right? Because we have the macro fundamentals, technical analysis, but we also have, of course, psychology, mindset, all of these other things.
We have that,
right?
But one of the problems that we're facing in the Discord right now is that we don't have enough coaches to teach everybody. That's why we haven't started yet with what we are building.
Yeah.
Because there is too many people, and people really want to learn. People stay sometimes 6, 7 hours with us in the Discord.
Yeah.
Learning. And right now with the coaching that the coaches that we have, it would be like maybe like 60 or 70 people per person.
Yeah.
So we want to bring coaches, and we want to bring more people to actually developing better, because it's not the same that you can be learning in a community, but at some point you need to have a private conversation with somebody about trading. You need to have, at some point you need to have one-on-one with a person, and then you go to your community and express and talk and debate.
One-on-one or private communities.
One-on-one.
Yeah.
It can be one-on-one, private community. You can gather friends. Say, guys, let's gonna book this event. And because you sometimes there is people who are introverts and they don't want to, they fear to speak loud.
Yeah.
And basically what we really want in the community is you be loud to yourself. So sometimes you can choose your friends that you have meet into the community and say, okay, let's gonna create this event between us. And then when we finish here, we're gonna spread that with the community.
Yeah.
And no limits. We have no limits.
That's it.
Yeah,
amazing, brother. I'm super happy, super grateful that this could only happen in like 2 months from here. Yeah, like I mean, it's only gonna get better and better, and the structure is gonna come, and we're integrating everything right now. So yeah. Any other last advice for the people in the chat right now?
I think that I already said it.
Yeah.
Patient to educate yourself. Allow the market to come to you, and journal your trading life. Educate yourself, man. Educate yourself. There is no other way. The only way to fight the fear of trading or losing is knowledge. Go for it go to knowledge without no fear. So you can beat up your fear. That's what I can say.
Yeah.
Honestly.
Well, brother, thank you so much, my man. After the stream, I will give you a call. You're ready. It's absolutely fantastic.
I mean, I'm gonna be driving. You can call me. I still have like 1 hour and a half driving, but you can call me at any time. I'm ready to deliver at any time.
Okay.
I'm not gonna rest.
Okay. That's the spirit, man. Okay, man. Much love, brother. Thank you for being here.
Love you, man.
See you
love
soon.
Peeps.
Ciao, ciao.
Ciao.
Bye-bye. Yes, that was our man Daylight here in the building. Absolutely insane. Let's go back to the charts here. Let's look for the closure here. What are they doing here?
Is responsible for advanced.
Okay, let's go back to that as well. Let's go over the charts real quick. And guys, thank you so much. First of all, for the support here. I truly believe everything that happened in the last 2 months. Also, big shout out to our team, to our man, IBAM International, James. What a legend, what a OG, absolutely insane. We have our man Joel, the most warm, heartwarming guy that is there. It's absolutely incredible also what he's doing for the community. And then we have all these other people in the community that I can thank as well. I'm super grateful for everything. This is just the beginning. 2 months ago, we decided to go stream, and this is eventually what unfolded. So, you know, if you just work hard enough, consistently, you put in the work, then a lot of beautiful things can unfold here. So thank you guys for the 10K subs here. I have to applaud you guys. I'm extremely grateful for each and every one of you. And I think this is a beautiful journey right here. So thank you, man. Appreciate it so much. So let's go over the charts real quick. We're seeing the dollar index finally coming down here. We're seeing gold actually there. So I do like what I see here for gold while the dollar index is coming down. Let's see if it actually aligns here. This is what we discussed earlier already. Let's see if this actually is aligning with exactly what we're looking for right now. I think this is definitely gonna be fantastic. A fantastic closure of today as well. Let's go over the other topics real quick. Anorex says, many congratulations for an amazing class ever. We learn a lot. Tons of best wishes for being 10,000 subscribers. Thank you. Loinvoy, thank you so much. Tanisha, also much love to you. Mozamil, thank you so much. Amazing. Creative Group says news. What's happening right here, my man? Yeah, yeah, we have something coming. The Feds are still speaking here. Let's go over the charts real quick. So the US30 is right here right now. But the main thing for the US30 is what we're looking for, the VIX, right? The VIX is coming here, tapping into the zone right now. We have actually this order block where we're actually retracing from right here. We're very patient. So it was this one, beautiful. Now we know that. So let's see what we're doing here for the US30. Very interesting. We're actually tapping into that zone, coming back down into that area right here. But the main thing I'm looking at right now still is gold. Gold is definitely the trade that I would like to look out for right now. I think gold is the trade setups that I personally I'm very, very interested in right here. Okay.
AARP's.
Samuel, thank you, my man. I appreciate you, brother.
601 East Street, Washington, D.C. Let alone sending them out to South Dakota or North Dakota. So I mention this because it is the environment in which we're operating. And it's the environment that, to your question, I think produced, we were a good part of the Great Resignation. More people in the older age cohort retired early into the pandemic. There were a number of reasons for that. Some was that jobs disappeared in industry, especially where older women were working. And so that was part of it. Second were direct health concerns and health risks. And I don't think that would surprise anyone. Third, caregiving needs. Before the pandemic, there were 48 million people in the United States who were family caregivers. And almost overnight, that number grew. And not just for the person you might have been caring for before the pandemic, but all of a sudden, especially older Americans, were taking care of their kids and their grandkids. They were teaching as part of the remote school operation. And so all of that, I think, accelerated what we've called the great early retirement boom. The fact of the matter is, and I hesitate to say this because I know you read data more carefully than I do, we did not see a dramatic increase in claims for Social Security. A little bit of an increase, not as dramatic as you would have thought given the numbers. So what we took from that was this notion that that this may not be permanent, that it may not be a permanent step back, but it's going to be very important, I think, to watch. There is an increase of older people going back to work. Data shows it is not to the pre-pandemic level, but it's moving in that direction. And there are several reasons for that. First is, like everyone, people have been cooped up in their homes. They're anxious to get back out. By the way, we're seeing an uptick in volunteers as well. So not just going back to work, but trying to get back into the volunteer workforce. An awful lot of people looking to food banks and opportunities to serve our constituency. So we're seeing kind of more interest in going back to work. And of course, another factor in that is if you're on a fixed income or you're not working at all, you need to go back. And there have been a huge number of stories about how we older boomers are.
The volatility is definitely higher today.
Sitting around with all of these resources, trying to decide on our favorite alma mater and our favorite child to give them to. But the fact of the matter is that isn't the dominant group. About half of people over the age of 65 are living on Social Security. The average benefit's about $1,700 a month, or some of their savings. So about half of people are in a situation where, particularly in the current economy, they have to think about work. And so thinking about work, either going back full-time or more likely part-time. We all think the gig economy was invented for millennials, but the truth of it is, even before the pandemic, you saw an awful lot of older so-called retirees as Uber drivers. The fastest growing cohort of Airbnb hosts were women over the age of 55, and we'll probably see that as the pandemic recedes. Airbnb is starting to see more older people putting homes up, and I think that will continue. And I guess the question is, the great imponderable is
also the Australian dollar, US dollar is still one thing that I currently look at. I think it aligns there. I think it aligns there with this order block. I do like that. I do like what I see there for the Australian dollar and the US dollar in combination with the DXY. No time to look for long trade setups today, only scalping here. So that's it. That's pretty much the last trade I'm looking at, the Australian dollar or gold, based on these metrics right there.
Will businesses turn to older workers? We know age discrimination is real. We do surveys all the time. We do so many surveys that I'm convinced we shouldn't do any more because they show us that most people over the age of 50 believe there's age discrimination because there is age discrimination. And kind of looking for opportunities. We're meeting later this week, ARP, with the second. Popular culture is always far ahead of us. You may have seen this. It circulated rather widely. King Charles, 73-year-old man, finally gets job. It was very popular in my network. I don't know about you.
But still, like, I think you are, to be honest, my personal belief is that you should not be laughing. And I'm like just saying, like, you should feel obligated not to laugh here. Because you know, like, I don't know if they're realizing it, but the United States is in very, 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 very bad shape right now. Everything that's happening in terms of, you know, the people that are losing, or not the unemployment rate, but the inflation is going up tremendously. People just cannot pay petrol, gas, food, basic living circumstances, energy are almost impossible for them to hold up towards. So, like, I feel that you should be obligated as somebody that, you know, is connected to the Federal Reserve in a meeting like this to not laugh, to not make silly jokes, I know, but just to really understand what people are currently going through and how bad it eventually will be in a matter of, you know, weeks from now. So I do think that this laughing gives me just cringe. It's just cringe, guys.
But we really do have to continue to slug away at age discrimination. Ironically, the pandemic made organizations like ours and others work towards digital literacy among older Americans. It became necessary if you wanted to get a COVID shot. And now if you've got those kinds of skills, I think it's easier to move back into the labor force. And then finally, when I think about how people think about retirement, I always remember a New Yorker cartoon, I may have mentioned it in a previous session, which is a husband and wife standing there looking at each other, and one says to the other, you know, we'll just squeak by if we take a late retirement and an early death.
So my second question is, last time you were here, we were talking about, you know, the difficulty of living, you know, on savings with low interest rates in a low inflation environment. Here we are. A lot of the folks you're with are on fixed incomes, but you know, you have a high inflation environment, but also a higher interest rate environment. So just interested in hearing how are seniors dealing with this new environment of high inflation, higher interest rates.
Well, it won't surprise you. Certainly, older Americans, people on fixed incomes, are very sensitive right now to costs. In terms of, as we talk to our members, food prices are probably the highest. Gas prices are still high, even though our folks probably aren't driving as much as others. And then the third area is medical costs. And we've just worked for a number of years on prescription drug costs because it's what our members told us was terribly important to them. And we used a graphic of if milk and bread had risen as much as prescription drug prices, a loaf of bread would be $13. And it was very effective. I'm glad we got the bill through before anybody's doing graphics on what things cost now. But it really cemented for us this notion that particularly if you're older, healthcare costs, medical costs are a far more dominant factor in what you're focused on. And I would say one of the things I've taken from this period as we've talked to our members is the ongoing concern, which will go well beyond this period we're in now. How are people going to pay for long-term care? How are people, you know, with the nursing home situation, everybody focused on care in the home. And as if that's so much easier and so much cheaper. And I think we all know it's not. And that is, I think, the abiding question for particularly older Americans and their families as we move ahead.
All right, so we're going to forego a question this time around to get Wendy in, and then we'll come back if we have an extra minute.
Hardly says Lorenzo, if the United States is in a bad state, why is the dollar going up? I do not quite understand. That's a very good question, my friend. It's pretty much when the US exports products or services, it just creates demand of dollars, right? Because the customers have to pay for goods and services in dollars. So therefore they have to convert the local currency into dollars, selling their own currency, to buy dollars, to make the payment. And also when there is a lot of inflation and the price of, of food goes up, it has also a massive effect of the dollar. There is more demand than supply. So that means that there is a supply shock for the US dollar right now. And people have to sell their local currencies towards the dollar, and that causes, of course, a stronger dollar index, and it puts pressure of the supply on the dollar, so it increases the value. And then also the second layer is more of a psychological case, right? Because of that, you get that snowball effect. So people starting to buy dollars or putting their assets in dollars because they understand that whenever there is a supply shock, the dollar gets stronger. So then people purposefully buy the dollar, right, to benefit from that. And then you have other like technical factors as well, the GDP data, the interest rate hike, and so on and so on. Many, many different layers combining here. Inflation, you name it.
At the end, I want to now just move to Wendy Valise. Wendy is born.
And so language was key to that. A lot of we were unprepared in that way, as much as we would have wished that were different. But I think it was a good lesson, and I think going forward, those are lessons that we'll use. Another factor is, and I'm going to expand a little bit about what people have been saying, we're seeing low income and middle income families struggling.
Yes, of course.
So when we talk about it, I think that's really important.
Why? Because they have to pay the debt towards the rich.
These are working families, families with young children, multi-generational families, seniors, and we're seeing that struggle. And one of the struggles is when we think about ultimately in the FHCC, and I think
All right, I think we're back here.
Earn more.
The YouTube is not doing well today. YouTube is not doing well.
Really working towards stronger partnerships that serves this specific community, because it's a little bit different. And so I think that's one of the other areas that we'd like to see. And then of course, healthcare services. One of the other lessons that we learned during the pandemic was that the children of the families came to us and said, we have a serious problem with mental health. And that was something that was new to us, new I think across the country. And so really working strongly with our school districts and with other community partners to bring in the right resources for our children. And I think that was now an area that I think looking forward, that's an important area for us that we will continue to partner with.
Let me just ask, the ability of your organization to provide housing security for the families in your community, I'm sure there were challenges before the pandemic. How have those challenges changed as a result of the pandemic?
If they're going to laugh right now or in the next 5 minutes, I'm going to get really pissed off here.
Are there new challenges, or do you have to face these challenges differently as a result of the pandemic?
Well, they certainly have changed. One, I am deeply humbled that the Federal Reserve Board of Governors wants to hear our voice. And as Nancy alluded to, you were one of the first, and we now have a seat at the many tables that we didn't have before. And so to me, there's been an increase in two-way communication with lots of new partners. We had strong community partnerships. There's many of us have been doing this work for many, many years. And I'm a volunteer, but many of us have been advocating and sharing our voice. But we had new partners come to the table and new invitations. And I think that's one of the, what I would call silver linings of the pandemic. The challenge will be to maintain that. There was tremendous generosity during the pandemic. And I think echoing some of the comments earlier is how do we maintain those relationships? How do we maintain those direct channels with generous donors, with key partners? How do we develop new relationships that will serve our community? Because I think one of the lessons that we learn is when we provide the right resources and the right tools, that people will, we give them a hand and they will lift themselves up. And so I think that that is one of the things that came out of the pandemic. So communication, the two-way communication, partnerships, and I mentioned that. The other real challenge, and I mentioned this, is we took a pause on land acquisition. We were so focused on responding that we took a pause. We have the same challenges in a nonprofit world in retaining and recruiting.
Okay.
And
so, guys, I'm gonna cut down the stream, guys. It was almost 8 hours today. 8 hours special today. Thank you guys so much for all the support. Absolutely fantastic. We nailed it today. 10,000 subs. Long stream. So what I'm looking for still, if it happens right now, I don't think so, but let's see. If you come back down here to tap into that zone, then the only thing that I would look for is this. But otherwise, the market is almost closing here. Keep that in mind. Okay. I see already that we have some really nice setups we're laying around right now. What I would have loved to see was actually coming down lower, so we can start thinking about gold on a Monday. But potentially what we can see is that Monday gold continue up, come down, and then continue the way up. I do think right now that gold is the actual trade that I'm looking for. Shift in momentum for gold on the higher time frame. Finally coming down, potentially coming to an end here. This is what I'm looking for, okay? Strong, bearish, or bullish diversions on the RSI. I'll take that in consideration right here as well. Only use this RSI for the higher time frames. When I see something like this happening, with the 70.5 and the 79%, with that beautiful order block on the 3 daily, with all the liquidity taken, all of the lows taken out as well, I think at around about 1630, we can slowly start looking for a potential, retracement right there. I do think so. We can take this as well. Let's see. The market is very interesting right now. In 30 minutes, we're gonna close. Harley says James is still available in Discord if you guys want some aftermath, not aftermarket knowledge. I completely agree. Absolutely fantastic. If you guys want to join there, amazing, really. So yeah, I'm gonna create, of course, the Sunday. I will create the market weekly breakdown, as I always created, right? A weekly breakdown of all the pairs we're looking for every single weekend, making sure that it's ready. I've never missed a single week when I shared this with any one of you guys, so I'm gonna do this one more time too. Of course, on a Sunday, all the charts we're looking for, the setups we're looking for, from a higher time frame standpoint, market structure, all the right setups explained as well. We're gonna drop some educational content as well. Everything will fall together, will align together. We're gonna drop more educational content right now. We're really gonna speed up the process as well, so it's not only streams but also educational stuff. Very important. And then of course most of the things happening right here in the Discord channel as well. So if you want to join, highly appreciate it. Up to you. Otherwise, just join the streams and we're gonna have an amazing time together. So guys, thank you all so much. Anurag, hardly, my man. Thank you so much, my man. He says we hit the 10K. Yes, we did. Larisha, thank you. Loin Void, thank you for today. Sipa Manla, what's up? Thank you, my brother. Tony Gold, thank you for watching already for a couple hours here. Nobody. Danisha, Samuel, Thank you, guys. Really, really have a wonderful weekend. Enjoy your weekend. Take some time off sometimes. Chill. Spend some time with the fam or with your friends, whatever it is. Relax. Tomorrow is the time to relax. Sunday is the time to do some studying, do some analytics, do some analysis in there, and then move forward from there, okay? Tomorrow relaxing, Sunday back to work. Let's get it. Thank you, Jamie, Kai, Loinvoort. Appreciate all of you. 8 hours almost today. Fantastic. Love all of you guys. See you next week. Bye-bye.